things if you want. The other question I have right now, specifically for private equity, is private equity has not been, and private equity, private credit, have not, well, private credit's a little different, but private equity has not been returning money to people, in part because there's a real question about the valuations in the private market versus the public market. Nobody wants to sell to take down the marks. We've discussed all of this, and so right now, this will be a boon to the private equity firms. And who's going to be buying this stuff? I mean, on the exit side.
Well, you're worried about bag holders, but as an asset class, we always want to, it's just almost a cliche, we want to democratize the markets for everyone. And all asset classes go through, bubble and they come in and out of favor. And long term, it's probably something that should be available to
But I do
everyone.
appreciate your point of, is this a bell at the top?
Right.
Well, at least temporarily. I mean, maybe,
by the way,
hopefully
there's
not
more
forever, but.
There's more than $12 trillion in this 401k money, which is why they want to ask.
I mean, I can remember times when like Apple went into the Dow. It's like, oh, now you're putting it into the Dow, and then
And
it
yet-
just tripled from
right.
there.
All right.
I don't, and it could be a brief, a little bit of a shakeout, and I don't know. If really rich people love private markets and have done well, it's a good idea to try to open it up to everyone, but you made the time.
There are questions about the fees too. But yes, if they've outperformed over the
Coming up, more of today's top corporate stories, including the end of 2 investigations into Polymarket, which at the time were like, it looked totally political because Biden was down, so then they started investigating the poor guy who we love. He's like 26 or something. And they took his phone. Oh, we have video. And as we head to break, I'll look at yesterday's S&P 500 winners and losers. You have what?
video of what?
Welcome back to Squawk Box. 5 things to know ahead of today's opening bell. A source telling CNBC 2 federal investigations into online prediction betting site Polymarket have been closed with no charges filed against the company. The Justice Department and CFTC had been investigating whether Polymarket was accepting bets from people in the United States. Meanwhile, Republicans narrowly voting to advance a package of spending cuts proposed by President Trump. The procedural vote on that roughly $9 billion package passed the Senate 51-50, with Vice President J.D. Vance breaking that tie. The measure seeks to claw back previously approved funding for foreign aid and the Corporation for Public Broadcasting, which funds PBS and NPR. And Elon Musk's company, SpaceX, planning an insider share sale that would value the company at roughly $400 billion. That's according to a Bloomberg report. And Tesla's top sales executive in North America has left the company. The Wall Street Journal reporting that Troy Jones, the company's vice president of sales, services, and delivery in the region, departing the company. This after 15 years. He's the latest in a string of top executives to leave the company since April. And finally, a robot taking center stage in last night's Major League Baseball All-Star Game. The ABS automated ball strike system coming into play in the first inning. Catcher Cal Raleigh used it to challenge a call. He was right, and it led to a strikeout. CNBC's Alex Sherman reported yesterday MLB Commissioner Rob Manfred supporting that new technology, and it may be ready for every game next year.
I'm all in favor of it. Instant replay, right?
Instant replay, but then what was the thing that happened at Wimbledon this year where this AI system totally missed the call, and then
really?
They didn't have a replay, and who was it who lost the point and lost the whole match because of it? It was crazy.
Oh.
Umpires are, I mean, tough job. But I've had, now that sometimes I have something, $5 or $10 on the line. There are times in an inning where one call, if it's just egregious and totally obvious that it was bad, it's like that totally changed. It hurts a rally or it stops. It can make a difference. But then there's times when you need the umpire instead of a machine. I don't know why. Why do you need the umpire? I'm trying to figure that out exactly. Because if the machine absolutely knows.
The machine's wrong.
Oh, the machine's wrong.
Right.
Well, that's bad. I don't know how I feel about that. What's coming up? We got Wolk.
We do. Johnson & Johnson's CFO, Joseph Wolk, is going to be joining us on the company's earnings. They were out just a few minutes ago. That stock is right now up by 1.3%. Stay tuned. You're watching Squawk Box, and this is CNBC.
judiciously.
All right, welcome back, everybody. Johnson & Johnson shares are higher this morning after the company reported earnings and revenue that beat estimates, and it raised guidance for the full year. That stock up by close to 1% right now. Joining us to talk about it is Joe Wolk. He is Johnson & Johnson's Executive Vice President and Chief Financial Officer. And Joe, it's great to see you this morning.
Great to be here, Becky. Thanks for having me and your interest in Johnson & Johnson. It's a pleasure to be here on such a good earnings day for really our colleagues across the globe who wake up every morning trying to elevate the standard of care. You know, we came into 2025, and I think we were looking at a lot of macro uncertainty. At Johnson & Johnson, our second largest product, which was $11 billion in revenue, was losing patent exclusivity in the U.S. To give you an idea, Stelara,
yeah.
Right? It's a treatment for psoriasis and inflammatory bowel disease. That product declined $1.2 billion from second quarter last year to second quarter this year. Yet the pharmaceutical portfolio, the rest of it, had 15.5% growth to record their highest ever revenue in the history of the company, over $15 billion for the first time. We saw improving results for MedTech from first quarter. I'm encouraged for really the balance of the year as we raised our guidance substantially. But what's happened clinically in our pipeline really gives me a lot of enthusiasm and bullishness for what's going to happen for the balance of this decade. 25 is shaped up to be better than what we thought. 26 will be better than 25, 27 will be better than 26.
And that's not because of the macro, that's in spite of what's happening in the macro. You just have some products that are, I was just looking at it, the innovative medicine, you had 13 brands that were up double digits.
13 brands that were up double digits. So oncology, if you look at multiple myeloma, 80% of patients who have multiple myeloma are having use of a Johnson & Johnson product. We just had some great data on Carvykti, which is a T-cell CAR T therapy. The overall median survival is now 60.7 months, better than 5 years.
Right? I was looking through that.
Yeah, it's one treatment. So you can't say cure in the label, but the experts are saying functional cure. It's really amazing stuff, curing cancer.
Sooner.
Yeah. And then what's in the pipeline is amazing.
What is in the pipeline? What are you thinking is going to be?
I mean, I can go across just about every franchise in medtech and pharmaceutical. Let me start with Tremfya. It's on the market today for psoriasis. It's about a $4 billion product already. That's going to be kind of the successor to Stelara. We just received indications for ulcerative colitis and Crohn's disease, inflammatory bowel disease. To give you an idea, Stelara, 70% of the prescriptions were for IBD. We see this being a $10 billion product, which analysts are underestimating at this point. There's a great product for bladder cancer, and it's really quintessential as to how unique Johnson & Johnson is. So we relied on our surgical specialist in the MedTech unit to combine our expertise for drug delivery systems for bladder cancer. The current treatments are debilitating. 600,000 people a year are diagnosed with bladder cancer that are new patients, 400,000 relapse. So 1 million patients a year. It's usually resulting in patients losing their bladder. Our product is a intravesical drug delivery system, sits in the bladder. It's off the shelf, doesn't require refrigeration. It's about a 3-minute insertion, about 3 minutes to take it out. No anesthesia. Its complete response rate is 20 points higher than the next competitor, up over 80%. So these are significant life-saving, life-altering drugs that improve the standard of care for patients as well as what physicians have to administer.
All right, let's talk about the macro, things you have a little less control over.
Sure.
A lot of questions coming, and let's start with the tariffs that the president is talking about of 200% on pharmaceuticals that are imported to the United States. How does that impact you? There may be a year and a half that he gives grace period to try and catch up with this, but where would Johnson & Johnson be hit today if those were put in place? Yeah,
so I think it's important. You know, we'll stand by the statements that I've said on this show, that Joaquin, our CEO, has said, that we think good tax policy actually translates into bringing manufacturing jobs back to the U.S. And we saw evidence of that with the 2017 TCJA. If you look at biopharma manufacturing since 2016, so right before the passage of the last tax act, that has increased 22.1%. All other industries in terms of manufacturing has only increased 3.8%. There's more biopharm facilities, about 1,100 in 2017. Today there's 1,500. We were so pleased to announce, and it was really based on the tax policy that we trust would go through, to commit to $55 billion of investment here in the U.S. To give you an idea, that will enable Johnson & Johnson to supply any of the medicines it manufactures to U.S. citizens out of U.S. facilities.
By when? 55 billion?
By the end of that investment period, certainly by the end of the decade. So that was over the next 4 years. So, listen, I think to be fair, a year and a half is very short based on how long it takes to put up a biopharma manufacturing facility. But we're pleased with the engagement with the administration. They're listening. It's not just here's a tariff tomorrow that's going to be 200%. There's an understanding that of our business that it takes some time to build these facilities. We certainly want high quality product that's reliable that patients are going to have to use.
Joe, I wouldn't like to try to run a pharmaceutical company. You can't jump on every trend.
Can't.
Obviously, and you have a 3.4% yield, but no one's made any money recently for 3 years. While you get into weight loss or something, and I think I have a J&J Lilly 3-year chart. I didn't even look at it. I just asked to see what it looks like and what can happen if you happen to, what is that, like a striking it rich when something like that happens, 132%. But then I also asked for Pfizer. Then you put all your eggs in one basket on some vaccine, and then you turn into Pfizer, which probably makes J&J look quite a bit better than Pfizer. So that just shows you that it really does matter what you decide to focus, and no one can know. You can't.
Yeah, I think we're very much on the right track, Joe. So if you think about some of the things that maybe got in our way, we had the Stelara loss of exclusivity.
Right.
It's rare that investors are going to jump in front of an $11 billion product that's going to have generic competition. That's becoming a rear view mirror event at this point in time. Like for our portfolio to grow, we are, literally, probably figuratively curing cancer in many cases, getting into new areas. On our med tech business, a lot of analysts have us penciled in for 3rd or 4th place in electrophysiology, where we've been the market leaders. We had flat growth in the first quarter, 10% this quarter. We've got a path and a plan to get back and recapture not 3rd or 4th place, but 1st or a very strong 2nd place.
Keytruda is not you, but that's going to be tough.
That will be tough. Yeah, but that's the beauty, I think, of Johnson & Johnson. We have 26, soon to be 27 platforms or products that generate more than $1 billion in revenue, and many of them are multi-billion-dollar revenues.
The one thing I will say is 3 years ago, you still included the consumer products group.
That is correct.
Kenvue was spun off in 2023, and it has not gone well. We just heard news this week about the CEO stepping down, a new interim CEO that's taking place, that's coming in and taking over with this. Does it make you convinced that spinning off was the right thing, the spin-off was the right thing to do?
Yeah, listen, I think, I can't speculate. It'd be an uninformed opinion. We sold our retained stake last summer, so we really haven't been involved in that business to any degree. There's great brands there, though. If you think Aveena, Neutrogena, Listerine, Tylenol, Motrin, I think that business will certainly find its way. It's tough to start up a company, and that's essentially what they've done. But that was definitely the right decision for us. If you look at the growth and the focus that we now have in pharmaceuticals and med tech, I think it's very difficult to argue with the results that we have. And those businesses separated. 10 years ago, 9 out of 10 dentists or 9 out of 10 dermatologists mattered in advertising. Now it's about Jennifer Aniston or Kim Kardashian,
whatever
they use.
influencer.
And so it's a very different business model with different capital intensity.
The weak dollar has been a big boon for you all too. How much of the raised guidance that you're giving is because the dollar's weaker? Yeah, so if you look at the top line guidance, I would say we're up about $2 billion for the full year. I'd put half of that in the category of the weaker dollar, the currency dynamics, and then half due to the operational performance and the outlook that we see ahead. And the operational performance, with some guidance on what you can give in terms of the margins that you're expecting margin improvement? So we're reaffirming our commitment from January. That's a 300 basis point improvement on operating margin. That includes $200 million of tariff costs in this year. Okay. So I know there's some concern about maybe there's more tariffs to come. Just based on how the accounting works, I don't see an impact in 2025 because it gets hung up on the balance sheet and inventory. Right. Joe, thank you for coming in and joining us. It's really good to see you. Thank you.
And Bank of America is out with earnings, and Leslie Picker gratefully joins us now with the numbers.
It's good to see you too, Joe. Those shares down a little bit. Bank of America beating on the top line, but beating on the bottom line, missing on the top line in Q2. The firm also slightly missed estimates on net interest income in Q2. You can see shares up about 0.5%. They were down when those numbers first crossed. But the B of A reaffirming full year guidance for the loan making profitability metric. B of A has said it expects NII to be up 6 to 7% in 2025. Loan growth across commercial, middle market, and wealth was up about 7% on average year over year, and deposits were up about 5% higher for the 8th consecutive quarter. Net charge-offs representing debt that won't be recovered were stable at $1.5 billion, although the NCO ratio of 0.55% was up slightly from Q1. That represents the percentage of loans unlikely to be repaid. Brian Moynihan saying in the release, though, quote, consumers remained resilient with healthy spending and asset quality, and commercial borrower utilization rates rose. Investment banking fees declined about 9% to $1.4 billion, although that was still above analyst expectations for the quarter. Sales and trading, a bright spot for B of A and really the whole industry so far, with record 2Q revenue of $5.4 billion, up 15% from last year. Fixed income currencies and commodities were up 19%, the highest in a decade. Equities were up 10%. We'll be sitting down with B of A Chairman and CEO Brian Moynihan later today in the exchange at 1:30 p.m. Eastern Time, guys.
That sounds good. Leslie, and you're on call, right?
Oh, I'll be here. Yeah, not going anywhere.
All right, we're gonna need you. Got some other things coming up. Goldman, I think.
Yes.
All right. Thank you. You is that worm in your head?
Yes. Hold on loosely. I'm still singing it.
Can I tell you? Do you want to feel old?
No.
I already feel old.
I thought it would
be older for.
Guess how old the song?
My guess would be that is probably 1983.
44 years old.
What year was it?
1981.
It was 81.
And they weren't necessarily a one-hit wonder. 38 Special. You know the other song?
Yeah. Hold on a second. I do.
Caught Up in You.
Okay. So caught up in you, little girl.
Wow.
I recognize the word.
Okay, folks. Coming up, we're going to go inside the business of going inside businesses. The hosts of the wildly popular podcast Acquired are going to join us. You don't want to miss this. Squawk Box coming right back after this.
Shares of Chinese toy maker Pop Mart International are falling despite guidance for an increase of at least 350% in profit and 200% jump in revenue for the first half of the year. That stock is off by about 4% right now. An analyst from Morningstar told CNBC that investors have a conservative view of sales growth and may be taking profits ahead of a perceived slowdown in the second half of the year. Pop Mart is the company behind the latest global toy craze called Labubu. The toothy, pointy-eared, monster-like characters, which is kind of like bunny rabbits.
I don't get this. Everybody loves these things. I have a daughter who's all about, everyone I know is all about this. And some of them are very expensive.
That's what I hear. That's what I'm told. They're going on eBay for like $100, way more than they sell.
Oh no, I think there's ones that go for thousands of dollars. There's a whole crazy thing going on with this.
Look, we've seen this.
Wild.
We've seen this game before, like
with
any of the Cabbage Patch Kids. This is the first thing that kind of came to mind.
Rats.
Yeah. Goes through cycles, but the retail price of the toys is around $15 in some markets. Resellers are fetching hundreds and, as Andrew mentioned, in some cases thousands of dollars for the rarer versions. Hong Kong listed shares are up about 180% year to date.
Okay, when we come back, the co-hosts of the Acquired podcast joining us fresh off their biggest ever live show last night at Radio City Music Hall. We'll be back with them and more after this.
DC Plus.
It is 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. We got a lot going on this morning. Let's tell you the top stories. More inflation data and earnings reports. They are on their way. Both Goldman Sachs and Morgan Stanley expected to report results in the next hour. We'll, of course, bring you that live as it comes. And then 8:30 Eastern Time, we're going to get the government's producer price index. That's for June. Meanwhile, the European Union's top trade officials heading to Washington today for trade talks with the Commerce Secretary Howard Lutnick, also U.S. Trade Representative Jameson Greer. President Trump recently announcing the EU will be hit with a 30% tariff. You can mark your calendar for August 1st, so that's the deadline. Meanwhile, the Trump administration also working on a proposal to make private market investments more available to Americans through their retirement plans. Actually, our next guest, I may want to ask about that. I don't know if you guys have views on it. That's according to reports which say an executive order could be signed soon, but details still being worked out on all of it. And I just mentioned our next guest. Acquired is the hit podcast that breaks down the stories and strategies behind the world's biggest companies, from Apple to Berkshire Hathaway. It now reaches more than 1 million listeners per episode, and last night hosted its largest live recording ever at Radio City Music Hall. Joining us right now are the co-hosts of that podcast, Ben Gilbert and David Rosenthal, and it's great to see you. And I should say I made a very brief little cameo last night, which was kind of fun.
Been about 7 hours since
you guys were up to what, 12:30 last night?
We're around 3 hours sleep.
Yeah.
And you had Jamie Dimon, and you had Barry Diller, and you had Meredith Levien from New York Times, and you had Howard Schultz making a surprise entrance to this whole.
We had Starbucks this morning.
Well, you might need that.
Yeah.
So tell us about the podcast business, because as Becky was mentioning just off camera, you guys have made this work in a remarkable way. You do these very deep dives. This started, 10 years ago now? I mean, how long?
10 years.
10 years. What was the genesis of it in the beginning?
Well, the genesis of it was Ben and I were friends, we were coworkers, and we wanted an excuse to hang out more. And for 3 years, this was a hobby. We didn't even have a legal entity. We had nothing except we had a few hundred listeners, and we were like, this is fun. And somehow it became this.
And when you first started, was the plan just to do this, you were just trying to learn about the businesses and then just talk about it? And then did the people who you were talking about start to call you?
So I was starting companies, David was investing in companies, and the whole thesis was, if we understand what made the great businesses really successful, then we should be able to apply that to our own work. And it turned out that over the next 10 years, we accidentally started this company. Acquired is our company, and we sort of tried to take as much that we can from learning of all the companies we've studied and bring it into our world at Acquired.
Okay, how often do the CEOs or the people that you're talking about call you afterwards and either say, I agree with you, or I completely disagree with your analysis of how this really happened?
We almost always get a call afterwards. The interesting ones are when we don't get a call afterwards. Almost never do we get a call that's saying we disagree. So we take the no calls as disagrees.
or Rolex did not reach out. It almost makes it better that Rolex didn't reach out, because we made a big deal out of the fact that Rolex doesn't communicate with the press, and true to form, we didn't get the call.
Were you? I don't remember. Were you nice? You were not nice to Rolex.
No,
we're very nice to Rolex.
I think they built an incredible machine, and they make great products.
Part of Rolex's whole ethos of its strategy maybe is they have no press communication, period.
You guys look at successful companies for the most part, and you're trying to figure out what makes them tick. So it's not usually a takedown of sorts, but you're just trying to figure out what the secret success is.
Yeah, we look at the extreme outliers that are ubiquitous today, that everybody knows, that feel huge, that have always been here. We try to figure out, at some point they were nothing. Where did that change and why? And what can other people learn from those inflection points in the business?
So is there is there a thread here? If you had 1, 2, or 3 things to say, just generally now that you've done this for a decade, about these successful companies, these outliers?
They're almost always founder-led. The founders are almost always wackadoos in some way,
yes.
And they leverage that insanity, that way that they're 4 standard deviations different than the mean, into some incredibly high leverage thing that makes their company work. And every single one is different.
You asked
they break.
You asked a very smart question last night of Jamie Dimon, which I was listening for, which was, you said that you think that incentives play a huge role in everything. And you were talking to Jamie about why he made the decisions he did ahead of the financial crisis in 2008, and what were the incentives that led him to do that relative to everybody else and did they have different incentives? Did you think that you understood the answer there?
his answer was, he kind of took it to how he incentivized people in his organization.
Right.
With comp.
I think the real answer here is Jamie is willing to think with a longer view than his peer set in the 2004, 5, 6 era. And his thinking was, if I'm trying to build a company that's in a great place 30 years from now, we're going to have to withstand at least 1, maybe 4 or 5 big drawdowns, wars, terrorism. Like, let's just bake it all in and assume we need that margin of safety and operate with that. Whereas everybody else was saying, I hope there's not a recession in the next year, and maximizing profit in the short term.
One of the things you've done, I think, is in a very good way democratize just information around business and understanding what makes a great investment, what makes a great company, which leads to the question we were just discussing in terms of the headlines in the last hour. There's a big move afoot to try to democratize investing even more through 401ks and getting people into private investments. You asked about private credit to Jamie Dimon last night. But more broadly, do you have a take on this situation? Do you think that folks should, in their 401k plans, have access to private investments?
Yeah, I mean, the mechanics of how you do it are above our pay grade to figure out. But one of the biggest things since the financial crisis is staying private longer. These companies, I mean, there's so much value creation in private companies now, especially in the tech sector where Ben and I grew up. Companies are now, I mean, what's OpenAI's current valuation? 300, 400 billion? That's all happened in the private markets. In the old days, it used to be you'd go public when you hit 50 million in revenue. And now it's like you go public when you hit 50 billion in revenue. And so individual investors are locked out of that.
What is the lesson for you? We keep talking about media and the future of this, what you're watching here. And what you've learned, do you have a take on sort of where all of media ultimately goes? Do you think it's all becomes a podcast, all becomes a video podcast, a streaming service? Would you be investing in legacy media yourself? What do you think? You want a show on CNBC? We can try to we can talk to some people.
It is great being here. I feel like I'm in the center of the universe, I will say, after watching hundreds of hours of this show. All media has a job to be done. And I think one thing that we learned from having a big piece in the Wall Street Journal last year is there's a lot of talk about the creator economy and about new media and about podcasts and about you can do this stuff on a shoestring budget. When there's the right piece in the right publication with massive reach, it's game changing. Nothing has ever changed our business the way that a Wall Street Journal piece had.
That's amazing. I mean, because I've been trying to figure out how you guys figured out how to make this work. This is what everybody in media is trying to figure out. The idea of going deeper and longer and getting to do one thing a month, that is what everybody dreams of, and it's so hard to be able to find a way to do that. How did you figure out how to monetize it, especially when you just kind of did it by accident?
Well, it's like Jeff Bezos says, you get the shareholders you ask for. We got the listeners we asked for. We never did any marketing. We never did any sort of paid growth. We were willing to take a really long time to build a listener base and build the business, in part because we never actually thought it could turn into something this big. So every listener is word of mouth brought by someone else.
It's 1 million listeners who are the most coveted demographic out there. These are very wealthy, very
it's business executives making
big CEOs and C-suite people.
Well, it's about business.
Yeah, it's people who are excited to
the
listen.
most boring. We've been. This show's 30 years old this year.
Congratulations!
Wow, congratulations!
It took us 20 years to be more than a ticker with some talking heads. So it's never been sexy, never bin, but we keep.
Speak for yourself.
But you have an incredibly loyal listener
You're
base
not
who are
Adam
here every
Driver.
morning.
I think I'm talking to Adam Driver. And what were you? You've been doing this for 10.
He's much taller than I
You weren't
am.
in Star Wars, and you've been doing this 10 years.
10 years.
10 years.
When did you start? Do you like looking youthful? I would like, if I were you, I would like.
It didn't play for a long time, and now as I'm getting older, it plays much better.
Because you're like a genius, I think. That's what it seems.
At
like.
looking youthful.
Exactly. All right, so you're not, okay. I needed to clear those two things up. He's of age, and he's not Adam.
Ben and David, want to thank you both. Appreciate it. It's very good to see you this morning, and thank you for waking up early and staying up late
Thank you
last
for joining
night.
us last night.
And it was very, very cool to be with you last night. By the way, a good time, not just to promote Acquired, but also maybe to tell you that you can get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app. You see that segue going on there. You can find us on YouTube and everything else. Listen anytime and point your phone at the screen.
Let's get to Dom Chu. When he probably thinks business news is sexy. Is it, Dom? I mean, in any way, shape,
You're darn
or
right
form?
it is. You're
Darn right it is. Because you are
right.
Okay.
I mean, we're in this for a reason. I know. I mean, I get the feeling. I mean, I've known you guys now pretty decently for the balance of about 12 years at this network, and I would think that you guys have fun doing what you're doing. I know that I have fun doing what I'm doing, and so yes, I think it's a good time. Just
excellent.
Yeah.
All right, but you're starting with crypto.
I am going to start with crypto. You read my mind and maybe my script. Largely recovering this morning after it fell yesterday when the Genius Act failed to kind of make it through the House of Representatives. Now, President Trump said on Truth Social last night that he met with members of Congress last night and then stressed the need to get that bill passed. There appeared to be some agreement between all those parties on that front. Meanwhile, Bitcoin and Ethereum prices are both moving higher this morning. Stablecoin issuer Circle, also cryptocurrency exchange Coinbase, are also higher this morning after falling yesterday. So you can see anywhere from about maybe 0.75% gain for Coinbase to Circle up 1.5%. Ether and Bitcoin up about 2 to 3% as well. Meantime, ASML Holdings lower after it missed guidance. Expectations in its second quarter report fell short earlier today. ASML CEO saying that the company, quote unquote, cannot confirm growth in 2026, citing increasing uncertainty driven by macroeconomic and geopolitical developments. Those statements are weighing on other stocks in that particular industry as well. You can see here ASML, ASM International, STMI, Microelectronics, Infineon Technologies, kind of generally mixed in trading, but generally lower on the day. So keep an eye on the European chip sector. And we're going to round things out with the Johnson & Johnson moving higher in the pre-market to the tune of about 1.5% after a mixed report this morning. Guidance, though, is bolstering that stock. The company raised its revenue and adjusted earnings guidance. Johnson & Johnson CFO Joe Wolk said earlier this hour that 2025 had been better than expected, and he expects that growth to continue in 2026 and 2027. So keep an eye on Johnson & Johnson shares up 1.5%. Joe, Becky, Andrew, I'm having fun, and I will send things back over to you guys.
And you're sexy, and you know it.
I'm not right said Fred, but I will.
Oh no, another worm is going to be in your brain.
Now I'm thinking Elmo. Have you seen Elmo's version of I'm Sexy and I Know It?
No, I saw some other versions of Elmo just saying some horrible things.
Oh, yeah, that was bad. They had to apologize for that. When we come back, NVIDIA CEO Jensen Huang in Beijing today, where he spoke about China's advances in AI. The company will also start to resume shipments of its H20 chips to the country. We'll find out what this means for the ongoing chip war with the United States. That's next. And we're waiting for quarterly results from both Goldman Sachs and Morgan Stanley. We'll bring you those numbers and the instant reaction as soon as they're released. Squawk Box, we'll be right back.
washboardjim.com.
NVIDIA CEO Jensen Huang in China today praising the country's AI ecosystem. Speaking in Beijing, Huang called models from companies like Alibaba and DeepSeek world-class. NVIDIA said that yesterday it expected to resume shipments of its H20 AI chips to China after getting assurances from the U.S. government. Huang said that the U.S. is processing those licenses for Chinese customers right now. He also spoke about export controls.
Export control are things that are outside of our control, and it can be quite disruptive to our business. It is our job only to inform the governments of the nature and the unintended consequences of the policies that they make.
Joining us right now is Chris Miller, Tufts Fletcher School professor, also somebody who's been looking into this because he's got a book that's been written on this as well. He's the author of Chip War. Chris, I want to thank you for being with us this morning. Why don't we talk a little bit about what we've seen with NVIDIA? This is a pretty big reversal to be able to sell those H20 chips into China. How important is it?
Well, it is a big reversal. The Trump administration just a couple months ago announced they were going to ban the sale of the H20 chip into China, which is a chip that was specifically downgraded so that it would meet U.S. requirements for the ability to sell into the Chinese market. And now Trump's reversing that stance, allowing NVIDIA to sell these chips again. Everything we've heard from the Chinese customers who would buy this chip suggests they want it in very large quantities. And we've seen NVIDIA announce that billions of dollars of sales would stem from the ability to sell into China. So it's a big change, and it remains to be seen exactly what type of licenses the Trump administration is going to allow for NVIDIA sales to Chinese customers.
I think the big question, though, is what the reasoning behind this was. Was it a concern that NVIDIA and American technology would start to lose out to China if they weren't allowed to compete in that market?
Well, we saw that Jensen and President Trump met in the White House earlier this week. We've also heard senior administration officials say that the decision to allow H20 sales actually stems from the U.S.-China talks that were held several weeks ago, in which China allowed the shipment of rare earth magnets to the U.S., and the U.S. in turn lifted certain controls. It's unclear to me exactly what the primary driver was. And I think we've seen many twists and turns in the chip war, including under the Trump administration. And so we should wait further clarity for the administration as to just how broad the licenses it's going to grant will be. Right now, we've heard from NVIDIA, but not really much from the administration yet in terms of the details.
But the H20 chip was one that's restricted. It doesn't have all the memory capabilities for specifically that reason. We didn't want them to have access to some of the things that could be used for military.
Yeah, that's right. The administration, when they banned the H20 chip, they made the argument that if China was able to buy H20s in the quantities of hundreds of thousands, that this would enable Chinese firms to compete with U.S. AI players and also to develop AI for strategic purposes. And companies like DeepSeek, like Alibaba, like ByteDance, the owner of TikTok, they've signaled a desire to buy large volumes of these chips because they need them. They've already built their AI models on NVIDIA systems, and Huawei, which is the competitor to NVIDIA, can't right now produce domestically the types of AI chips that are needed at scale. It has a small volume of production, but according to Trump administration officials, its production volumes are not likely to grow that much this year. So NVIDIA is still the largest player in this market. Even with its downgraded chips, they're still highly competitive in the Chinese market.
Give us an overview of where we stand in the chip war right now and where you think we'll be, let's say, a year, 2 years down the road, because things are happening at a pretty rapid clip.
Well, I think it's still the case that U.S. firms, along with their Taiwanese manufacturing partners like TSMC, are meaningfully ahead of Chinese competitors. If you take NVIDIA and Huawei, both of which produce AI chips as an example, the fact that NVIDIA is able to sell scaled down versions of its chips at large volumes in China shows that it's ahead of Huawei, which can't produce enough of its high-end chips to really be competitive. The fact that Huawei is also smuggling in still large volumes of chips and components for its chips from abroad, shows the challenges it faces in terms of ramping up production. And so when it comes to chips, especially the ultra high-end AI chips that are needed for AI training and AI deployment, it's still the case that the US is far ahead, which is why China is so desperate to import these chips at scale.
And what would happen if China tried to take over Taiwan?
Well, it wouldn't be good. The cost would be tremendous, because when it comes to AI chips, as well as smartphone processors, PC processors, Taiwan's the producer of 90% or more of the most advanced chips. We've been making a bit of a progress in the US, building up our own domestic capabilities. TSMC from Taiwan is a big campus in Arizona they're developing, but this is still the early stages of what's going to be a very long process of beginning to diversify the semiconductor supply chain. There's still a ton of concentration in Taiwan.
Chris, thank you for your time today. We appreciate it.
Okay, coming up, are the wealthy of New York City really worried about Zohran Mamdani's chances of becoming mayor? Robert Frank is going to bring us some new data on luxury real estate sales in the city's millionaire population. That's next. Squawk Box, come right back.
Time now for today's Aflac Trivia question. In honor of the very first National AI Day, who coined the term artificial intelligence? The answer when Squawk Box returns. And now the answer to today's Aflac Trivia question. In honor of the very first National AI Day, who coined the term artificial intelligence? The answer, computer scientist John McCarthy in 1956.
Welcome back to Squawk. Zohran Mamdani's primary win in New York City's mayoral race has sparked what might be described as a panic among the wealthy, with some business owners and developers threatening to leave the Big Apple if the Democratic Socialist becomes the mayor. Robert Frank joins us now at the table this morning with a look at the city's wealthy and what they really think about all of it. What do you think?
Good morning, Andrew. Well, Florida real estate brokers say they've seen a surge in interest from wealthy New Yorkers after that Mamdani primary win. Developers are freezing projects, and business owners say they may shut down or leave the city if taxes go up. Now, Mamdani wants to add a 2% income tax on New Yorkers making more than $1 million a year. So that would bring the top city rate to 5.9%. The combined city and state rate would go to 16.8%, and the combined federal, state, and city would go, here it comes, 53.8% if you're a top earner in New York City. Now, Mamdani does not have the power, of course, to raise income taxes in New York. That has to come from Albany, where the governor has said, quote, I don't want to lose any more people to Palm Beach. And despite the headlines, the wealthy are still buying Manhattan luxury real estate. Get this, 72 contracts have been signed for apartments priced at $4 million or more since his election. That's actually up 13% from last year, according to Ocean Realty. New data from Altrata shows that New York's millionaire population has in fact doubled over the past decade, with just 1 year of declines. That was 2022, when markets fell. It wasn't so much from out-migration, but more stock markets. And by the way, New York has by far the largest population of the ultra-wealthy, with 33,000 people worth $30 million or more. LA ranks second with just 19,000. Now, for more on how the wealthy are navigating the New York City mayor race and what it means for taxes, you can go to the Inside Wealth newsletter. New one out tomorrow morning. Go to cbc.com/insidewealth. That's cbc.com/insidewealth.
I feel like Mamdani is going to be running an ad with this clip in a moment.
Why is that?
If you're saying that people are still here.
Well, we'll see if he wins.
Right.
We'll see what policies are actually implemented, and then we'll see, people will decide whether to leave or not. My point is, we've seen, during the de Blasio administration, the number of millionaires continued to march higher.
Right.
And yes, they do leave. What people don't realize, or at least discount in this narrative, is that New York creates far more millionaires than actually leave, and that has continued to happen. And so we're just focusing on the out-migration. You're not focusing on how many new millionaires are created in New York City.
Right, so then who's coming matters. We don't really talk about that. But
That's
the other
right.
question I have is the super wealthy. I mean, I'm not the millionaire is not super wealthy, but the billionaires who decides to leave.
Yep.
The tax loss on that 1 or 2 or 3 or 10 individuals, you sometimes need 100 or hundreds.
Correct. We saw that in New Jersey with David Tepper moving, and we've seen some prominent, Josh Harris from New York moving, Daniel Oak moving, some billionaires who move, and the headlines are prominent when those folks move. What you don't see is the broader population of very wealthy people, again, new wealth created, or those who are staying. But you're right. The top 1% pay 40% of the income taxes in New York. So when some of them leave, it doesn't have to be a large number, just be a few thousand. That matters. So far, we haven't seen it show up in tax revenue or in the city economy. Tax revenue remains strong.
I mean, we may be hurtling towards Mamdani marriage, and it's ironic because this is the center of the financial world,
the capital of capital,
capital of capitalism. Yet the wealth, the income disparity is very, very clear.
Yeah.
And you can't compete against that many people. I just hope there's not a Bastille Day coming, because we're still, it's like, well, we were hoping someday it wouldn't be like, I want to get that guy, that rich guy up on the hill. It was, I want to be that rich guy.
Remember Occupy Wall Street, right? Well,
yeah,
that
same
strain is still there, and I think that was expressed through this election. We'll see whether it holds through the general, and we'll see whether after this meeting yesterday with all these business leaders, whether Mamdani starts to moderate his policies.
Well, we're going to get to that in just a moment. Robert, thank you for joining us. And in just a moment, Partnership for New York City CEO Catherine Wild will join us in the next half hour to discuss the meeting. She was in the room with Mamdani yesterday.
In the meantime, though, Goldman Sachs and Morgan Stanley just releasing quarterly results. I know Goldman Sachs is trading higher. Let's get over to Leslie Picker. She's looking through the numbers on that. Hey, Leslie.
Hey, Becky. Yeah, Goldman Sachs reporting top and bottom line beats driven by huge gains in the business that advises on acquisitions as well as equity trading. The firm's global banking and markets division, which houses those two businesses, generated $10 billion in revenue, up 24% year over year. Advisory, which largely comprises M&A banking, raked in more than $1 billion and was up 71% year over year. Equity underwriting was up slightly, while debt underwriting was slightly down. Goldman said its investment banking fees backlog is higher compared with the first quarter and then the end of 2024 as well. Within trading, equities surged 36% year over year to $4.3 billion, a record for that group. Fixed income, currencies, and commodities gained 9% to $3.5 billion in revenue during the quarter. Asset and wealth management, a smaller but key growth area for the firm, they did see revenue decline about 3% year over year to $3.8 billion. The division was dragged down by some debt investments on the balance sheet. CEO David Solomon saying in the release, quote, "At this time, the economy and markets are generally responding positively to the evolving policy environment, but as developments rarely unfold in a straight line, we've remained very focused on risk management." Return on equity of 12.8% was nearly 2 percentage points higher than a year ago, although lower than Q1. Turning to Morgan Stanley, that firm also beating on the top and bottom lines in all three divisions, surpassing the street's expectations. Trading, a bright spot here with equities revenue jumping 23%, fixed income up 9% during the quarter. Total investment banking fees, though, those were lower for Morgan Stanley by nearly 5%. Advisory, which manages M&A, declined 14%. Equity capital markets, though, the unit that manages IPOs and follow-on offerings, that gained 42% to $500 million. Debt capital markets revenue slumped by 21% during the quarter. Morgan Stanley's wealth management division brought in $59 billion in net new assets and $43 billion in fee-based assets during the quarter. Net revenues were up 14% to $7.8 billion for that division, and investment management revenue was up about 12%. Expenses, though, guys, coming in higher here than the street expected. Compensation expense was $7.2 billion, above analyst estimates, while non-comp expense was also slightly higher than expectations. Still, return on tangible common equity was 18.2% in the quarter. Nothing to sneeze at. You can see Morgan Stanley shares very little change in pre-market on these results. I'll send it back to you.
All right, Leslie, thank you. And we really need thank you running through all of the things for us this morning.
Yeah.
Leslie Picker.
Watch your health. There's more coming. Don't get sick.
A programming note for you. Goldman Sachs CEO David Solomon will be on Money Movers today at 11 a.m. Eastern Time. Squawk Box will be right back.
now and make it count.
We're watching the shares of spirits giant Diageo. CEO Deborah Crew has stepped down by mutual agreement with the board. The company's CFO was named interim CEO while the board conducts a CEO search of both internal and external candidates. The company's been grappling with falling alcohol sales and declining share prices. It's evident right there. Coming up, we're going to dig into everything. Gary Cohn's here from the state of the economy, tariffs, the Fed, and more with former director of the National Economic Council, Gary Cohn. That's next. Squawk Box return in just a moment.
About Mount Jaro.
About an hour away now from the release of the June Producer Price Index. Joining us now, Gary Cohn, IBM Vice Chairman, former Director of the National Economic Council, joins us on set, as he really should, exclusively, from time to time. Thank you.
Joe, it's always nice to be here with you.
Always good to see you.
What an introduction.
Yeah.
You suck. I don't.
Nice introduction.
It's not nice to be wanted. No, it's not. It's not nice to be wanted. Did I want you here instead of somewhere else? It's not. Would you rather say, "Gosh, I wish you were on another show"? No, you wouldn't.
It's always good to be wanted.
And you were watching Langone, Ken, yesterday. And the Journal has never liked tariffs, obviously. Wall Street Journal, they're classic conservatives. Ken does not like tariffs. Mm-hmm. But there's a feeling among a lot of classic conservatives that something needed to be done, and they've kind of been lulled into the idea that some of this is okay, almost accepting some of the tariff moves. This kind of threw me a little bit today, because it's the president wouldn't like the results of what happened in those numbers yesterday. They weren't horrible, but real weekly wages fell, adjusted for inflation, because of where inflation was. So inflation's up, Wages are down. That's not what he wants. It's not what he was elected to do, and it's a reflection, in large part, from some of the tariffs, right?
Correct.
What would you advise the president to do with tariffs at this point?
So look, I think you made two really important points.
Really?
Yeah, two. Yeah, it's amazing. It's pretty good stuff.
Wow. I'm going to have to go back and watch the tape. Go ahead.
So look, one point is there is a understanding or view in this country that we need to control certain parts of our essential supply chain. You know, I always say if COVID taught us nothing else, it surely taught us how vulnerable we are on essential parts of our supply chain. So the fact that we're trying to move some of our most vulnerable pieces of our supply chain that can shut down our U.S. economy and move them back to the United States. I think the vast majority of Americans and the vast majority of economists and the vast majority of business people all support
and that wouldn't have happened with pure market forces.
It would not have happened with pure market forces. Okay. So the good piece is we are starting to understand what are the essential things that need to be moved back to the United States.
That might cost us something.
That might cost us something.
Okay.
So that's the point that I think is interesting. The other point is, we are now at a point where we are collecting $30 to $40 billion of tariff revenue a month. And everyone's boasting about, the $30 to $40 billion of tariff revenue a month. The one thing I think we all will agree at is there's no free lunch. Someone's paying the $30 to $40 billion. Yeah. And ultimately, it is going to end up being the consumer that pays that money. So for a short period of time, maybe the business is eating it. So if you're an importer and you're Nike or you're Apple, you may be eating it for a short period of time. If you're the importer, you may be eating it for a short period of time. But that's an unsustainable business model. And you've got your shareholders and you've got your banks and you've got your debt covenants, and you have to abide by all of the restrictions that you have. So ultimately, you're going to be forced to pass those tariffs down into the system. And unfortunately, the consumer is going to eat them. And I think yesterday's numbers gave us a little hint. And by the way, I never get too excited over one set of numbers. I always warn people, it's a set of numbers. It could be completely different next month. So we have to wait to see what the trend is. But when you see, things that we know we're importing, like toys, like appliances, like paper products, all showing close to 2% inflationary pressures, we have a pretty good idea that the underlying product is probably not going up.
But the journal doesn't even argue that the problem is inflation, because it says it's probably a one-shot deal, doesn't necessarily go into services, doesn't necessarily, but it is a tax. It is a tax, and when you tax something, you get less of it, usually.
Well, when you tax something, you get less of it.
And it costs someone somewhere.
You affect people's buying power.
Yeah.
And if you're on a fixed income, you have less disposable income to buy goods because those goods are more expensive. And we're therefore affecting the part of the population we least want to affect.
Exactly.
Which is the hardest working individuals. It's a very regressive tax that will force people to choose between what they're able to buy, what food can they put on their table, what can they do to improve their home or not. You're forcing consumers to make very difficult decisions as this gets passed.
Here's the question. I think I was concerned in part because so many CEOs would come on and say they were concerned about the uncertainty of taxes, and that the uncertainty was going to prevent them from making investments. The things that they wanted to do, they were going to sit on their hands and try to figure out what was going to happen, and then they'd wait. It does not appear, at least the way the economy is going thus far, unless it's, we don't know the other side of it, that somehow people are stopping. You look at all of the AI investments that are taking place. You look at there's just even some of the M&A activity that your former firm Goldman Sachs is reporting.
Johnson & Johnson was on this morning talking about $55 billion in investments.
Look, maybe there'd be even a greater tidal wave of investment if this uncertainty didn't exist. But how do you think about that?
The uncertainty piece that we've all been talking about. So look, the uncertainty piece breaks down into a bunch of different silos. So we had the one big beautiful bill uncertainty piece. Now the bigger uncertainty in that bill was really what was going to happen to the personal income taxes. The vast majority of the corporate taxes were law. They were not going to expire at the end of this year. Right. But on the flip side, there were about $4.5 trillion of tax relief on the individual side, meaning that every taxpayer's rates would go up. Yes, we would bring back the standard deductions, we would bring back the itemized deduction, we would bring back all the complexity of filing tax returns. And I think that had a highly, a huge effect on the way people were thinking about what their after-tax spending would have been or could have been if Congress was not able to roll those rates forward. Not only did they roll those rates forward, they actually put back some of the stimulus for lower income families that was in the original bill, which I think are very good and supportive. There's enhanced child care credits, there's enhanced credits for families. So look, we end up in a place from the tax standpoint, from the income tax standpoint, where I think that variable is off the table. We know what it is, it's baked, it's signed, nothing's going to change, and people cannot say, I don't understand what's going on with taxes at this point. And in fact, on the business side, there was more incentive in there to go out and manufacture and build in the United States. You got enhanced depreciation, you got enhanced R&D credits. Right. So all of the things that you would want or need to manufacture and build in the United States were included in the tax bill. So now we get to the point where I think we were starting with Joe is, okay, if I'm going to go build and I'm going to manufacture in the United States, okay, I'm starting maybe to understand the cost of manufacturing the facility. Once I manufacture a facility, I've got two inputs. I've got to bring labor into the facility, right, and I'm not sure what my labor costs are going to be, and I have to bring raw materials into the facility. And a lot of those raw materials are not manufactured here in the United States. And even if we say we will manufacture those here in the United States, realistically, that's a 5+ year project. And what we're seeing on some of these deals where we're making deals to manufacturing things in the United States, like magnets, the price is dramatically different than where the current clearing price of a magnet is today. Right. So, am I going to build a factory? Am I going to?
Do you think these announcements aren't real then?
Things are real, but the question is, am I going to go borrow $1 billion plus to build a factory if one of my major input costs just doubled? Right. So you have to assume my final good has to sell for dramatically higher.
Or you have to figure that it's cheaper still to manufacture it here, given the tariffs that are going to be imposed on anything you manufacture.
You have to make that rule. So you have to make that adjustment in your mind, but knowing that manufacturing takes 5 years forward from now, and predicting what the tariff is when it's not law. Right. When it's not been law, it's not gone through the Congress. That's a tough thing. As a board of a director, as a board would sit there and say, is this a prudent thing to do for our shareholders?
Does the market make sense at these highs? Do you think that momentum can continue? Because we've had a lot of people over the last few days who say, hey, the market can grow into this and continue to push even higher.
Well, right now we are seeing the vast majority of spending in what I would call the AI-related and ancillary spaces. We're seeing it in the power grid, power formation, power generation. We're seeing it in the warehousing of CPUs, GPUs. We're seeing it in the building of these massive buildings. So look, the AI wave right now and the demand for compute power is extraordinary. And it's really important in the U.S. economy. And that piece of sort of demand itself, which seems insatiable at this point, it seems like we cannot build enough data centers fast enough, which we can talk about at some other point, because we've never seen a period in time where we don't overbuild at the end. That demand for AI infrastructure today is having a dramatic impact on sort of the construction market, on the labor market, on the goods and services that need to go in to continue to build out that industry, which will be very important for the United States.
Gary, so I'm still back to this. So it's not necessarily inflationary, but it is a tax. So would you cut, right? I mean, taxes are, they cause a slowdown, and if it's not inflationary, do you think that Trump's on to something with the cut, or do you think the Fed's in the right position right now?
So look, when you talk about the inflationary side, there's always an argument here. If you take a product that costs X and put I'll make it 100% tariff on it, and now costs 2X.
Yeah.
but you only do it once. There's a price change.
Price change, but not
price
inflation.
change. It's not going up month after month after month after month.
Right.
So the way inflation data is calculated, we could argue if this is right, you will see a bump in 1 month. But the next month, there will be no inflation in that product.
So yes, you'd cut?
So there will be no inflation in that product. So you have to understand the price of the good and the amount of disposable income that people would have would go down. It would go down because they'd be paying the higher price.
Right.
So when you get to the Fed and you get to the Fed policy, I think ultimately you're looking at data, you're looking at inflation. I mean, they've got their dual mandate. They have a very clear dual mandate, which is, stable prices. We interpret stable prices to be 2% inflation, and we look at full employment. Right now, one could argue that we are at stable prices. Yeah. You could argue that they were more stable 2 days ago before we got yesterday's data.
Right.
We'll get a little bit more data today. But still, even with yesterday's data and CPI 2.7%, like I said, it's one number. We were 2.4% before that. And we see the employment numbers continue to be relatively strong. It feels like there is a decent argument to be made on either side of the equation.
I could debate either side.
I think there's a decent argument. Now, look, no one's asking me, but if someone said, what would you personally do, Gary? I'd probably lower interest rates a little bit. I'd lower them 25 basis points.
I'm with you.
And see what happens. I don't think there's a lot of risk to lowering rates at this point, 25 basis points. But again, we're lowering the front end of the curve. The front end of the curve right now is relatively low. There's more demand for short-term treasuries.
Okay, though.
The long end is going to trade where the long end trades.
I know we got to run. I'm just curious, I don't know if you saw the story we were debating earlier in the Wall Street Journal about 401ks getting into private markets, whether you think that's a good thing, these semi-liquid products, what you think that should be.
I think it's a great thing. I think that we should give people with 401ks access to products that will perform well above market expectations over longer periods of time. And I think the history of private markets is that they have outperformed through the cycle. And a 401k is a perfect vehicle to put something like that in because you more or less buy it, you somewhat forget about it,
hopefully,
you own
right.
it, and hopefully the duration is you'll buy it when you're 30 years old and you can't get the money out for another 35 years.
Right.
So you've got 35 years of compounded appreciation.
Does that change the marketplace so more companies stay private, or does it change the marketplace so more companies go public?
I think at the end of the day, it probably will have very little effect on companies going private and companies going public. You can buy a private company in a 401k and have it go public and end up with shares delivered to you. I don't think the owner of the 401k cares. They actually might like it. At the beginning, they bought something private that they'd appreciate a lot, and at the end, they got something very liquid and transparent that they could easily liquidate. They don't have to wait for someone else to liquidate. If you would tell people that would be the normal path of trajectory, that you're going to buy something private, and by the time you're able to liquidate this 35 years later, 30 years later, 25 years later, most likely it will be a public security that you can.
I just think it creates such a larger pool of money for private assets, which therefore would more likely keep them private for longer, or they'd sort of hot potato as even a private for longer kind of scenario.
There's going to be rules on private funds and private securities to how long you can keep them. I don't think you'll see asset managers keep private companies private for 30 years. I mean, that to me would not be the ultimate.
Are you as bullish on the future as Ken Langone?
I don't know if I'm as bullish as Ken.
Are you?
But we all love Ken.
Yeah.
You work with the president. You know him well.
I know Ken well.
Do you think, like Ken thinks, that Trump's going to be remembered as a great president?
Look, I think Trump will be remembered as a president with really unique ability to understand the policy situation in the United States. And he'll be remembered as someone that attacked some of the thorniest policies that people were not willing to deal with. And as time goes on, people will remember the policy change and the effect. They will not remember how we got here. And I think as time goes on, the policy effect is very bullish for his brand and his reputation. And having forgot how we got here will help his brand and reputation.
It's like sees a problem and he's like a bull in a china closet, basically. Right? Things break.
Yeah, but at the
maybe
end
with a hammer.
At the end of the day, presidents are remembered for what they got accomplished or what they didn't get accomplished. And I think we will see what he's done, with getting the taxes extended, what he's done in the Middle East, what he's been able to do with foreign policy, what he's been able to do with foreign leaders, the fact he's been able to get NATO to pay for their own security as well. There are a lot of very positive things that if you were just writing the list of things that the Trump administration has gotten done, there'd be a lot of things in the very positive column if you could only write concrete things. If you were writing emotional things, people might write a lot of emotional things in the negative column, but guess what? 10 years from now, 20 years from now, 30 years from now, the only column people are going to remember is the column of actual achievements.
Yeah. Well, we've seen this movie before. We were in Davos, and he was like the belle of the ball, and then COVID hit. And things were going well. Remember how well they were going?
I remember very well.
Yeah, I hear you, Rob. I hear you. We got to get to those stock movers, right? All right. Thank you.
Thank you.
Gary,
Thank you.
Thank you, Gary. Coming up, the Democratic nominee for New York City, Mayor, I'd say the nominee for mayor, he's not the mayor yet, Zoran Mandami. I'd love to hear your views on that, maybe during the commercial break. We'll see. Meeting with more than 100 executives yesterday, where he was peppered with questions from taxes and real estate to anti-Semitism. The Partnership for New York City hosted that event, and we're going to talk to the group's CEO, Catherine Wild, next. Squawk Box coming back after this.
Finding insurance.
It's 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. We're going to be getting some more inflation data at 8:30 a.m. Eastern Time today with the June Producer Price Index. Right now, the futures ahead of that show the Dow up by triple digits. The S&P is flat, and the Nasdaq off by about 35.
And a second day of meetings set to begin between the New York City Democratic mayoral candidate Zohran Mamdani and more than 100 executives. It's been organized by the Partnership for New York City. The group planning to meet with sitting mayor Eric Adams tomorrow. And joining us right now, someone who spent some time with that nominee yesterday and a whole bunch of other CEOs, Catherine Wild, President and CEO of the Partnership for New York City. Good morning.
Good morning.
Okay, so take us inside the room. I know there was a million different questions asked about everything from anti-Semitism to taxes to how many freebies can be given away. What was the outcome in terms of the feeling in the room when it was over?
I think everyone walked away thinking that he was the most impressive candidate they have seen in generations. He's very compelling, charming, smart young man, and gives you a sense of he's honest, means what he says. So and he's full of hope.
Okay, so here's my question though. There were in terms of the reporting that I saw on this, a lot of folks who thought he was charming and a great candidate. Clearly, he's a good candidate in that he was able to attract a huge base and could speak in a way that attracted a group of people to vote for him. Having said that, there was also a sense, at least from some of the reporting that I saw and folks that I talked to, that a lot of the people in the business community might have thought he was charming, but fundamentally disagreed with his underlying views of how to attack the city's problems.
Totally, you didn't let me finish. That was my butt.
Okay.
But no, he's clearly totally inexperienced. They raised the issue of, it's a city of 300,000 people. It's a very complicated management experience. What have you done? What's prepared you? He said, well, I'd surround myself with good people and follow the Mike Bloomberg principle of letting them do their job. That was a good answer, but I don't think it was, it made up for the lack of experience. And on policy issues, he's sourcing from sources that they don't believe in terms of the fiscal realities, the tax impacts, et cetera.
And did he hold firm? Did you feel like he on those views? Did you think that there was a flexibility to his perspectives?
I don't think he would. What he said was he wouldn't be flexible on his basic values, but he was eager to learn. He seemed to want to say, I'm open to learning, to better understanding. And he said, importantly, because I think this is important, I think we all agree the challenges facing the city, he nailed it. Affordability and et cetera. The fact that he said he was going to stick with his values, but he was willing to learn and to figure out if there are other ways to achieve his goals. And the example was freeze the rent. Well, he said, I would look at reform of property taxes. And obviously, property taxes are 30% of the rent in rent-regulated buildings. So he did express some openness to look at other ways of solving the problem than just raising taxes.
One of the things I hear often from CEOs in this city is the worry about anti-Semitism in the city. And I know that he was asked about his refusal, at least publicly on Meet the Press, I think over 3 times he was asked the question, to condemn this phrase, globalize the intifada. What did he say to your group?
He described how he had learned what that meant and how frightening that was to a young Jewish woman. And that he said he was not going to use it and use the phrase again, and that he would discourage others from using it.
And do you think that discourage is the same as condemn?
No, I don't think it's the same.
Does that concern you, or did that concern others in the room? I know that Alba Berla, obviously Jewish, runs Pfizer, is on the board of the partnership.
Absolutely concerns them. Absolutely.
And was that expressed? I mean, was this
Yes, and no, it was expressed in great detail. The concerns were expressed in great detail.
But no movement on that front in your mind?
I would say he said that he would definitely opposed. He realized the problem of anti-Semitism had become enormous, and that he would do everything he could to bring people together to try and fight that. So that was the tenor of the response.
What kind of answers did he provide, to the extent that people said, look, you may have all of these ideas, but these ideas, you, given what your role is as a mayor, can't necessarily effectuate. Did he speak to that idea? Meaning that there's a whole bunch of things he can do. He can deal with rent control, or he can go after rent control if he wants to. It's harder for him to raise taxes, for example, without the help of Albany.
Those are the kind of points that our members were making to him. So,
and what kind of how did he respond to those points?
There was a good back and forth discussion. I think the main purpose of the meeting was to introduce the winner of the Democratic primary to the members. Our organization does not endorse in political races. We don't take political positions one way or the other on individual candidates. So this was strictly a get to know the candidate conversation. And I would say that they, I doubt it changed many minds, but I think it lowered the temperature instead in terms of fear.
I thought you were, I don't know, you don't endorse, but last time you were on, I thought you were sort of thinking that the alternative to this candidate would be Mayor Adams.
Well, Mayor Adams is the incumbent mayor, yeah.
Yes? No, I know that, but as far as who you would like to drop out if there were, see, you're in a position where you got a CYA because this guy might be mayor. I understand that. But who has the most viable chance of beating Mamdani? Andrew Cuomo or Mayor Adams? And will either one of them ever consider dropping out? Because
well, it depends on what happens between now and then, because the election is not until November. So that's a question, and that's the question that Governor Cuomo has said. Well, let's see who's winning in September. So I think.
Do you think one of them will drop out?
I do not. I'd be very surprised.
And you better be sucking up the money. You're doing the right thing.
What have the latest polls that you've seen shown? What are your odds, I would say, of
that Mamdani is substantially ahead of the pack than Cuomo, but Cuomo just finished a $30 million campaign, and Eric hasn't started his campaign, so who knows?
Let me ask you about security in the city. One of the things that obviously I think a lot of business leaders have been thinking about is policing in the city and the like. I think there's a lot of people who like the current commissioner of the police. Did you get a sense that he would keep her in that role? I mean, there's been sort of questions about whether he would want to, not want to, given some of the comments he's made historically about policing in the city.
Well, that question did come up, and he said what he has said publicly for the last week, which was that he was definitely consider keeping Jessie Tisch in the commissioner role. That was with her father sitting in the front row of the meeting. So, I think his position is he's open, but it was no commitment.
Right. I have a question, by the way, this is separate and apart from this. Do you believe that Eric Adams' role in this city, when it comes to police, by the way, the police record under her, but also under him, has actually been quite good. I mean, in terms of
it's excellent.
It's excellent. Doesn't get a lot of credit for that. The other thing that's fascinating in this city is, in terms of ICE raids and National Guards running around. We don't have that in this city right now. We do have it in LA and other parts of the country, and there is a question mark about why that is, and whether that's a function actually of this mayor's relationship with the city, with the president of the United States, rather. I say that because we all, some people say Eric Adams is a hostage of the president, but in some cases you could look and say, well, if he's being kidnapped, whatever relationship he has might actually have been helping keep the city from turning into, some kind of National Guard, ICE raid situation.
Well, I think you're understating the role that Governor Hochul has played in working with President Trump to try and keep a lid on the ICE presence. Although there are disturbing trends now, ICE has gotten a huge windfall of funds in the big beautiful bill, and so they haven't had the resources to go into.
So you think they're coming to New York next?
I would not take any comfort in thinking they're not coming here. I think what stands between us and them at this moment is Governor Hochul.
And so the credit should not therefore go to the mayor on that front. If you were handing out, credit candies.
Yeah, I think that this has been a strategic effort by the governor, and I also think that ICE is. We'll see what happens in the next couple months, because there's going to be an influx of resources, and we have seen that in the first 2 weeks of June, there were more ICE arrests of civilian complaints, not criminals. So prior to that, most of the ICE...
Kathy, you almost sound like you're more worried about an influx of ICE than an influx of illegal immigrants. Is that?
I am very worried.
Is that what you mean to sound like?
No, I'm very worried about due process for the immigrants that are here. I think everybody agrees that for the criminal element, the gangs, the transnational gangs, absolutely we need to have them.
And the NYPD, by the way, to their credit, have done a great job with some of the gangs in the city.
No one wants a sanctuary.
I'm just saying
we don't want to end up a sanctuary city.
We are a sanctuary.
We are a sanctuary
city. I know. Well, that's. I'd prefer an influx to ICE and an influx to illegal immigrants.
Well,
and there's a lot of people in this country
have fueled our economy for a number of years,
Okay.
and what we need is
What do you tell the people that have worked for years and years to become legal?
The people who have worked for years and years who have not been able to yet get legalized because we didn't pass any path.
There's a possibility that Trump does something with Dream Act or whatever, but if you don't have a border, you don't have a country.
Well, what's going on now is that we're seeing that it's not the majority in June that were picked up by ICE had no criminal record.
Right.
That's a concern, because where does that stop? We've got people who have been working in the back of restaurants and doing jobs that U.S. citizens won't do.
I've heard all the arguments, but I mean, fewer people have been deported. Fewer people have been deported under Trump than under Obama and Biden.
Again, the resources of ICE were limited. They're now pretty unlimited.
And that's a bad thing.
I'm just saying it's going to change.
Okay.
I'm not saying it's good or bad. It's just going to change.
An influx of ICE. Okay.
Kathy, I want to thank you. Appreciate it very, very much.
Thanks for having me.
Squawk Box coming right back after this.
Welcome back to Squawk Box. I'm Dominic Chu with a check on your morning movers. We're going to start with Dow component Johnson & Johnson. The pharmaceutical giant is up roughly 2% right now in pre-market action after it beat expectations for both profits and revenues and raised its full-year guidance. The other earnings headliners are big bank-driven, of course. Goldman and Morgan Stanley both higher after they beat expectations. Both posted strong growth in equities trading revenues as well. Also, check out B of A shares higher by about almost 1% after a mixed second quarter. Profits beat, revenues were a slight miss. CEO Brian Moynihan saying in the release that the consumer remained resilient with healthy spending and asset quality there as well. Now, CEO Brian Moynihan will be on the exchange at 1:30 p.m. Eastern Time, so pay attention. Big first on interview here on CNBC. Meantime, ASML lower after it missed guidance expectations in its second quarter report earlier today. ASML CEO saying that the company cannot confirm growth in 2026 currently, citing increasing uncertainty driven by macroeconomic and geopolitical developments. So keep it right here. ASML Holdings down 7.5%. Squawk Box returns after this commercial break.
Than sweats.
The House today is set to take the next steps on 3 crypto bills. It's going to happen today. Joining us now, Financial Services Committee Chairman French Hill. Good morning. It's good to see you, Congressman.
Good morning.
And Chairman. We heard that, I guess, rumblings that maybe the votes weren't there, and then the president met with some individuals yesterday. Are you confident now the votes are there?
I believe that we do have the votes to advance the Senate Genius Act, which will create the first federally regulated, with clear rules, dollar-backed payment stablecoin, which will unleash a new competitive round in how payments are done when they're used in a blockchain application. We also have the House's work on market structure, which we've worked through the House Ag Committee and the House Financial Services Committee. Strong bipartisan support for that bill. And then finally, Whip Tom Emmer of Minnesota. Mr. Emmer has his bill that blocks the federal government from creating a central bank digital currency through the Fed unless it's done with a specific authorization through Congress. So I believe that the House has the votes for those three measures, and the Speaker is working this morning on how they'll be coordinated and presented to the House for consideration.
What's your, what do you think? How long, it won't be today. Well, it was supposed to be today.
Well, we expected to vote on clarity this afternoon and also vote on the defense appropriations bill and then vote on Genius, the Senate stablecoin bill, tomorrow. So right now, I think that, based on the work yesterday of a small number of members taking down the House rule, is still under discussion this morning as to how that'll be sequenced and brought back to the House.
So when, what do you think the president said? This is happening again and again, and Mike Johnson has pulled some rabbits out of his hat too. It's fun. It's strange for the rest of us to watch how things work. Do people get things that they want for locally, or the initial reticence to go along with things, and then they finally end up going along with it? What is the kabuki dance? Can you describe what happened yesterday and what the president said and who he turned around and how that works?
Well, I think some members in the House really would like to see Tom Emmer's work to legislatively block a central bank digital currency being issued, make sure it's turned into law, meaning that the bill doesn't just pass the House and then go over sit in the Senate and not garner 60 votes and then become law. So that is one of the core reasons why they wanted to talk to the Speaker and have some more discussions with President Trump and how to make sure that they could get that bill into law. I think those discussions actually continue. I support the policy. I also would reiterate to your viewers that it's illegal for the Fed to do a central bank digital currency without this bill. So I view this bill as belt and suspenders, directing the Fed that they cannot do a central bank digital currency without a specific authorization of the Congress. I think Article 1 makes that clear, and Jay Powell's testified several times over the past 2 or 3 years to that effect.
Just shifting gears a little bit, Doge was going to do you remember what it was going to do? Was it trillion? It was at least hundreds of billions, and we're at 9 billion, and the Republicans can't do a rescission bill for $9 billion. Why? And what? I'm echoing some of the sentiments again of an editorial here, but why is it so hard to cut a mere $9 billion, and how is there any hope to ever get 24% of GDP? What are we going to get to, 23.9? And the political capital that it takes just to get to 23.9, it probably loses the midterms?
Every spending program in Washington, no matter how microscopic, has a huge group of constituencies pushing it. You remember President Reagan's admonition, there's nothing so eternal as a temporary government program, and I see it being borne true every day. We have a $2 trillion deficit and over $6 trillion federal budget now, and we're simply trying to tweak $9 billion with a B dollar cut, which, by the way, is only rescinding unobligated funds. Repeat, it's only rescinding unobligated funds in fiscal 25, and we're debating right now fiscal 26. So it's important that we got the big, beautiful bill done because it had significant, well over $1 trillion in spending cuts, permanent spending reforms that will lower future spending, and the tax incentives to grow the economy. So that's why budget reconciliation is a powerful tool. We're now debating FY26, and I hope that that number will continue the march back towards pre-pandemic spending approaches. That's what we're trying to do, is claw that back, and I hope that FY26 spending will be at the FY25 levels or below in some categories, even though we're boosting in national defense and homeland security.
French, in your view, the question of whether the president can fire Fed Chair Powell, will it ever come to where we're trying to determine whether that's possible, or is this just jawboning at this point? What are you hearing, and what do you hear from your colleagues about what they would urge the president to do or not do in this case?
Well, look, Chairman Powell's term as chairman is up next May, and I believe President Trump has an appointment to the board that's open in this coming February of 2026. And President Trump's own analysis and that of his Treasury Secretary is that he cannot fire Jay Powell. And as I've said many times on this program, even though we believe in an independent monetary authority and Congress created the Fed back in 1913, it doesn't mean it's not subject to criticism, and every president that I've certainly worked with over the past 40 years has had plenty to say critically about the Federal Reserve and its policy. But I don't see the president firing Chairman Powell, but the president is certainly actively working with Treasury Secretary Bessent on candidates for that position, which will be open next year in 2026.
Well, we spent a lot of time talking about how much money that's spent. It's not even taxpayer money, and that just, it looks like something's brewing when you spend that much time. All the president's men and women are talking about cost overruns, and I mean, didn't that look like it was getting more serious or more possible with all that?
I do. Well, look, I think that DOGE left the Appropriations Committee much more informed about FY26 on how to increase productivity, lower full-time equivalents, and that's what the Appropriations Committees are hard at.
Okay. Chairman Frenchill, thanks. Up next, we got
PPA. Thanks. Good to be with you.
Okay, thank you. PPA, data, Squawk Box. Be right back. PPA.
Welcome back to Squawk Box. Rick Santelli here, live at CME HQ with inflation data, wholesale inflation data, breaking news for the month of June. PPI comes in unchanged. We're expecting up 0.2. Unchanged would be the smallest inflationary wholesale increase in it since it was minus 0.1 in March of this year. Strip out food and energy, it remains zero. Unchanged, zero. And that would once again, that would comp towards April when we were -0.2, which by the way was lowest inflation rate going all the way back to April of 2020. If we strip out food, energy, and trade, unchanged. That also would comp towards April of this year. Now let's take a bigger view, year over year. Year over year headline expected 2.5 comes in 0.2 light, 2.3%. That would be the lightest in the Wayback Machine going to September of last year. If we strip out food and energy, up 2.6, a tenth light, and that is 0.4 less than the rear view mirror, which was up 3%. That 2.6, well, we have to go back to July of last year, 1 year, and that was 2.6. Find a lower number, you're in April of 24. And finally, the year over year, ex food, ex energy, ex trade, 2.5%, 0.2 lighter than 2.7, 2.5. Wayback Machine, you're equally where we were in November of 23. To find a lower number, you're in February of 21. Now, that is all very good news. These numbers are less than expectations. They're sequentially less. However, if you look at revisions, that changes things. The revisions are coming through on a month-over-month data. So last month we had up 0.1 on month-over-month, all three metrics. The headline, ex-food energy, and trade. Those have all moved higher. Up 0.3 on headline, 0.4 on core, and 0.1 ex-food energy and trade. So we could debate that there was a hump there, but no matter how you slice it, these numbers are better than expected. Although the wholesale side isn't getting the same horsepower these types of numbers would have got on the consumer side. Yesterday, interest rates are moving around a bit to the downside, but hovering very close to where they were. We're at 447 in a 10. We're now at 446. 446 is down a couple of basis points. The pre-opening equities like the number as they make new Dow future highs. I want to point out something. There's a lot of talk, of course, about how interest rates have been moving higher, and indeed they have. Yesterday's close in the 2-year was roughly a 1-month high yield close, and the 10-year 1.5-month high yield close, and the 30-year bond this morning they hovered at a level that would have been a 2-month high yield close. But remember, we had the NASDAQ close at an all-time high yesterday. The S&P's only a few days behind. And the Dow, well, you have to go back to December to see the highest close, but we're not that far away. To me, this is old school. Equities going up, interest rates going up. It's kind of the way textbook economics taught us, isn't it? Becky, back to you.
Hey, Rick, we were just sitting here talking about what you would expect to see. If there was more inflation on the way, you would expect it to hit producer prices before it hit consumer prices, wouldn't you?
That would make sense. But I think the tariff pass-through issue makes things so complicated with how much was pulled forward, how much was pulled forward that didn't sell, how much was pulled forward that's going to distort everything downstream from here. So yes, I think just on the surface what you say makes perfect sense. But I think nothing makes sense anymore when it comes to some of these trade issues. These are one-offs. They're very difficult to model. And as Mr. Cohn said this morning, and we've been discussing the same issue, you know, when a tariff move happens, it's a one-time thing. The way inflation is calculated, it's a month-over-month change. Comes, goes, and it's gone. It's the compounding nature of inflation that the data doesn't really capture.
But it just barely hotter yesterday, even though, you know, I saw in some publications they seized it as, you know, it's tariff inflation. And then cooler today, if it's just barely hotter yesterday and cooler today, do we break even? It's not here yet then, the inflation.
You know, I guess the best way to answer all these questions, Joe, and Becky kind of touched on it, if there was no tariff issues at all, how much would these numbers demand the type of scrutiny we're giving it? I don't know. I think they would pass mustard and we wouldn't say, wow, what's going on under the surface here we're unaware of. I think maybe that occurred more in the beginning of the year and the end of last year. You know, we saw some spikes in inflation, and I'm not so sure they had anything to do with the administration.
Yeah, Rick,
but to be fair about everything,
rising inflation.
The inflation spikes.
Rising inflation signals hazards in Trump tariffs. Is that true or false?
Yeah, no. No, and to me, another way to look at this that's easy is pre-Liberation Day, we had the higher levels of inflation in January and February. You know, to me, if you want to isolate something, do it properly. To me, nothing jumps out at me that's pointing tariff, tariff, tariff. Now, it also makes sense that at some point, we are going to experience some type of pricing issues should all this go downstream. But, as Mr. Cohn said, maybe the Fed ought to wait and see how the economy reacts. When prices go up, sometimes the economy slows. I think the Fed trying to anticipate and then using the unknown to try to calculate and calibrate monetary policy isn't the way I would do it.
All right, Rick, thank you. We'll see you later.
Thank you.
Joining us right now with more is Julia Coronado. She's a former Fed economist and the president and founder of Macro Policy Perspectives. And Julia, put this in context just in terms of the revisions for last month. What does that tell you? And do you have any idea what caused those revisions?
Yeah, well, we're going to have to comb through the detail to assess what that means. What I can say right now is that the inputs from the PPI that are relevant for the Fed's preferred gauge of core PCE inflation are a little firm. They're firmer than CPI yesterday already. We were tracking 0.3 month on month for core PCE, and it looks like the inputs that we're seeing from the PPI keep it at a 0.3. So that's a little bit firmer than the CPI. It means that the year on year is going to tick higher. So I wouldn't say there's like a 5-alarm fire on inflation, but we do see tariff pass-through on the goods side. And then what we're seeing on the services side is evidence of weak demand. In particular, travel prices have been a huge weak spot this year as demand falls from foreign visitors, as well as domestic travel is just weak. Consumers are just cautious. So that's an offset. So there's a lot going on under the hood. And what it levels out to is inflation that's still sticky above the Fed's target, and there's the reason for their caution.
Rick just made the point that watching through all of this stuff can be pretty complicated right now because there's so much noise. There's so many, the pull forward from people trying to get around the tariffs, the questions about how much those tariffs are going to be. How do you dig through it? How do you come up with the best answer you possibly can?
Yeah, so we look at the last trade war in 2018 and how long it took to see the relevant prices affected by the tariffs. And our judgment from that episode and other research is that it takes several months. Rick touched on the inventory issue. That's certainly relevant, especially for apparel. Everything that's being sold for the summer was already in inventory before the tariffs were implemented. So retailers don't need to raise their prices until we get to, say, back to school, fall, Christmas shopping season. So there are some lags in this process. I think one of the reactions to yesterday's report was you can clearly see it in furniture, in toys, in sporting goods, in computers. You can see those prices surging when the normal run rate is a slight negative on those prices. So we see them popping, and that means that we're starting to see the pass-through. We expect the peak pass-through month to be August, so we'll get a little bit firmer July and then a little bit firmer August. And then, as Rick said, then it subsides. It's kind of a pass-through, and then that inflationary impulse doesn't keep repeating. But it's going to take several months to get any kind of clarity.
Julia, thank you. We appreciate your time today.
My pleasure.
Coming up, Target has missed the mark for investors, down almost 16% over the last 5 years, while the S&P has nearly doubled. CNBC.com's Melissa Repko takes a look at why the retailer is struggling to win over shoppers and Wall Street. Squawk Box will be right back.
and make it count.
All right, welcome back, everybody. Joining us right now to talk about what's ahead for big box retailer Target amid plummeting sales and sluggish shares and sluggish sales. I can't say that. Amid plummeting shares and sluggish sales.
That's hard. That's a good one.
CNBC.com reporter Melissa Repko is here. Her latest piece on CNBC.com is titled "Lost Their Identity: Why Target is Struggling to Win Over Shoppers and Investors." Melissa, welcome.
Thanks for having me. It's a really complicated time for Target because it's facing a whole host of challenges, and that really came through in my interviews with customers, former employees, and suppliers, that the company is not only facing things like backlash to its DEI decisions, but also, and stiffer competition from Walmart, but also it's facing a lot of challenges with a lot of the traits that it was once known for. So a lot of the customers and former employees talked about sloppier stores, employees that seem distracted, and just not the same eye-catching merchandise that Target was once known for, kind of losing some of that cheap chic element, especially with higher prices now that they're seeing on shelves.
How many customers did you talk to? How many suppliers?
You know, I talked to a handful of each, and I tried to get a representative sample from across the country. And one of the things that really jumped out to me is they talked about Target as almost like an old friend that they missed, that wasn't the same as it was before. So the things that they mentioned that were really common across the board and across the country were out of stocks, that they would go for national items like laundry detergent or shampoo, and they just wouldn't find them. And those are the kind of commodity items that they can easily get at Walmart or Target instead. Walmart or Amazon instead of Target.
And what do the numbers show, like definitive data?
Yes, so if you look at the most recent quarter from Target, both its traffic and its average ticket decline. But for the past 4 years, Target has had stagnating annual sales. So really since the pandemic, when it saw a huge surge in sales, 15 billion in sales increases, it has struggled to really keep that momentum going and has faced a whole host of issues, mostly supply chain related, as it's struggled to kind of keep up with a lot of its competitors. And I looked at market research data from Indigari that showed that a lot of those customers are going to Walmart instead. So the ones that leave Target are going to Walmart for their next 3 purchases. Those are people who might be going to Walmart because they're finding better prices, a better experience, or better online speeds.
How do you break down which of those factors is the most important? Is there data that kind of narrows in on that?
You know, it's complicated because it's really kind of been a whack-a-mole of issues for Target, and I think that's why it's been trying to get its arms around how to fix the problem, and that will be what the successor of Brian Cornell will face in the coming year.
What about the successor to Brian?
So that is the big question here, Joe, because 3 years ago, Target announced that Brian had gotten a 3-year contract extension. That contract should end this fall. So a lot of investors are also waiting, what is the new playbook for Target? What is their plan to get back from growth to back to growth? And most recently, they had announced a enterprise acceleration office back in May, and they are leading that with the chief operating officer, Michael Fidelki, who could be the successor to Brian.
So are there rumblings, murmurings? I mean, with the stock price.
The rumblings are really, will they go inside or outside with the candidate? And
so
I think that will be
Brian. It's not going to be Brian.
Well, Brian's 66, and he got that 3-year contract
so
extension.
He's still very young. He's still very young.
But he's widely expected to be winding down his time.
Extremely young, youthful, a baby.
But Target is expecting a change, so I think there's a lot of anticipation of what that new plan will be to get that company back to growth.
Okay, Melissa, thank you.
Thank you.
Okay. Coming up next, the latest on the race for AI dominance. Jessica Lesson of The Information joins us right after the break. We're coming right back. Welcome back to Squawk Box. We're going to talk AI, the race for dominance in space. Joining us right now is Jessica Lessin, founder and CEO of The Information. Good morning to you. We're all trying to figure out where all of these, there's sort of so many different cross currents going on in AI, but let's start with just the biggest, which is this sort of huge effort by both Meta and frankly so many other companies now to effectively called acqui-hire, hire people, effectively buying companies without really buying them at these sort of astronomical rates and picking off engineers at these crazy numbers, and whether any of this ultimately is going to make sense.
Well, it's a big set of questions, Andrew. And what we're seeing is this race consolidating. It's been happening for years now, but these slew of startups that raised a ton of capital on the promise of building great AI businesses are now ending up in the hands of the big companies. We saw that with Windsurf's team going to Google most recently, but it's been happening for months. And I think the strong are getting stronger. When I sat down this week with Meta CEO and founder Mark Zuckerberg, it was clear that he feels they have the wind at their back in terms of the investments they can make, the recruiting that they're doing. And so I think it is a new phase of this race, and it has big implications, of course, for the investors in these startups and their employees.
Let me ask you a culture question, though, and this is something that Sam Altman has raised and I think about all the time. You know, when you start to pay people, $100 million at a shot, or whatever these numbers are, and maybe you can shed some more light on what those numbers really are. You know, what is the incentive for a lot of these folks not to put their feet up on the desk? Actually, I would say on Wall Street for a very long time, there were efforts to pick people off at crazy numbers, and invariably those deals never really worked out because those folks took the money. They were very happy to take the money, but it changes the sort of incentive structure with which they work.
I guess the winning the race for superintelligence is the answer. I mean, these researchers are motivated to crack open this research opportunity. I'm fascinated. They're actually coming over to companies in teams, which is one of the first time I've certainly seen, I guess, group recruiting in Silicon Valley. As Zuckerberg said to me, they want their team and they want access to the most compute, and that's about it. And that's how he's had success recently. And so I think we'll figure out how these massive comp packages, and when I asked Zuckerberg about these 100 million, 200 million comp packages, he brushed it aside. He said there were some inaccuracies. I believe broadly those numbers as packages are correct. And I think the question is, I mean, by all accounts, these researchers are very passionate. They believe there is a real moment here to do great work. But time will tell on your point, and also how other employees at these companies feel about their next door neighbor getting CEO plus like pay. I think that's a big question.
And the other piece of this, which I think about a lot, is how much of these quote unquote acqui-hire, as in acquiring a company to hire a person, or in some cases not even buying the company but just buying the person, this is sort of inverting the model in a way, is really an effort just to get around regulation. So instead of actually buying a company and merging them, because you'd actually have to go through the FTC and maybe the DOJ and others, all of a sudden you say, well, I'm just hiring some people.
100%. 100%. That's absolutely what's happening. We saw this. I think Microsoft's acqui-hire of the leader of Inflection, Mustafa, was probably one of the first examples of this, but Google has done it with Character and Gnome. And I think regulators are looking at it. They've said they're looking at it. Now, it's not as straightforward perhaps as other deals, but I don't think it's happening without scrutiny. I think it's happening, though, because the investors and teams in these companies realize they're not going to be spending the $100 billion on the supercomputers to win the next phase of this war. And so I think for the first time, we might actually see businesses that have 100 million in revenue already, because you can get real revenue traction in AI today, but that sort of go belly up and end up sort of in pieces across Silicon Valley.
Jessica, what do you think the end game is for Meta? Knowing you've known Mark for a very long time, you're friends with him. Your husband worked with him years and years ago. In terms of where they stack up relative to these other players that either have figured out how to monetize AI or not, given that at least currently it seems like Meta's planning to if they stay the course, be an open source operation, and whether they can make money doing that.
So the most interesting thing about my interview to me this week was Mark is defining a territory of AI that he thinks others aren't going after. Google's not going after, OpenAI is not going after, and he calls it personal superintelligence. He says, yes, solving all these economic efficiency opportunities in society is great, and people will do that. I want to be focused on how the billions of people who use Meta's products are going to make their lives better. I pushed him on this because I think it's a nebulous case at this point, but he talked about glasses. He talked about the 5 things in his head after a conversation that he wants to follow up on but doesn't. What if that happened automatically? So he's trying to define some new product turf. I have questions about the business models in that product turf, the feasibility of the product turf, but I think it is different from the very productivity focus we've seen with others. And then compute, I really believe that perhaps we're focused too much on the money that's luring these researchers, not as much the access to GPUs that's luring them. And I think he thinks he has a great hand in that race as well. But this is one of the first times I had heard him speak so much about personal superintelligence, which, if you're keeping score, superintelligence has lately replaced AGI as the buzzword in AI. So I think we'll see, but it seems like he's sensing a real divergence opportunity on products as well.
Jessica, it's a longer conversation. Look forward to having it with you again. We'll be right back. Thanks again.
Thank you.
Buzz.com.
Bank of America, Morgan Stanley, Goldman Sachs all reported results earlier today. Let's bring in Stephanie Link, Hightower Advisors, the Chief Investment Strategist and Portfolio Manager, and a CNBC contributor. I was on Fast Money last night, Steph, and I was talking about everything I talked about on Squawk Box. Now I want to talk about what I talked about on Fast Money last night. The BKX is up so much more than the S&P since Liberation Day that any stock movements, we probably can't really point necessarily to what was in the results. But with that caveat, who did great? Did anyone do badly?
The only one that was controversial, Joe, was Wells Fargo yesterday. And it was because they guided down on net interest income. And we've been waiting 7 years for the asset cap to be lifted at Wells Fargo. We finally got it, or they finally got it, and now they're going to focus on other parts of their business to grow. So like to gain market share in capital markets and investment banking, because that's really where the fee growth is. And if I can tell you the one theme for all of the banks so far, it's been fee growth. Okay. So I'm adding to Wells Fargo.
Great. Believe it or not, and we'll have you back and make it up to you, but we have to go. But thank you for that quick synopsis. Make sure you join us tomorrow. Squawk on the Street is next.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at post 9 of the New York Stock Exchange. Faber has the morning off. Pre-market equities are encouraged by this soft PPI print this morning. Unchanged on headline and on core. Yields back off a bit after the long bond hits 503. That was the highest since late May. Our roadmap begins with a fresh round of bank earnings. B of A, Goldman, Morgan Stanley, and more. NVIDIA with some new record highs. Jensen Huang talking in China about doing more business there. And the president reportedly preparing an executive order to help open up 401ks to private markets. Let's begin, though, with day 2 of these bank earnings. As we said, Goldman Sachs, Morgan Stanley with quarterly results mostly beats. B of A results come in mixed. Jim, the star of the show, maybe Goldman Equities, the best trading quarter in the history of Wall Street.
I was astonished, but they could make this much money. And by the way, it's a prelude. What they're saying is that investment banking is going to get incredibly hot. IPOs really coming together. They look what they've done. They've cut expenses. They're making a lot more money, and I think it's just their time. It's what they're set up to do. Wealth management was fine. I like wealth management. That's I go to Morgan Stanley for that. But I was just quite impressed that they are so bullish. See, that's something that I've not heard. I mean, everyone's circumspect, right? We've heard all the circumspect, and Jamie led the circumspect group. David Solomon led let the good times roll. Yeah.
Well, he does say, Jim, that policy rarely develops in a straight line, and we remain very focused on risk management.
Well, because he did cut back on the PE exposure, and PE was too episodic, and so you used to say, "Wow, it's up and down, it's up and down." But what I guess what I'm really focusing on is that I think that what he's saying, look, the big beautiful bill is going to get a lot of people going. A lot of people really want to do deals. I think he would say that the regulatory environment is certainly getting better. It kind of reminded me of like before things got really all convoluted. We had to have all the different regulatory stuff. And Jamie yesterday, by the way, did do this great takeout on all the different regulations, and it was astonishing. That's what, because your question I took very seriously about what is he saying yesterday about regulations and how regulations have not changed. And there absolutely is a series of ratios that are very punitive. But I thought that Goldman is saying, look, we've got a lot of opportunity here to be able to make a lot of money in M&A and investment banking. And wow, those are big margin businesses, because when you go to M&A, I used to go to the M&A floor, and there was like 6 guys there, and they're each making $17 billion. And I'm like, wow, I wish I were on this floor. I got the floor that has 100 people, and they're making like $7 billion. So I just was very impressed. Now, we have some downward pressure on the group, and I get that.
Is that just a negative halo out of the Wells guy?
Yeah, well, I mean, Charlie really was trying to shift, Charlie Sharp.
Right.
Really trying to shift the business, and in order to shift the business, you have to grow, and he didn't want to do net interest income anymore. I wish he had, but he's trying to, he's got a lot of catch up to do, and he's going to do it. He wants to catch up in investment banking. He wants to catch up in M&A and in trading. So like he has to reposition the bank. I just think the banks fall because there's this overwhelming belief that the banks always open positive and then they come down when the conference calls, when it just doesn't sound as bullish as they were hoping.
Well, I think to me it's sort of a classic beginning of the quarter. The stocks run up hot in advance. Yeah. They back off a bit on the print. By the way, Citi, highest since 08.
Well, look, Citi was great. I mean, every single metric was great. You know what I think about Citi? Their comparisons are so easy because they were so bad. And, so the worst is first. They just can't do anything wrong. Wells Fargo suddenly can't do anything right. And that's ridiculous. Charlie Sharp is a great banker. Let me go back and forth with Charlie. I mean, like back last night, I was saying that I'm sipping some cheap scotch from my dirty linoleum.
I saw that tweet. Yes,
it really was. I was back to Johnny Walker Red, which also can remove paint. It's really incredible. It's got dual things. Hey, by the way, they replaced the person.
We're going to talk about Diageo in a bit.
Maybe it won't be as good a paint thinner.
Right. Morgan Stanley, Jim, equities not up 36 like a Goldman, but 23 is not bad.
Yeah, I love it as a wealth management play, and I think Ted Pick's doing a remarkable job. Doesn't get a lot of, I don't know why he doesn't get a lot of praise for it. Oh, down 2. I mean, okay, really, like it's bad. Now Morgan Stanley ran up very, very big, and I think that there are some lines in there that are, when you compare it to Goldman. There are some lines in Goldman that are better.
Yeah.
But I like Morgan Stanley as a sticky fee business, and that sticky fee business is it's just a incline. It's like a machine. So it's a rigorous machine. So if you want to sell it down 2, go ahead. If you want to think that it's therefore down 2, maybe I ought to sell because it's going to go down 4. I see that. That's what happened with BlackRock yesterday.
Yes.
Be my guest. The banks came in too hot.
Yes, as they often do.
Yeah.
As for B of A, Jim, we did get this small revenue miss, NII miss, but loans up 7, prior quarter up 4.
Oh, Bank of America's doing incredibly well. They're spending a lot of money on technology. They really cut their headcount. By the way, when you see the headcounts at Wells Fargo and you see it at Bank of America, you realize AI is there. And no one wants to say, you know what, I brought in AI and I'm saving, instead of 5 touches, there's only 2 touches. These places are all very different from like in a firm where there's like no touches, which is totally set up on machines. They're getting very mechanized. I'm going to use mechanized. I don't want to use digitized because it's mechanized. What they're trying to do is make it so that when you call Erica, any one of these, what happens is you get them and there's not people. You can use machines.
Of course.
Machines are more accurate.
Yeah.
Pretty soon, machines are going to reason, and then we're going to say, okay, well, why do we need that person? The answer is compliance. We'll need that for compliance. We need some humans for compliance at a certain level.
Right. Meantime, there's some comments about the macro from B of A. By the way, net charge-offs flat to last quarter, flat to Q2 24. This is what Brian Moynihan said about the consumer.
We continue to see a solid consumer. Spending data, you can see on our page 21 of the deck, improving credit quality that Alistair talked about from already strong statistics, plenty of household net worth growth in the market growth, and also the account balances, again, staying strong above where they were pre-pandemic.
They point out, so much balance sheet strength among the consumer, and that corporates, in their view, remain profitable. That's why you're not seeing big swings in behavior.
No, look, Bank of America is just a classic good story, but it's not up nearly as much as the others. It's got a PE of 12%. You keep searching and searching. What's the heck the matter? And you maybe come back to Warren Buffett still selling stock, and he doesn't sell in one. What he does is very annoying. He puts it, or whoever's handling it, so it's out there every day. And you can't clean them up. And I think it's really been a terrible lid on the stock, and the stock will be much higher. However, he did great things for the bank, so it's not like the bank's going to say, well, Warren Buffett's killing the stock. Warren Buffett, some people feel he saved the bank, and he cares about taxes. But if you take a look at what's happening on a trading side, I think you find people just say, oh, God, he's back. And that's what happens when you're in trading desk. Probably they won't say his name because there's great confidentiality, but they'll say, the whale's back.
Yeah.
Whatever they want to call him, the porpoise. I don't know, what do you call it? The T-Rex is back.
Yes.
They make up names because they're really silly little. I was one of them.
To date, have financials set a tone for earnings season yet?
I think they've set a tone, and they're not going to want to say it because there's such internal worry that they will come in. It'll sound like that they're anti-PAL, which nobody wants to be. But the tenor is, with the exception of Jamie, things are really getting better. The regulators are listening. We got to change some of the rules, but we're able to do a lot more. And there's a sense that that a cloud is lifted. Now, we in the media tend to think that the cloud is heavy on tariffs. I have the good fortune of talking to all these people. And I'll ask them about tariffs and say, oh, yeah, that could be a factor. I mean, it could be. They're not like, I mean, there's this new rap that's developing on Wall Street. Tariffs, maybe they're good. Tariffs, the trade deficit was good. Tariffs, yeah, so maybe the price of tomatoes is higher. Like, go to Costco, get better tomatoes. Well, Costco tomatoes are Mexican. Don't sweat the program when it comes to tariffs. This is a new narrative that the media has not bought into at all, because the media is looking at yesterday's CPI, and they're saying, whoa, that's not true. The tariffs are really at work. But the guys involved in this industry, they want very much to say, President Trump's doing a good job.
Sure, because saying the opposite can be punitive.
But they're saying it privately, too. They don't want to. There are other aspects of President Trump's presidency that I think they're afraid to be affiliated with. And I think these are social issues. I tend not to talk social issues, which is why when I go to a restaurant, I'm accosted because I'm regarded as being ridiculously pro-Trump because I like the fact that NVIDIA got to sell in China. No, I mean, like, that was a big non-Trump. Trump, a lot of people are feeling that Trump is changing, that Trump is more Besson. Now I'll go home and I'll get ridiculed. That's okay. I'm used to being ridiculed at home. Whatever home I'm at, I get ridiculed.
It's your own house.
You know, but I do know that the tenor is changing, and it's always like this. Look, I was against it, but there are like some things he's doing. But don't mind me. But there are some like the regulatory. Don't please mention. Remember, we're off the record. That's the way every conversation is going with me. And I think people have to understand when it's off the record what they mean, because I think people aren't journalists. They're saying, listen, you can't use me. I didn't say it. Now, not for attribution means, hey, listen, I think that Broadcom's doing well, could break through to 283, and you don't know who I spoke to. But when I'm speaking to these execs, it's really rather amazing because, and they test you out. I don't know. Have you noticed that? I mean, I don't know. Have you know? I mean, like, do you think? I mean, yeah, I see some change. Oh, okay, then you understand. This is the way a conversation goes. And people at home they have the right to know what the conversations are like. And the conversations are not like, what a crazy man he is. I mean, can you believe that?
That was more the tone in April. You could argue.
That was the tone in April. Now the tone is, well, I don't want to come out and say that he's great, but whoa.
We will talk to David Solomon this morning in the 11 a.m. about Goldman's.
No one calls him Solid. I just made that up. Meantime, David is. He should be crowing. The stock will be down because people. It's like, look, BlackRock was at 1,130 yesterday. I was thinking, well, that's too high. Well, they took care of that. They took it down 90 from there. By the way, they don't think that anything's bad because they lost one account. And there's money moved out, but they're replacing with higher. With higher fee business. Every one of these companies is saying that they did fabulously. Now, I deal with companies that say they don't. Like, wow, I'm sorry we missed. This is a race. I hope you noticed that we're the best. Citi was the best. And that's because they were the worst. And after that, JP Morgan was the best, but Jamie did the most complaining. But also, Jamie was kind of like Jefferson. President Jefferson.
In what sense?
Well, he's like worried about the separation of powers
he manages risk.
Right.
That's
By the way, all these guys, like, no one said to me, Powell's a bum. Everyone said to me, Powell's great. They all really like Powell. And nobody likes him to be ridiculed.
We're going to talk more about the ongoing parlor game about the future of the Fed chief.
Oh, yeah.
Take a look at the pre-market, though, as we do get some strength from some of these results. We'll talk some crypto. Got a bunch of calls and price target increases on names like Disney, Amazon, NVIDIA, and Google. Stay with us.
Welcome back to Squawk on the Street. Rick Santelli here live at CMHQ with the rest of the breaking news of this Wednesday morning. Our June look at industrial production capacity utilization. Production up 0.3%. Triple expectations. We're looking for up 0.1. And in the rearview mirror, -0.2 now jumps up to unchanged. -0.3 is second best number of the year, outside of February when we were up 1.04, excuse me. On utilization rates, also better than expected, 77.6. Following an upwardly revised 77.4, that's 77.5. That would be the best just since April, but it's solid. We're starting to see a definite utilization stabilization and industrial production numbers firming up. This is a good sign for manufacturing, and of course it follows this morning's PPI. Cooler than expected on the current read, but definitely in the rearview mirror there was some upward revisions. Interest rates, well, we're hovering at 4.46 in a 10-year. That's down a couple of basis points after yesterday's close, which was virtually at a 1.5-month high yield close. Squawk on the Street will return after a short break.
I'm here. I'm here.
He's here.
Okay.
I hope to have a great future here.
You do?
NVIDIA has been coming to China for 30 years. As you know, China is the second largest technology market in the world. And it is also growing very quickly. And so this is a very important market. There's a lot of very dynamic and innovative customers.
Well, you're saying all the right words, aren't you?
A good supplier.
You're saying all the perfect words. China. China. China.
That's NVIDIA's Jensen Huang in Beijing overnight on doing business in China, Jim. Interesting. One report said he told the reporters he would love to buy a Xiaomi car, for example.
Well, look, one of the things that I think that we all are trying.
Goodbye, you idiot. You didn't respond to my message yesterday, Jim Cramer. Jimmy said, what did he say to Jim Cramer yesterday? He said, Wall Street is very much progressive liberals that trade around politics, not fundamentals. Well, we've got a couple next resistance at 62, 625.13. So we're going to lift this up to right there off the 200 at 622. Try to search using duckduckgo.com. See if it works for you. Never heard of it. Is that a scam? Never heard of it. You're going to have me type something in here that's going to fuck up my computer? It's alternative to Google. It's a very, very stupid name. Switch to DuckDuckGo as private and free. Well, I'm not going to do it right now. I'm happy where I am. Quack, quack. What would somebody call it, a duck? I mean, quack, quack. Quack. Someone foreshadowing today going to be a good day. Whatever he means by that. Someone foreshadowing today. That means... Oh, I see what he's saying. If anybody else wants to donate to my upcoming vacation, please private message me. Only had one participant. It was very generous. So what's this here new stock we're going to be looking at? BMNR. BMNR. What? That ain't up. Oh, BitMine shares rise a bit after Peter Thiel, founder, funds acquires 9.1 1% stake, so we got an activist. Now I already pulled back to support. Actually broke. Oh, no, it hit support. Yeah, it held support. $46. And we got to break the 200 before I jump in it. At $48. Okay. Well, I have 2 minutes left, and I have a confession. My pronoun is male. And I know what a woman is. The other day I heard Hillary talking about the glass ceiling. I said, what the f are you talking about? Your glass ceiling now is for 28 pronouns? You have no clue what the glass ceiling is, bitch. You... And I'd call her that too if I ever saw her to her face. Because that chick does not turn me on. I'd have to ask her, are you transsexual? Okay. Now. Uh-oh! Platform not up. There's a knife to VWAP on Spy. Spy VWAP. Well, let me see here. Spy on the 16th, the 624 strike. Damn, I missed it. See, I screwed up. I wasn't paying attention. Now we're competing against these fat cats, which they all are upset because they didn't get to run. Retail traders are controlling their destiny. Okay, here we go. 85 cents. And 84. Get ready to take it here. There's my triggered alert. At 82 cents. Spy calls, scalping lotto, July 16th. Strike 624 at 0.82. No, 0.83, excuse me. We're at 95, scalp it. 102. This ain't no game. Oh, hell. Woo! 0.92 cents. Thank you very much. I'm going to the beach. So that's called a beach trade, just in case you didn't know it. Kind of break the ice. Yesterday was a red day, so I got to make $2,800 today. Now I'm going to set an alert on the VWAP here off /ES or off the 200 EMA. I'm having a little issue here. There's 106. How'd I get 92? I got more than 92 out of that trade. Okay, on the 30-minute, we've got dojis, which means we're getting ready to squeeze. We got to break the 200 on the 30-minute /ES. Let me clean. What's going on here? Did I just see? Okay, let's get that off of here. Let's clean this up. Okay, get ready again. Whoa, Bobby. What the hell are you doing? Bobby, your mic's on. Not no more. Sound to me like he's whipping his old lady's butt. Having a little war inside the house. Bobby, can you still hear me? No, he's gone now, ain't he? Bobby's a badass. That might have given Funk a flashback. Yeah, we heard some secret stuff in there, Bobby. I think your ceiling fan was on too high. So I got a pivot point on SPX at 62.59.91 today. I haven't touched this chart at all. So if we break that, I'll jump into trade. Support. It's going to be a head and shoulders. Could be right around. Oh, here we go. Let me get this ready just in case. Oh, it was the fan? Okay, get ready. SPX, inverse head and shoulders. Let me see here, the 16th, the 62.75 strike at $3. Okay, watch this real close right here. What am I doing? SPX Lotto. Scalping. Today is July the 16th. Strike. $3.30. Strike is $62.75 at $3.30. So this is off the 9. And we're at 390 right now. So I could get out of this, but I'm going to see if we're going to bust open this here. 5-minute calls. Yeah, it's lagging a little bit here too. We're going to see if we're going to break this resistance. Tape looks good. You can get out now if you want, if you're a little bit chicken. I got 3 contracts at 330. At 390 would have been a good spot. Now we're at 340 again. Nope, 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 nope. Ooh. Okay. Back to 330. Well, here we go, back to 3. We gotta hold this, or I'm gonna drop out of this stock here if it doesn't hold this. $2.90. Now I got 6. Got the head and shoulders going on here. Got a megaphone. It's got a hold right here. There's your megaphone right there. So I got 330 and 290. Come on, baby. I told the IRS this morning, I said, we got Billy Long down here. And he's a politician from out of here, and I told him, I said, tell Billy Long to quit kissing her ass up there. Washington. Let's see if we can get, I'd like to get a different color in here. I wish I had like a purple. None of these colors are bright enough for me. I think I'll change these to blue for right now. The second one or the third one? Probably that one. Got a head, inverse head and shoulders. I just want to see if this thing holds. Come on now. Up. I might have to stop out of this. This ain't looking good. Okay, 245. $2.45. Still holding up support. Now quit faking me out. If this doesn't hold here, I'm going to stop out because I think we could have a pretty good drop. Investors digest inflation report as U.S. equities futures post narrow gains. What they mean to say is we're going in the back room. We need to short this market because it's up too much. We don't want Trump looking good. That's what they mean to say. Oh, damn. Let's see what else is cooking while this was on. BTCS is up. Bitcoin. Game's up again. And I think that NU, oh gosh, look at it. NUWV. Didn't I look at that one yesterday? NUWE? Wow. No, sirs. The company securing a key patent. Looks to me like they're going to drop the ball here. I'm going to hold on a little longer. D-Pro is up 65 cents. RGTI is up. That's at quantum computing. SheBet is another one. SBET, Joby. I talked about that one yesterday. God. Joby's looking real nice. Okay. Coming in on double bottom here. And I'm going to add a lot. There it is. Let's see here. $160. I went to town on this one here now. I'm not going to tell you how many I have. Got a lot, let's just say that. I gotta get out of this trade. Let's have a good bounce here. 199, 190, $2 average. Come on, bounce it for me. Well, brought it right down there to Funky's support level after hours low. With a higher low. Come on, baby. I'm about even. Like to see it get back to this shoulder line. This is really... Shit. I'm not going to have 2 red days in a row now. We're at the VWAP on the /ES. We're at the 21 on the 30-minute on the /ES. 5-minute, we're at the 200 with a tweezer bottom with 3 black crows. So that looks nice. 2-minute, we're at the 200 EMA also with a long leg doji, which don't look too impressive. Then on the 1-minute, we got a symmetrical flag. Almost an ascending triangle. And what about NVIDIA? I need to go through these here real fast. This thing. So far, I just don't understand. NVIDIA is at 170. Is NVIDIA overbought? Baba. Boeing. And what else? AA. Here's one that I called out for a gentleman. I forgot what room that was in. AMD, Apple, missed Apple off the 200. Now we got Meta here. Meta's got a wedge. Oh, damn, man. What is the double bottom there? Well, Funky, we're going to find out here, buddy. $62, $41, $68. Is that what you got? This is the last resort right now. We got to turn around here. Johnny? Watch it here. Everybody hear me okay? We got to break the 9. I'm not feeling that bearish yet, but we'll see. Come on, baby. What else do we like that could turn around now that's at a double bottom? NVIDIA? Or is it still up a little bit too much? Pot stocks are down. SMCI still expensive. NVIDIA bounced up a little bit here. Jesus, come on. Oh, Goldman Sachs took a, or was that BlackRock yesterday? I want BlackRock to drop a little more. Oh, we come close. I think it might have got tripped. No. Yeah, I think my alert got triggered yesterday in BlackRock. See, Jeffries adjusts price target to 1196 from 1210, maintains a buy rating. Wells Fargo lowers it. Goldman Sachs raises it, the price, to 1163. JP Morgan raises the price to 1093. Morgan Stanley cuts the price. So they've got mixed feelings about BlackRock. Okay, well, I'll just keep holding on here. I don't see any alerts going off that I've set. SPY has to break 622.66 to become bullish. I gotta do one of my bank statements today and get to my accountant after hours. I gotta pay my second quarter taxes. I really hate paying taxes anymore. I used to enjoy it. Not till Biden got in office. Don't look it over too hard. Yeah, it's a sucky day so far. New lows. Niles at 402. AMC almost hit my support level at 50% pullback on the Fibonacci at 308. Missed that one. Microsoft Zoom was pumped the other day, and it's down. AA. We're trying to work my way out of this trade. I think I'll have more money in this one than I'll ever have in anything that I've ever traded. So that's not good. I'll tell you how much I have in it here in a second. I got quite a bit. Average now at 145. Kind of reckless, but we'll see. Come on. I got the 6275s still. And now I'm almost even. I think, once I should start really throwing a lot of money in my trades and start really making the big money. That's how all my other buddies did. I know some of them that throw $250,000 in a trade now. I'm praying. Stop praying. We're at the 21. Come on, break. The video has an ascending triangle on the 1 minute. There we go. You got 3 white soldiers forming. Yeah, that's suckered. This will be one I'll sell too early right here. I'm up now. Can we get back to the orb? Damn, I should have sold it right there. Might lay out at the pool here today for lunch. We don't have a cloud in the sky for the first time in months. Damn. Kroger recognized as the best place to work for disability inclusion. And what the heck is that? DISABILITY, inclusion. That's the first time I ever heard that term. Disability inclusion means ensuring people with disabilities have the same opportunity and access to those without disabilities. Yeah, nothing wrong with that. I know too many people that are on disability that don't need to be on it, actually. Ex-druggies and drunks. Obese people. SPY has a head and shoulders. We got to break the VWAP before it becomes bullish. Let's go. So once I get out of this trade, I'll have a clear mind. We're back to the 63. And we bounce off the head and shoulders. I think that alone would be a good catalyst for the stock to break out. Kroger. Okay, let's go. Need you to break. It's a double top after 3 soldiers. I guess y'all can hear me okay. Can you? Bardo, are you in anything? Funky, are you in anything? Okay. Well, be patient right now until we break to 63. We got a tweezer bottom off the orb on the 30-minute on the /ES. And we hit the orb resistance on the 5-minute. And same thing with the 2-minute. We got to break to 63. I think I do believe I'll be green on this trade. Just got to give it a little bit more time. There we go. I mean, I like how it consolidated here off of an inverse head and shoulders with a higher low. This is PDD is one of my China favorite trades. Oh, and what's that? Tiger, TIGR. I'm green now. Well, it was TIGR. Tiger's pulled back. Asian equities. ZKIN is one that Stock Authority and I used to trade. ZKIN. That's another China. And I talked about Kodak the other day, and I saw it someone had it up the other day. KODK. We were talking about it 2 days ago on a pop. And what else? AMD's pulled back to the 200. Apple had a breakout. Meta called that 704 a little bit ago, but I didn't jump in it. Mentioned it. We got 710 resistance, 711. I gotta go put on my slippers and I'll be right back. I should have got out of that even, but we'll see. USAR. Oh, what's my call here? There we go. You go check my phone. Come on. Looks to me like the 200 EMA is resistance to break on the 1 minute for /ES. I'm 75 and I have $1 million in the IRA. Why do I feel guilty? What? Probably because everybody's fucked. I'm 75. Well, he's a psychiatrist. He should have $1 million in the bank. His current job pays him 10 grand a month after taxes. I was up to 10 grand a month at one time in my business, and I kept getting robbed and mugged and shot at, so I had to cut my business down by 3/4. I had 5 wreck, 3 wrecks, cars stolen. Shot at. That was mostly during the Obama years. 9 felonies, I think, I had against me. Not me, but perpetrated on me. Well, we touched the shoulder for the right time with a higher low. So let's see what happens here. Oh, slash ES. I'm still in them here. Tesla. I haven't even looked at Tesla today. Tesla. Triple top on Tesla right now, or nope, not yet. A little bit higher, 320.24. See what happens there. Anybody in calls? We're back at the orb again on the SPX. Bob at 114. BTBT used to be a Bitcoin trade for me. Penny stock. And Wolf, WULF. Abbott's on here. Oh, ABT is another one for this week. Earnings. Double bottom. Well, Midbest Cranky Fest. Been invited to go play some jams. They're retired. What is this? Midbest Cranky Fest. Come on, go. We're waiting. Looks like the slash ES could drop more the way it looks. I mean, it could. I'm not saying it will. scalping day. I just scalped these here, the 62.75s. I still got them, but I've been scalping them in and out from 95 to 130, 120. It's just kind of saved my ass here. And we're back down to support, so I'm getting back in them at 85 cents. Same 62.75s. This is my fourth scalp, counting the one I'm holding. If this doesn't hold here, I'm going to get completely out. Because these little bitty scalps have kind of saved me. This is my number 4th from 95 to 120, 130. Now I'm at 85. CrowdStrike took a slap in the face at the end of last week and the beginning of this week. /ES still holding the head and shoulders on the 1 minute. Come on, baby. GM's just too much. Ford's pulling back. They raised price target on it. Barclays raises it to $11 from $9. Ford to spend $750 million to remedy fuel leak issue in certain vehicles. So that's why it's down. Ford Motor recalls some Broncos Escapes for fuel injectors. Fuel injector leaks. Why Stellantis, Ford, and GM stocks aren't getting hit by the French scare. Got a Darvis box with higher highs on /ES. More buyers and sellers. Since 9:07, 10:07 Eastern. Ah, darn it. I'm about even for the day. There we are, man. This is really tight right now. Be careful. Got major support right here. Major support on the ES, on the SPX and SPY. Put my shoes on and I'll be right back. Turn this air conditioner off. 78 degrees in here and it feels like it's 60. They said there'd be a lot of volatility this week, and Hickey was right. After I get out of this trade, I'm going to do my checkbook. Then I'm going to cook a burger. Anybody stuck in a trade? Anybody stuck in a trade? Nobody? Yeah, I've been trying to get Yoko back in here. Okay, here we go. Back to 85. SPY at the 200 SMA right now. SMA. We're at 95 cent dollar. I'm up 150 on this fourth scalp on the 62.75s. We just now broke the 63, I think. No, what is this? Yeah. We've got a double top on the 2 minute on the /ES. And we're at the 6 orb on the 1 minute. And we broke the 5 minute orb. And resistance is going to be the 200 at 62.98 on the 30 minute. $62.98.25. Come on, bust a move. Nice little rebound on IWM. Mirror. I forgot about mirror. Double top on BTCS. I'm up $20 on contract. $110. We're at the orb on the SPX on the 1 minute, so this is an exit idea. If you got them at 70 to 85 cents, the 62.75s. We got a small wall here. There we go. Nice. 120. Thank you very much. That's my fourth scalp, and I'm still in them. And I got more, so I got a lot of money in this thing right now. But I'm scalping these for like under $1,000. The last 5. 4. Yay. Well, it's, I mean, my second initial trade didn't sound off very too good, but I'm still in it. And we're at the 200 on the 1 minute. You got earnings on M coming up. Too high. That's probably what I said in the video. They'll pull back. This House of Representatives just bought 30K of 3M stock. I think he made a major mistake. Representative Julie Johnson. So let me see if she has she's brilliant. I can look at her and tell you if she's full or not. I think they need to stop this insider trading, that's for sure. Well, she's a Democratic Party, member of the Democratic Party. We're back down to 75 cents. Should I do it again or should I go eat? Ooh, God, look at that knife. God, I'm glad I got out of that. Dang, I missed that. Drop. I'd have bought that. Let's raise the price up and get out of these 75s and move up to the, I don't know, which ones do you like? 70s? There's 120. So let's change this up here. I'm looking at the 6270s now at 115. There we go, 110. Okay, get ready. $0.95. There it is. And again, risky. Jesus. What just come in? We're at buck. Slash ES on the 5 minute hit the 200. We bounced off that a couple of times. And hold the head and shoulders right now. We're at 105, 110. So, what to do? Should I, 130. That gummit, missed it. I'm still waiting for the sucker to break. Man, I missed it. I should have sold that. Well, I could have got 120 for sure. Have we looked at Mr. yet? That NUWE is pulled back. Mr. No. Small Darvas box and Coin had news. Yeah, Coin popped from yesterday. Kathy Wood doubles down on Tesla despite leadership exodus, dumps 22 million of crypto stocks. That was yesterday. Come on. We got the 6270s at 95 cents. We're at 130. I know you know what to do. And I'm holding some, because I still think we're going to break out, but I don't know. You went puts? What the hell's wrong with you? There's 150. I think about puts now. I got all out of them at 145. So that was a good trade. That really made a big difference in my portfolio. Good job, franchise. Sheba, did you get green? C minus. Yeah. Always clean. May I help you? Yeah, what's up, baby?
Hi, this is Addison. How are you?
I'm doing great, man. I just got out of a great trade.
Okay, sir. Actually, this call is regarding about state-subsidized healthcare additional benefits. So, according to my record, you do have health insurance through Marketplace, right, sir?
How'd you get those records?
Our company provides it, sir.
What's the name of your company?
Sorry, sir. We cannot disclose any personal information.
Then I can't disclose any information either.
Okay.
So goodbye. Sorry, we can't disclose any information. What the hell are you calling me for, you stupid bitch? Is that a good one, franchise? Lord, I'm sorry. Forgive me for what I've done. Sorry, I can't give you my information. Well, you fix it. Oh. Okay. Yeah, I think I deserve that C minus. I'll take it on the chin. But you ought to give me a good grade for the scalps. I can't give that can't disclose that information. Oh man. I can't believe she said that. We're at resistance. We're at the 200 and we're at 160. So that would have been a $650 trade. It'd have been $1,200 if I'd have held them. All of them. C minus. Wow. That took a lot. I was bold. F minus. Are you two colliding together? You and Sheba Magnificent? Don't be giving him no advice. There you go. I appreciate that. Franchise knows how to butter me up. Oh, okay. I'll take that. You see an engulfing knife like that, you want to jump on it. They're at 180 now, so I just left a ton of money on the table. $1,900 for that trade. I'm going to make $2,800 today. I'm going to do it. They keep pumping Lulu. They haven't got their pump out of it yet. Yeah, I dropped more. They've been pumping this thing around 235, and now we're at 224, 222. Lulu stock slips, underperforms competitors. Oh God. BNP adjusts Lulu at price target to 155 from 194. Yeah, there's $70 drop on this thing coming. What they say. Did Boeing bounce? Boeing hit the 200 on the 30-minute. We got a symmetrical flag. We kind of failed it. Well, that's support though. Maintains a buy rating. Goldman Sachs adjusts Boeing target to 257 from 226. Maintains a buy rating. JP Morgan has 230 from 200. These are all coming out today. Overweight raises price target to 230. RBC adjusts price target to 250 from 230. They got that big order in from Indonesia yesterday. Trump announces 19% tariff on imports from Indonesia. I thought they had a deal. They bought 50 planes from us even with that tariff. Okay, Boeing just had a drop here. Will we get a breakout or something? Oh God. Okay, watch this. Jimmy's at it again. We're going to raise the price target to $62.60 at $2 a contract. Nope, not, yeah, right about now. It's at $2. So let's see here. Opportunity. Get ready. They're at 155. You still have them puts that you got in? This is nice. I want to see if I can capitalize on this. 175. 6260s. Calls. What's this? Damn, man. What the fuck's going on here? Ooh. No. No. Ooh. What the heck? I'm right down at my trend line right now. So I don't know where it come from, but I'm back in. I've got them here. Jesus. See if there's any news on the SPY. Something bad happened here. Reuters reports Brazil government sent a letter about tariffs to U.S. officials on the 15th. Expressed indignation at U.S. Swiss trade deal with U.S. is awaiting Trump's sign-off. Any news? Anybody see any news? Oh, I don't know. We'll see here. I had a chance to sell them for a little bit, but right now I got 10 contracts. Funk, you see that coming? That's a good spot, Rob. We can drop much lower. What the hell's wrong with you? Is there any news? No, no way. Are you serious? The market won't like that. He needs his ass fired. False information.
You got false information. You got false information. You got false information.
Vegas says they're talking about it. $195, yeah. Let's go. Fire his ass. I gotta get something in my throat. Water, that is. I can get all. I got sold some, but not all of them. So we'll get back in them here. My throat's killing me. I'm about done. Touch this right shoulder right here at 125. $160 and 120. Average 140 right now. Well, I think it would be the greatest thing if he fired J. Powell. Because I really seriously don't think he's doing a good job, but they do. They like these high interest rates. I got one credit card that says 19% on it, and I said, "What?" I called him up and I said, I ain't using your damn card." And then about 3 months later, they sent me a letter saying if I don't use it, they're going to charge me. So I got to call them back up and tell them to cancel it. I don't want it. This Discover. So I ain't paying no, I'm not going to use it. All my other credit cards are 10%, 8%. And you're at 19. Why are you screwing me over? Is it because you're not running your company right? I said, Biden says this economy's in great shape. Why are we at 19%? Yeah, they're dumping more, Rob. Good job, Randy. Yeah, I'm seeing that. The market ain't gonna like this, that's for sure. Coin's at the 200 on the 1 minute. Oh, darn, 6,200. I'm not doing too bad right now, but I got stuck in another trade. I can't look at that chart. That ain't doing it for me. We could get down to 61.36 if we swing it. I mean, we can easily hit that 200. We hit it once before back here. 62.30, 62.32, 33. Another $70 dip. What puts did y'all get? $61.80s? God. I bet you just got CNBC all riled up. We'll see what they got to say about this. I know they're not happy. Let him know if you can make it. David Baker invited me to an event. The Mudhounds. Where are they from? Unleashing a groovy hill country blues rock sound. I wish I if I ever get back into music again. like that. They asked me to go play with them. Breaking news.
.2%. The bond market reaction as well. There's actually been buying with yields lower pretty much across the curve. If you look at the, actually yields higher now, moving toward the unchanged line, 4.481 on the 10-year yield. So bonds selling off, yields a little bit higher, which would make sense. I want to show you what's also happening with the dollar, where you are seeing the dollar weaken. It was stronger earlier than day, so this
We're
might
at
be
95 on my calls.
Of course, there are questions of confidence with U.S. assets, where the dollar and treasuries would sell off on questions about an independent Fed. Right? This has not happened before, where you have a president thinking about whether it's true or not.
110, yay.
We don't know. Actually firing a Fed chair. First of all, can he do it legally? Second of all, where's Congress? I mean, this has been Congress. He has had, Fed Chair Powell has had support on both sides of the aisle. Will the Senate Republicans finally step in and block such an action? We know the president wants lower interest rates. This is not the way to do that.
Yes, it remains to be seen whether or not this is just an extreme form of jawboning. We know Powell's been probably one of the most communicative Fed chairs with the Hill.
You're a liar.
But the curve is, I think, what's super interesting. I mean, you write about the short end as traders boost their bets on Fed cuts, but 30-year goes to 508. That will take you on a close maybe back to 23.
Yeah, so 10-year and 30-year yield move up, I guess, on bigger risk, right? And there's the 30-year, which you've been highlighting. We've seen a global rise in bond yields on the long end of the curve, but again, the weakness of the dollar is where I would look. If this president wants lower interest rates, I mean, deal with the debt issues. I mean, you could jawbone the Fed a little bit, but threatening to fire would, I think, raise questions about, first of all, as the legality, the Constitution, that sort of thing, but also about putting in place someone where he's just going to tell what to do.
Right, and what legitimacy
that
Fed chair will have with the markets, right? That's been a question.
We just heard Goldman Sachs CEO David Solomon express the importance of having an independent Fed chair.
Sarah, do you know how many millions Powell's cost this country with high interest rates? I'm tired of paying for it. We're at 135 right now. And I got these at 85 cents. So I'm going to get out of them. A plus, magnificent. These are the 6260s. Funk, are you on here? Has he been talking? You haven't heard him? Okay. Because I'm going to know if my microphone's screwed up. He's been busy at work. PLTR. I just sent a message to Squawk Box, said fire his ass. He's been way behind the curve. And Sarah's a snobby. I mean, I don't like her at all. I used to love her, but she's good to look at, but not fun to listen to. Yeah, I might go listen to these guys. These guys are good. Let's see if I can sit in with them. PLTR. Okay, well, I'm going to go get my bread ready. I'm going to make my buns today on my dash. I'm out of bread, so I got to make some. And I'm gonna cook me a couple more of them sliders. Now, this is going to be a suggestion on trading. So let's say you got your top 10 watch list. Trades, stocks that you trade all the time, over and over and over and over again, like I do. Like I used to do. I used to trade the same stock. I did a video seminar for a week on trading 5 stocks. And I told everybody that I would trade these 5 stocks within a week period. And some of them I traded 2 or 3 times, but I traded all 5 of them in that week. So if I'm sitting here and I get news like this, and the market just automatically drops, you're going to have a you're going to have a recovery reaction, because all it is speculation. It's algorithms. So like Nvidia or Tesla or PLTR or ones that have been really on the radar. Meta, even Netflix. So you're watching them top 10 that you got on your watch list, and all of a sudden you see a bunch of red coming in on them. You want to take your favorite one with the highest volume and jump in that trade. A stock that you've done successful in over and over and over again. It's just an opportunity. Like this AMD, for example, or NVIDIA, Apple, Meta, PLTR, double bottom. I mean, that would have been a great trade right there to a double top. Even the SPX, one I just got in and out of, because that's my money maker. I mean, I made more money on SPX than I have on any, even more than I have. Well, I've done well on Tesla, but Tesla was another one, you know. Tesla I traded for years, ever since 2010. And I was bull and everybody else was very bearish on Tesla. So here you are, a great setup on Tesla, right to the 200. I would have jumped on that in a heartbeat. But I was, you know, screwing around with SPX, so I didn't think about it. If I wasn't in a trade, I might would have thought about it. But that, I mean, that was a perfect opportunity. We can probably get a bunch of scalps out of this right now. If you listen to CNBC, the world's coming to an end. And we're flat.
Airline industry is cutting some capacity in September. I think a lot of folks will be listening to hear what United says on that.
Jared, I'm curious to know, do you tie the performance, not just of premium, but across the board when it comes to United, to how well the job market is doing? Essentially, as long as people have a job, they will continue to fly.
Yeah, there's definitely some similarities. That's one of the factors that we look at. I think, at a very high level, there is a really well-established relationship between GDP growth and airline revenues, and we expect that would continue to hold for the most part. There will be some
Boeing would have been a good one,
but certainly you need a strong job market to sustain growth in the business. You're going to get some periods of slowing. It's not a perfect correlation, but certainly that is one contributor, and it also falls into the strength of the business traveler and where that goes, because generally that's a pretty good source of revenue for the network carriers.
And Sean, is the strength of the business traveler enough to make up for if there is some weakness in the leisure traveler?
Yeah, I think airlines they're seeing the business traffic. It's still not quite as reliable as it was, prior to the pandemic. Even a few years ago, we had seen, a lot of bounce back over the last couple of years here. But, I think leisure travel is really still, an important source of revenue for the airlines. And, I think the interesting trend here is that despite some of the economic concerns, we continue to see huge volumes at airports. I think 6 of the 10 busiest days ever at U.S. airports have come since Memorial Day weekend, including an all-time single-day record last month. So, despite some of these concerns, there is that perspective where people are still traveling.
Sean, are you at an airport right now? I see a bag behind you, and it looks like you're in a premium lounge right now.
You caught me. I'm over here at LaGuardia right now, sitting in a phone booth.
I knew it. I was like, I think he is in a lounge right now. Great setup for this interview. You could not have done this at a better place. It's a great backdrop you picked there as well. All right, we've got United Airlines earnings due after the bell today. We'll see if they line up with how Delta performed. I mean, Delta certainly gave the shares a flight across the board because you saw sympathy moves off the back of those numbers, but United still underperforming year to date compared to the S&P 500. We'll leave our conversation there. Safe travels to you, Sean. That's Sean Cudahy of The Points Guy and Jared Billis of S&P. Thank you both. And thank you so much for joining us here on Trading 360. Download the free Schwab Network app. It's available in the Apple App Store. Tune in 24/7 on SchwabNetwork.com. Stay with us. You've got Fast Market with Tom White and Kevin Hinks up next.
Schwab Bank Investor Checking.
SPX is 430 now.
Investors named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award.
I'm done, man. This is it for me. I'm done for the day.
Cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals.
What'd you think about that there? Magnificent. 500% gain. Yep, false information. I mean, that was a perfect opportunity. They've been doing that for years.
Into their quarterly report. And then like Folio will have sentiment data on PepsiCo.
You got false information. 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 You got false information.
Line to go down, and all it did was fluster the markets down about 0.5%, and now they're rallying all the way back on the news that he's denying it. So I think this might be a case of the
we really got them fat cats rattled up big time
from rumors versus actual fact.
You know what I'm telling you?
I think that
I've been watching this market for 20-some years. I have never seen these idiots act like this before. Never. I mean, I seen it going on when they elected Obama. The market didn't know how to react, and it went on for a year. Every day we were down like 1,000 points, 600 points, 800 points, 1,200 points, 600 points, every single day. And it went on for months. Because they were afraid to call out what was actually happening. They were too much into inclusion, and I predicted that Obama would get elected 2 years before he even got elected. So I called the market crash way in advance. Way in advance, and I took advantage of it. And it dropped 50% from 12,050 to 6,500. And every speech he gave was about how he was going to distribute wealth, and he was going to go ahead and go after Wall Street. Once he became president, he was in bed with Wall Street. So he printed up a bunch of big bills, stimulus bill, and then he had an environmental bill and shovel-ready projects that never got shovel-ready, that went straight to the unions. So, I mean, it was too easy to read. And these people hate Trump so much. I have no clue why. I mean, these business guys in real estate, I know why, because he's cutting them off of that printed money that they've been getting. Trillions upon trillions, 37 trillion, not counting 130 trillion unfunded liabilities. And this is all since 2007, 2008. So he took the deficit from 9 trillion. Bush took it from 4 trillion to 9 trillion. We had 911, and then Obama took it from 9 trillion to 20 trillion. Trump took it from 20 trillion to 30 trillion. And then Biden took it in 4 years from, we had COVID, and then Biden took it from 30 trillion to 37 trillion, not counting the biggest gap up in unfunded liabilities ever. from Biden alone in 4 years did what it took Obama, Trump, that took him in 12 years to do. Unfunded liabilities, that means promises made, the increase of Medicaid, Medicare, welfare recipients, 20 million illegal immigrants. I mean, that's not even been counted yet, how much that's going to cost us. But now it's a whole different, it's just, I'm thinking just the opposite of these guys. These guys are nuts. They're actually gone nuts. With Trump deranged syndrome. He's the first business president we've had in there since, and Bush is the one that ruined capitalism. He's the one that brought in the stimulus package to begin with that ruined everything. This has been, some of my best trading has been under Trump deranged syndrome. Now, I'm not happy with him right now either, but that's because of the list. But that's it for my rant, if that makes any sense. Does it make any sense? Richard believes me. The list matters. It does matter. But you know why? You know why they won't give out the list? Because they're going to piss off every country out there. There's too many people involved in the list. I mean, I'm hearing names that I thought, what? What's he doing there? That one musician down in Vegas with the Tigers and stuff. And I mean, he got a hell of a list, and I think that's why they don't want to release it, because it would really piss off a lot of people. Israel won't let it. That's right. Israel's probably involved in it too. Old Netanyahu getting him a little strange when he comes to Epstein's Island. He was involved in the CIA. I mean, you know. But it could always be a new start, you know. The Clinton Foundation. All them millions collected during the Clinton Foundation as bribes. Hey, if you don't give us $20, $30 million, we might just accidentally mention that you were at Epstein's Island. I had a pretty good trade now. I mean, I made my goal today plus. It wasn't going to be like that with that C minus, but I turned it into an A. Rob, see if it touches that right shoulder one more time. I got this on the 2-minute. And if it holds that shoulder for the right time for the second time, I think we got a breakout. 60, up just above 62.25. That would be your low support. Or it holds a 9 and keeps going. Yesterday I lost $1,400. Today I've done threefold. Exactly what I told you I was going to do yesterday. Like every bad red day I have, I make it back easily. So I never get discouraged, if that makes any sense. And it's really important to know that. Just because you have a bad day don't mean that it's going to get worse. Because me and a guy wrote a song one day. We were sitting there talking about, bad luck. And we got to saying, well, hell, I've had worse days than this. And so we made a song about it. Bad days a whole lot worse. You break up with what you think was going to be your wife, future wife, and all of a sudden, a month later, you meet the finest chick you ever thought you'd ever meet. I got one right now that I know I could just crack the question to her. I mean, she's a babe. And she's just now starting to really get close to me, and I know that I can't break the ice with her. I want to, but she got 3 kids, and I don't know if I can handle that right now. Not at my age. I mean, she's really hinting around, like, I thought about, hey, I got $5 million. Let's go ahead and quit your job and let's get the hell out of here. But that would be a whole new lifestyle for me. Okay. Well, I'm going to go make my bread. Rob's back in the 6260s here at 130. I think still in them. I haven't even been on YouTube yet. Trying NCL's viral aqua slide coaster. You know, I think even releasing the files could get us in a world war. Yeah, Putin, what are you doing at Epstein's Island? There's 150 from 130. You're welcome, Robert. Oh, God, mannequin. I can't believe that lady says I'm not allowed to disclose that information. I think that's something else. I'm going to raise this alert up just a little bit to that shoulder line. And then I'm going to go make my bread and I'll be right back for my burger. I would expect. There it is. Baba. Mm. Can you imagine what AI is going to do? I mean, to the market, we'll be getting false information all the time. I'm waiting, Rob, for my entry. But $100 right here. But I got to get my food ready. God, it's already 11:20. How's YouTube doing, Robert? Aringa? Mannequin? Anybody else? I'm watching you. Hit the like button. Spread the news at Jimmy's Live.
It got a nice little bump off the Delta news. It kind of broke out of a triangle pattern if you're looking at the technicals, and it's coming back to test those those former resistance levels to see if they're new support, and that's kind of the setup leading into earnings this afternoon.
Yeah, Scott Kirby, last quarter, or he stated at a Bernstein conference earlier this year that the disruptions that they had at the Newark airport, and stated almost certainly they would hit.
Oh, I don't have my mic on.
If not for Newark, and that's a big hub for them. I have never flown United out of O'Hare, and it's a hub here, but. Joe, when you look at this,
you wear that like it's a badge of honor or something.
Well, it's almost like I should be flying United because it is a major hub for them and they're based here. But Joe, looking at this one, the option market pricing in about.
I'm waiting for this here.
How do you want to look at this one from an example trade?
We could bounce off the 50.
Yeah, the market's moved a little bit since I sent it to you. So we're looking at the August 1st expiration. So it's actually going to go beyond this week's expiration and beyond next week's expiration. Gives you a little bit of a buffer in case there's a bigger move. Looking to sell the 80 put. So, currently trading at 86.66 with basically priced in about a $6.50 move off our earnings.
Right about now.
Take us down to about that 80 strike. That the difference is, when I was showing this one, you took about $1.50, and I think now you can probably get around $1.80, $1.85. So you're getting a little bit more premium for it. That would take us back down to about that 50-day moving average would be kind of that break even on that. So if you're looking at $1.50 as the credit you're collecting, your break even would be that $80 strike minus the $1.50 takes you down to about $78.50. Like I said, the stock is down about 23% from its 52-week high. Gives you a chance to maybe buy back in about with a break even about 9% below where we're currently trading. If you get assigned those puts, and if you believe in the United growth story, and if you believe in the fact that they can continue to cut costs and keep the planes full going forward.
All right, yeah, let's break this one down. Cash secured put example that Joe brought us here today. August 1st weekly cycle. So you got a couple weeks till expiration, not a pure earnings play. So you do have some duration in case the stock does fall maybe below 80. You don't get assigned on those. You still have duration in this one. But as Joe mentioned, if you collect a $1.50 credit, it takes your break even down to $78.50. But Kevin, you look at this, and it might give you that opportunity to buy the shares if it goes below the 80 strike into expiration over the next 16 days. So that might, allow you to maybe buy the shares at a cheaper price. And maybe you missed that 9% rally that we've seen so far this month, right?
Yeah, this is one of those situations where you're looking at a name with a below 8 PE, Tom, and Joe's setting his price where he would buy it below $80. And the question is, well, it's below an 8 PE here. What's it going to be down below 80, right? So, yeah, this is one of those times. Stocks, not a $500 name, so a cash secure put doesn't bring in as much risk. You still have risk all the way down to zero. But, I mean, if you're thinking that you might want to be a buyer of United Airlines if it gets at or below $80, this is a way to get paid while you wait for it to get down there, because frankly, it may never get down there, guys.
Yeah, and you got a lot of risk if the stock goes to zero, of course, over $7,800 on this one, Joe. But yeah, I always look at this, Joe, as twofold, right? I mean, the stock got down to $52 in those April lows. It's rallied pretty significantly. Delta definitely helps maybe the outlook for this company, but you've got to be comfortable owning the shares if you stay short those puts into expiration and it's below 80, right?
Yeah, you do. And one of the things that we brought up when we were kind of talking about the CPI and PPI data is we have seen a slowdown in transportation, right? I mean, that's a known fact. It's in the data. It's showing that, maybe that's an area where, the wallet's getting squeezed a little bit for consumers, so they're cutting back on their travel. So, you need to be mindful of that. I think what your bet is with this is that corporate travel continues to pick up. And you're looking for, the expanded margins on something like that. The last thing I will say kind of about this trade is, when I'm looking at a cash secured put, you want to kind of look at the return on risk, right? Like if you're risking $7,850 on this trade, with the potential, right, that United Airlines goes to zero, what are you getting in return? Well, in a 2-week trade, you're basically getting about 2%. To take on the risk of buying those shares. If you were just to put a limit order out there to buy the shares at $80,
we break the 200, we're going higher on SPX.
Cash that you're securing, so there's no return on that capital. And number two, that actually is tying up buying power because that's not capital that you can allocate towards something else. So it's just really thinking about kind of capital optimization when you're looking at a trade like this, if you're looking to acquire shares. But the bottom line is, Tom, you got to be willing to own that stock, and you got to be willing to own the stock at that price in order for it to execute a trade like this.
Yeah, high probability of success is the trade-off with the potential for all that risk. All right, great stuff. Thanks to Joe Mazzola, head trading and derivatives strategist at Charles Schwab, joining us. Thanks, Joe. All right, coming up after the break, we're going to be joined by Andy Swan from Lightfolio for a look at sentiment data in PepsiCo, the beverage and snack stock is near 5-year lows into their earnings tomorrow. GLP-1's hurting this stock? We're going to talk about this when we come back.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
$1 to 115.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Andy Swan. He's a co-founder of Lightfolio. Welcome back to the show, Andy.
Hey, thank you.
All right, so we're talking PepsiCo. Investors in this stock have been struggling as of the last couple of years. I mean, what would you equate to the drawdown here? Is it GLP-1s? Is it change in consumer behavior? I mean, what's the biggest thing? And does your data kind of line up with what we've seen in the stock price?
Yeah, it really does. And I think, you know, you hit on something. The question, is it GLP-1 or is it consumer behavior? I think it's both. I think that consumer behavior is changing. People are shifting towards healthier options, away from snacks. You know, high protein is definitely kind of taking over, and enabling that or accelerating that is the GLP-1s, which give people
130, Rob,
you know,
on the SPX
control over their appetite, and especially cravings, and you know, are really taking kind of the world by storm, especially when, you know, everybody sees the effectiveness of these drugs.
How in the heck did I get that line on there?
And so we think that it's a mistake for Pepsi shareholders or for Pepsi executives to think of this shift as a cyclical consumer shift. We see it as structural. We see it as there is a profound shift that is starting to occur, and Pepsi's entire product line pretty much is in the crosshairs. And you see it with Pepsi web visits. You see it with just overall interest in Pepsi. You know, Smart Food Popcorn and Muscle Milk, the protein shake doing well with Mountain Dew is bright spots, but the core Pepsi brands are bleeding pretty badly. Bubbly, Aquafina, and Pepsi itself, year-over-year declines. And this is just, you know, overall consumer interest is just not very high for most of what Pepsi makes. People are avoiding the middle of the grocery store. They're going to the meats, the eggs, the cheeses, and the milks. They're going for protein, and they're staying and they're shifting away from carbs because there's a lot of medical evidence to show that you should. So, you know, we've been on here a lot of times with you guys, and we've talked about never bet against the American eater. But here we are, and I think it might be time to start betting against the American eater. I think that the pendulum definitely went too far in one direction and is shifting back the other way. And these GLP-1 drugs are absolutely accelerating and exaggerating that shift.
Andy, no one has ever ordered a rum and Pepsi. You know, let's keep that on the forefront before we start this conversation. And you're right. People, you know, the new administration, the new RFK is focusing on healthy food, but these salty snacks, they aren't really going anywhere completely. And here's the good news. there's a lot of things that have been working against Pepsi, not just eating habits. They front-loaded a bunch of CapEx. 10% of their miss in EPS was currency. They're really spending a lot of money on automation and their supply chain that is going to moderate soon. So you're right, they may be in one of those businesses that some people are moving away from, but they're also making things more efficient on their end to make them as profitable as possible. So this could be one of those, let's face it, this is not every stock, Pepsi is the example, not every stock has rallied 40% in the last 3 months. Pepsi hasn't. So if it's possible that they're cleaning up their back office, getting ready in case this is cyclical, it may not be, but if it is, that they're going to have a more lean business, get that CapEx spending more towards 4% of their revenue. That's a better number. It was way high because they front loaded a bunch of it. I think we may be throwing some baby out with some bathwater here when they're making their company more efficient. It may not be, they're never going to be a health food company, but they still have a chance to be pretty profitable. And like I said, right now looking at it, a 4.2% dividend. We don't know if the dividend is secure or not yet, but that's a pretty good number for a consumer staple like this, Andy. I just wonder, is a more efficiently run Pepsi good enough to make this stock go up? I guess
it might be in the short term. I think that if you're an executive of a company, if you're a CEO of a company and you have the choice of talking about growth or you have the choice of talking about efficiency, if you have growth, you're not going to talk about efficiency, you're going to talk about growth. But if you don't have growth, you're going to talk about efficiency, you're going to invest it in efficiency. So a lot of times, we see corporate moves towards efficiency as an admission that future growth prospects are not great. And I think it's great that Pepsi's doing that, and I think they can be very effective about it. I think it's a really well-run company. And I think that long term, they're going to have to give investors and give the market some indication that they see that this is not necessarily a cyclical consumer shift and that there is something structural going on. And if anyone can shift from, purely salty snacks and sugary drinks to, protein.
Rob, we need to hold this.
Protein-based snacks, whatever the next.
SPX is 150 now.
Actually want. It's Pepsi. They have the distribution to do it. They have, they have the balance.
I'm enjoying today.
Acquire smaller companies and make them extraordinarily successful within their funnel. And so Pepsi has, a lot of things that it can do. This is not a, the Titanic type of situation. But what we're saying is the current has shifted against Pepsi. I think they know that. And so it'll be very interesting on this call to see how much are they focused on efficiency and how much are they focused on product development and innovation and acquisition. Because I think, if I'm a shareholder of Pepsi, that's what I want the company to be talking about. I assume you're going to run things as efficiently as you can, but where are we going next? And is that really where the consumer is going to be?
Andy, you guys had that one chart about the SNAP supplemental nutrition assistance program. Pepsi's got probably the least amount of exposure, but is that that's only on the soda side, right? What if they come out on the snack side also?
Yeah, I think that's going to be tough to do. I think then that would hurt Pepsi a lot more. But if if it comes out and the compromise ends up, look, we're not going to pay for your sodas, any sugary sodas anymore, then Pepsi's actually in a good spot versus competitors. That's why we wanted to bring that chart up, to balance this out a little bit. But Pepsi's got some work to do, and this is one of those conference calls that I'm extremely excited to actually listen to, because I think when you get an opportunity to listen to people who run these enormous companies talk about the challenges that they face because of shifts in consumer behavior, a lot of times that can be really fascinating. And I hope that they address what's going on head on. I think they will, and I'm excited to listen to it.
Yeah, because the bar is low on this one, subdued expectations. You got an earnings score on this one going into the report because with that bar low?
Yeah, the bar is low, but we don't think it's low enough. And so we have a moderately negative score. We think Pepsi will have a tough time impressing the market unless they come out, with some kind of bold plan that gets people energized about the growth prospects of the company. Because I think the efficiency play is kind of baked in. Everybody understands that. And we've also got to hear if they're going to really defend how much they're going to defend this dividend, because anytime your dividend starts getting, close to what people can get on a bond or higher, it indicates a problem. And so we'll see what they say about that as well. I think they'll probably try to defend it as long as they can, but it'll be a very interesting conference call.
Yeah, that would be detrimental to shareholders if they cut that dividend or do anything with that dividend. Yeah. All right, great stuff as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder of Likefolio, breaking down subdued like the stock price here, Kevin, but you got an example trade for us. Break it down.
So I think the key thing you said, Tom, talking to Andy, was there's a low bar here. And so when there is a low bar, anything can make the stock recover, right? Any small thing like the dividend is safe. We've got CapEx back to 4% of sales, something like that. We've automated and our supply chains are, more efficient. Anything like that. So Tom, what I looked at is something in the call diagonal family, which is I went out to the August 1st, bought the 134 call, which is right pretty much at the money or a little bit in the money now. And then I went to just this week, the July 18th, and did it sold the 139 call. That debit was about $2.80. It's about $3 now as it's rallied slightly. So there is a $3, that's the risk on this trade. You do get a chance to extend duration on it. It is a 3-weeker. So you will get a chance to extend that July 18th into another week if you choose to. But Tom, this is a $5 wide call diagonal on the upside in Pepsi.
Yep, let's break this one down. The anticipated market maker move just over $5 either way on this stock going into the report. August 1st weekly options that expire in 16 days by the 134 strike call. It's got that higher delta slightly in the money. It reacts more like the stock. Then against it, in the near term, July 18th options that have higher implied volatility sell the 139 strike call. So it sets up with about that one standard deviation move. Paying roughly we got $2.80 debit on here. The debit you pay is going to be your risk. So if you pay $2.80, it's going to be $280 per spread on that one. $300 if you pay $3. You see here from the risk profile, apex of profitability at or near that 139 strike, about that one standard deviation move. You want it to move above maybe 135, 136 to start seeing that profitability in this one. It's a 2-week wide call diagonal, but it's definitely one of those strategies you need to move in. And I mentioned, hey, why is this thing basically about a little over half the price-wise as the width of this call diagonal? It's because of those vol dispersions that Kevin and I always talk about. You're selling about a 70% implied volatility on aggregate in the July 18th 139 strike call, buying about a 32% in that August 1st weekly options where you bought the 134 strike. So that vol dispersion lowers the price entry point in there. Now, you do have some assignment risk on that short 139 call over the next couple days into expiration also. So keep that in mind when putting on trades like this. But this is one of those examples that we're looking at. If we expect maybe a surprise to the upside or the bar is really low and you might get a near-term pop, this takes advantage of it because you're paying less than the width of the $5 wide call diagonal at about $2.80 to $3. That means anything above maybe 135, 136 is going to be profitability on that trade. All right, good example trade there, and good look from Mike Folio on Pepsi. But let's take another quick break. We come back when we talk GE Aerospace. They report earnings tomorrow morning. Expectations pretty high in this one. The bar is really high as the stock hitting all-time highs this week going into their report. Stick around.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Fast Market here on the Schwab Network. We're talking earnings during today's show. No different here. We're going to talk GE Aerospace. The stock hit all-time highs in today's session, up nearly 60% so far.
Oh, another opportunity. Look at that. I missed it. Right shoulder the second time.
Kevin, this has been an outperformer on the industrial side. They make about 3/4 of their revenue from the commercial engine side of their business here, and that seems to be going well and maybe only going to ramp up from here as production increases. I think they own about 50% of the commercial airline jet engine business across Airbus and Boeing and others.
Remember, this is what made the breakup of GE work, was that the pieces like GE jet engines or aptly named GE Aerospace, how strong of a product this was, how popular, how high quality it was. This is why that the whole breakup worked, because this had so much value in their jet engine division, both commercial and government or military. And so this company, the only problem, Tom, is the stock has run so far that the valuation is, is just too high for most people to look at. Now, they're a high quality company doing really good things, very safe, high, just one of the most well-run parts of GE, always has been since I was a GE trader. But Tom, the valuation is just, I'll give you the numbers, Tom. Last 12 months, up 66%. We're complaining about some of these other stocks that have run, like financials. This stock has run an incredible amount in the last year, up 54% in the last 6 months, Tom. So everything about this company is going well.
Look at that baby go, Rob. Today's lunch is a croffle burger. These things are delicious.
Tom, and that makes it a very difficult trade here.
Yeah, the opposite of Pepsi. The bar is extremely high in GE Aerospace going into those results. Option market pricing in about a plus or minus nearly $15 move either way, and the shares as that trailing PE is above the 41 level at this point. So got two trades here, Kevin. The first one we're going to look at is still a bullish outlook, but it gives you a little kicker if the stock does pull back a little bit and lowers that break even. So I looked at an unbalanced put butterfly to the downside here, where I can actually take a credit on this this particular trade. In the July 18th monthly options that expire in just 2 days, we're going to buy one of the 260 strike put, just out of the money to the downside by about $5, but sell two of the 255 strike puts, and then buy one of the 230 strike puts on that. You're going to collect roughly about $1.60 credit on that. It's probably trading closer to $1.40 right now. Stock has been moving around here, but if you collect that $1.60 credit on this trade, it takes your break even to the downside to $248.60 on that one. So nearly $20 out of the money to the downside before you start getting hurt on this one. Kevin, you keep the $1.60 credit that you collect on it if it goes, it stays, remains above 260, but you got a little kicker in there between 260 and that break even at 248.
So this here is called a head and shoulders, inverse head and shoulders. And there's your neckline. Then you got your 1, 2, 3. So you got your neckline. This is your head. This is your left shoulder, and right shoulder. And then it broke out, consolidated, and we called that out. And then it came back down and hit that right shoulder. See how it stopped right there? You had 3 black crows with a tweezer bottom with a hammer. Boom! And that's $1.65 profit. $165 per contract.
Collect on the initiation of this trade. So maybe if you think you're slightly bearish, maybe where maybe a couple percent sell-off is warranted, that trade works out. But anything above that break even at 248. 40 is profitability on that one. All right, let's flip the script here, Kevin. If you're a little bit more aggressive and you think the stock's going to continue to move to the upside, we got a different strategy here. And this is a bullish call diagonal. And this is out, it's just a 1 week wide. We're going to sell some near-term volatility that's elevated in the July 18th. They're going to sell the 277.5 strike call and then buy in the July 25th weekly options that expire
AMD knife.
Buy the 262.5 strike call. So you've got a $15 wide bullish.
NVIDIA new highs.
You're paying roughly. We've got a 680 debit. That's where it was trading earlier. Trading closer to 720 right now. So it's gone up a little bit. And you can adjust strikes if needed because the stock has moved up to 265. But if you pay that 680 debit on this bullish example, that's going to be your risk, $680 per spread. On that, anything above maybe 266 to 267 is going to be potential profitability on this. But Kevin, this is where you want this thing to move up one standard deviation towards that 277.5 strike call or higher.
Yeah, this is the same idea as the Pepsi diagonal, which is that you're looking for a move towards that short strike of 277.5, but you're
Technical difficulties today.
Politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Inside Investing. I'm Jenny Horn alongside Alex Coffey. Alex, market's pretty mixed today with weakness today. No surprise, actually led by the NASDAQ, but we are firmly higher in the three of the rest of the four major averages. But all things considered, it does feel like inflationary data has not really made a huge wave over the past 2 days. CPI and PPI not really moving the needle a whole lot. And big banks, failing to also impress, where we've heard nothing but pretty optimistic commentary regarding the back half of this year, also hasn't really made a huge splash in this market.
Yeah, we'll talk more about that later on with Diane. I guess 2 days that have played out largely the same way, which is the initial reaction to the data before the open had been positive, and then as the day rolls on, it somewhat unwinds. The banks similar, mostly positive initial reactions, but then sort of fading. And I posed the question of, are we watching the market transition from everything is good for the market to everything is neutral, everything is bad?
Everything is good.
I think there's a point to be made for that. There's really no reason, other than the market's been on a huge run, that this wouldn't have been interpreted in a positive way.
Yeah, that's true. And maybe a necessary pullback or just like maybe temporary pause we're seeing in markets here after record high after record high. So perhaps a healthy reset we're seeing right now across the board. But as always on the show, we will focus on our individual movers. We'll kick things off with some tech-heavy names to keep on your radar, as well as, just the overall movement we've seen right now across a lot of these crypto-exposed names especially. We will also be diving into two names with earnings still ahead, those being GE Aerospace as well as United Airlines. And we'll be looking at ASML, which is not right now actually eased off session lows, but was pacing for its worst day in over a year and a half, following some possibility of no growth, to put it kindly. So disappointment from ASML, a Dutch exposed chip maker. We'll also be previewing Netflix, of course, ahead of earnings tomorrow, and we'll close things out with Rigetti Computing revealing its reach now about a 99.5% medium fidelity rate for 2 qubit gates. We'll dive into what that means, but a positive development for the quantum exposed company later on in the show.
Yeah, looking forward to the Rigetti conversation. It's been a month or two, so we get back to quantum. Let's get to some of our movers, though, because there's definitely a couple names on here that you're gonna have to tell me, what these companies are. Because I gotta be honest, it's the first time I've seen them in terms of our coverage as well. But at least a couple on here that I recognize pretty good. The first one definitely AMD. We also kind of pointed to the disappointment that AMD has been. That said, it's been a nice winner off the lows, and certainly a nice winner year to date.
Yeah, and AMD has quietly been a huge beneficiary of a lot of the reversal of expected export controls between the U.S. and China, as we do hopefully see signs that the hot water between Beijing as well as Wall Street, or more so Washington, D.C. actually, are starting to hopefully evaporate. That's, I think, the theme here. AMD still not able to recapture its highs. It's down about now 11% from those levels, but we've risen 103% off of lows, and we've been in a really nice recovery really since its last reported earnings. So for that reason, we've seen analyst coverage, across the board flocking into this name. Citi was one that did actually call for the rally in shares to be empty calories, saying that the added sales from the chip ban being lifted in China are not sustainable, as they could be banned again. This was a narrative I was really harping on, when we saw this news, but I think positive to see this echoed by Citi today as just of course, near-term concern. Mizuho was another one raising its price target actually, but kept an outperform rating, overall lifting their semiconductor estimates to reflect the announcement that we'd see these providers be allowed to resume, of course, those exports, send unit shipments to China, and Wells making the argument they remain bullish on specifically AMD's second quarter print, saying they expect actually an increase in estimates. So there's various opinions on what happens next for AMD, but we do know we at least have catalysts to look forward to.
Yeah, speaking of catalysts, this GDS Holdings, which is the next on our list, is Chinese data center company. That's about the extent that I can figure it out, but I think that does give us enough information. But it seems that the catalyst here is similar to the one you just described with AMD, which is this resumption of chip flow, perhaps particularly the H20s, back to China. that could help a company that
They were
needs that
failed.
for its data
Let's
center.
see if the chart is
So frankly, I
points
haven't
out the
really
triple top.
discussed GDS ad nauseum prior to looking at it.
So they're talking about AMD and they're going yeah. Failed to mention the triple top resistance on the daily. So if I was trading AMD, I'd wait for pullbacks and scalp it from here until it broke resistance. And then you got a couple more. You got three different resistance channels right here. One of them, 2 bits, and a freebie. You've got a head and shoulders right here. So let's magnify that up. Right on the body of the candle to the body of that one. So that's actually higher than the triple top, and we hit it also right here, the shoulder line. See that? So it's probably squeeze here for a week, and then next week we might get some action. Had a gap up, so it's got to consolidate it. And there's you.
Basically, what I just did is scan for like high volume, high movement, and that's what we're getting today in Unity, which is up 13%. Gaining momentum after, I mean, the closest related catalyst I could find was this Jefferies analyst Brett Thill actually raising their price target to 35 from 29 a share, maintaining a buy rating. But over the past 3 months, we have seen analysts issuing various ratings on Unity ranging from somewhat bullish to somewhat bearish, with the 4 actually maintaining that positive stance. The 12-month average price target now does stand at around $26.57 a share. So that would mark actually about a 2.8% drop from the previous average, which does right now reflect slightly tempered expectations, but forecasts do still vary very drastically. So it's, you know, it's all as good as anyone's opinion. But for that reason, Unity overall, I do think, known for like the video game development of platforms and stuff, has gained recognition.
Primarily mobile as well, right?
Yes, and it's also gained recognition in the AI world, as the company did recently launch its AI-powered tools to enhance its productivity by basically just automating its offerings on various task-related functions. So all that to be said, 90% of developers are already integrating AI in that workflow, but right now, trying to position this company more and more as an AI player is, I think, hugely why we've seen this run up. But then also those that are skeptics are still like, you know, we've just risen basically on like tacking on AI to the headlines is more of the pessimistic stance.
Yeah, and unique, I think interestingly, I think is the best way to put this. Back on the 26th of June, so that's, you know, been almost half a month now. Bank of America actually put an underperform and a $15 price target, which I think is the street low. So not necessarily the best call, considering the stock has not been lower since that moment. It's basically been up every single session since then. But it does show that, you know, not everyone's bought in entirely in Unity in this run that we've seen. All right, last one, Bitmine Immersion. All right, I'm just going to leave it at that. I have not even considered what this company can do. But I'm going to go off. I think there's some clues in the name.
Yes, I think that Bit and Mine could both give you some reasonable clues. And also, maybe even the most reasonable clue is the fact that we're up 22%, which nothing is up greater today than anything exposed to these like crypto-related names. You're seeing it also affect names like MicroStrategy, Strategy, of course, now Coinbase. And I mean, the list just goes on and on. All of these names rallying as we see unprecedented levels touch in Bitcoin here, which has now peaked out around 123,000, but still, I mean, trading at near or at levels we've never seen before in the entire space. Bitcoin, though, Bitmine, specifically, it soared early this morning, and it's actually held on to a nice 22.5% jump after one of the biggest tech titans, as he's been coined as, took a large stake in the company. So that would be Peter Thiel.
Yeah, Peter Thiel.
Who is, of course, the billionaire venture capitalist behind names like Palantir, PayPal,
early Facebook.
Yeah, he's like to me like the early 2000s like king, but disclosed about a 9% stake in Bitmine, which is building its crypto holdings to focus more on Ethereum, which is also what I found so fascinating because everything right now is so Bitcoin heavy. Obviously, names are Ethereum heavy, but Ethereum has not been the outperformer that Bitcoin has.
Yeah, this is interesting as we're watching what
Bingo,
happens
baby.
in gold markets when things start trending and things start getting optimistic there. The reason you would go to the miners is they're usually a leverage play. They're a little bit more exciting, higher beta, but they need the fundamentals in the gold market to do well for them to have any chance. Similar goes to some of these Bitcoin and holding miners and holding companies. And it's honestly not all that different than what you see even in the energy space. The drillers do well when crude oil starts going up. Obviously, the price that they're of the asset that they're extracting from the earth is going higher. So similar could be said for some of these miners, but they are so volatile. I mean, on the good times they may outperform, but on the bad times they can certainly underperform. Today, obviously, other things going on with the announcement of or the disclosure of that large stake. So perhaps a little bit more credibility now behind this name going forward. But I'll leave it at that. This stock's super volatile.
It is. I mean, we've seen gains of more than 400% so far this year. I do appreciate that there's at least a news story today attached to the momentum, but yeah, up 21%. So definitely worth keeping on your radars. Now it's been on my scans daily, pretty much every single session since we've seen Bitcoin really take off. So one worth of noting, definitely with a huge move today. We'll leave it there, though, for the top of our show today. Coming up next, it's time to discuss two names with earnings still ahead. United today after the close, as well as GE Aerospace releasing tomorrow morning.
520. Rob. $5.60. They keep going higher on false information. /ES double top. I'm gonna have one more bite. This is really good yogurt. I'm surprisingly
giving you even more specialized trading support.
A little fatty, but
with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex.
It comes from the brown
Plus,
cow.
24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market. Ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Next Gen Investing. It's now time to look at two names with earnings still ahead, and those being United Airlines as well as GE Aerospace, two very different performers on the year. We'll start off with the laggard of the two, United Airlines, which got a huge lift, no pun intended, on the back of Delta's earnings last week. But now joining us is Rick Ducat, our chart master, to break down further technical levels we should be watching. So Rick, with United, we already got almost the earnings type move. Does this make you nervous at all, technically speaking, as we go into this report?
Actually, it's a pretty intriguing setup that we have here coming into this earnings event, because we did have the breakup, as you said, more of a sympathy move with Delta Airlines that reported earnings recently, but it took price above a key level. You can see when we get to our chart, our green line near the $84 mark, that represented not only a low point in the past where we had a gap up and then it was where the price bottomed out, but then it was also a breakdown point further down the line around early March. Then you can see that it was resistance two more times in May and June. From now, we have broken up above that level. We have so far held on to that supportive area, stuck at the 94 mark right now, that darker red line here. But the actual candle shape and setup here is what I mean when I say it's intriguing. This is a setup that many traders commonly look for, a bull flag or bull pennant type of situation here, where you have a large gap to the upside on some kind of fundamental change in the stock. We have a brief sideways to consolidative phase, and then eventually price, what the bulls would hope, would break out and push above those initial highs beyond that point. So we can see, though, that earnings could be a big change. It could be a potential catalyst the other way here. So we are seeing perhaps momentum slowing down slightly. Common situation for that to happen, though, but really an interesting potential situation here for this stock.
Yeah, and common to see these days of almost, not to say call it a lull, but the fading momentum, even sometimes fading price ahead of earnings, as we have, of course, this afternoon. So with this in mind, and with the fact that momentum not really giving us a whole lot, what other technical indicators do you typically utilize to give a read ahead of these earnings events?
Sure. So one tactic you can use is to use the volume profile study. That's our blue bar graph on the right side of the screen, and the typical volume study you would find at the bottom. That tells you what days, what time period the trading took place. Volume profile,
I don't understand this charting.
Shows you the key price area.
That line doesn't make sense at all.
You can see that thick red line near the 74 mark, that shaded area. That area from like 70 to 80 approximately, we'll call it that. That's where most of the trading was in this stock here. Now we're in a relatively light volume area, which is kind of notorious for having faster moving prices when there's not really a lot of clear support or resistance for price to get through. The next volume node, the next spike in that volume activity comes in starting around 94 to about 98 or so. So that could be one area that we could see the consolidation or slowdown happen once again. But to the downside, that $84 mark, that's where things would really start to, you would hope, would solidify or potentially break down if that area is breached.
Yeah, and so I think that this will be one we'll definitely be watching, of course, as we did already see that pretty monstrous move, but now up another 0.7% here on at the session, so continuing to hopefully churn a bit higher despite that waning momentum. All this to be said, though,
trees are top.
We do look at trading here, for
example. You didn't see that.
United already had a big move, but that doesn't mean we can't.
Now this is something to pay attention to.
We do look at trading the same.
And it absolutely is tech.
This is a real hard resistance right now. Each one of these candles represent a yearly time frame. So you got a double top at 97.26. 97.50. Dadgummit. I'll never get that 50 again. I did. 97.50. So I go take it to the 20-day 1 hour. We got a wedge. So far, 2 bullish flags. He called that a pennant flag. I call it a wedge. And it could be a pennant flag. Because of this flagpole. So yeah, he could be right. I'm not giving him too much credit. Then on the daily, let's go to the weekly. And we have a rising wedge on the weekly. So it could easily come back down off earnings and bounce right off of $80 and then come up for or we take the triple top break. Now these are on weekly time frames, so each one of these could be number 5, and it could come back down and then bounce in this area right here to take the trade and swing it back to the top for $10. And it can easily break out too, because Dow did. And Dow's pulled back. You got a head and shoulders. So let's take it to the daily. We got a little pullback here on SPX in the bottom of the Kettner channel. /ES on the 30-minute, we got the 200 SMA. at 62.97.39. We got a triple top on the 5 minute. We broke triple top on the 2 minute. And we could bounce off the 21 on the 1 minute. And what's Tesla doing? Do, 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 do.
Oh, cool.
Because of US-led restrictions, and the Dutch government has also blocked some of their systems, their company's most second-capable machines, from being sold to China after some pressure from the US. So they have some potential sales issues there with those restrictions as well, in addition to the tariffs.
Yeah, obviously it's having a little bit of a ripple effect here today, guys, in terms of just broader, like if you look at something like the SOX index, it's a little bit lower, but like it's not having the same impact it did a year ago, I would say. Jenny, I mean, kind of 1%.
It's not. It was the day, I'll never forget it. You could see even like on the chart, the steep decline we saw on the session that like was, okay, are we concerned about the way that you know, this is going to bleed into, say, an NVIDIA or a Taiwan semiconductor or an AMD? And that never happened. So I was skeptic about ASML. I think it's its own entity in the sense of like it's Dutch-based. It also is only about 16% of its revenues US exposed. I don't think this has broader implications at all, but we do actually have Taiwan semiconductor reporting tomorrow.
And that one certainly could be larger. That could be a major potential issue as the producer for both NVIDIA and AMD. If they report any problems, that could be highly significant because if they are the linchpin in the actual distribution of the chips because of the creation of the chips, so if they have any problems or issues like that, that could potentially see a much greater tank than what we're seeing with ASML here.
Yeah, and I completely agree. I think if you're going to find a barometer or a pulse check on the semiconductor space, Taiwan Semi is the place to do it, not ASML. But the market tends to disagree with me on that. So now when we do look to trade ASML for example purposes here, taking it on the chin today, we have seen this name make these historical moves to the downside though post earnings. It's
information.
I mean,
you got false information. You got false information.
From highs, while also being off lows by about 30%.
Yeah, I think it was Cantor Fitzgerald that said it best. They said, very confusing and overall disappointing. But what does that mean for the stock price? Well, maybe it's locked in a bit of a range where, none of the analysts that I saw really jumped ship on this name. Even Cantor with that statement still had an overweight and, sort of the buy equivalent rating. They kept their price target where it was largely, but acknowledged that it was kind of a disappointing report. Well, we're off the lows of the year. We're obviously off the highs now of the year. Maybe it's locked in a bit of a neutral range, or look at a range-bound strategy. No earnings to consider now for quite some time. So going into the end of August, and that allowed us to get pretty wide here. So for those who have patience, if you do think that this stock will maybe chop around in a wide range but stay somewhat sideways in direction over the next month and a half, about 45 days
15 minutes says triple top on Tesla.
The exact strikes that I looked at was the 650, 825 strangle, then $5 wide wings. So you're selling the 650, 645 put vertical. You're selling the 825, 830 call vertical, doing it all as a one four-legged iron condor strategy. Looking to collect at least $1.25. That'll create a 3-to-1 risk reward, Jenny. You risk 375, chance to make 125. But here's the thing that I think makes this an interesting trade is your break evens are all the way down to 648.75. And then all the way up to 826 and a quarter. So it's not to say that this stock has to stay super sideways. It can move around dramatically. It just has to land in this $100 and basically $75 wide window.
Yeah, so one with it, of course, where you would benefit from being correct, but also you do know at least your risk somewhat going in, so that's something to keep in mind.
Circle had a nice run.
Down on the example trade, of course, and great insight from Marley Caden, as always, a host here for the network. We'll leave it there, though, for ASML. Coming up next time to talk another theme that has emerged from earnings, and that's these big banks that are seeing massive trading volume as a result of all of the turbulence you've experienced over the last several months. But why this is not really playing out into some of the performances post-earnings in these names, as JP Morgan lower today, as well as Bank of America, Wells Fargo. We'll discuss more coming up next.
Circle has had a nice move. God, we missed that one. I did.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Nicole Pedalini's live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
SPX is at 62.60. Rob, you trade it?
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Next Gen Investing. It's now time to talk the banks, which have been
62.60s.
in the midst of reporting right now. We've heard from most of the major U.S. banks now, some of the largest institutions in our entire country. It's been a bit of a mixed picture, though, and I have covered these to nauseam, and I'm a little bit confused that we've seen some of the pessimism and the not sell-offs, but just modest moves to the downside in reaction. So hopefully to bring us some more clarity is now Diane King-Hall, the host of Morning Movers. Diane, broad question here, but what's worked, what hasn't, what has really stood out to you so far from the slew of big bank earnings we've gotten thus far?
Well, I think they have really strong results overall in the banking sector, and I'm not completely surprised to see some of the pullback. A lot of that has to do with how the banks have performed year to date. There's been outperformance across the group. I mean, not all banks are created equal in this sector, but for instance, if we talk about Goldman Sachs, has outperformed the S&P 500 year to date, so has JP Chase as well. I got to do a quick check on Morgan Stanley, where its performance is year to date. That's a little bit better than the performance of the S&P 500 year to date. We're looking at the KBW Bank Index as well, which has financials have overall been a strong performer so far this year. So some of this just may be some overall profit taking, especially when you think about how Goldman Sachs' performance was in this most recent quarter. It was serious outperformance, big beat on both the top and bottom line, and then their best stock trading quarter in Wall Street history for equities. For equities trading, they were up 36% year over year. EPS 1091, better than the street was expecting. Revenue was more than $1 billion, more than what the street was expecting.
Nope, there we go back to 220.
Top in $14.5 billion. So it was just a strong quarter for them. That volatility that had us all on edge, investors on edge. It's I
didn't have me on edge, baby.
Down here, but it's not necessarily a bad thing for trading. Obviously, it can keep people on the edge of their seats, but it's a boon.
It did have me on edge. See, we don't trade like you people do. We don't have Trump deranged syndrome. Like you, and who are you speaking? I mean, speak for yourself.
9% year over year, but it did beat expectations. You also had a jump in IB activity, investment banking activity there. That was an increase of 26%. 71% increase in M&A advisory fees. We'll continue to see strength there because we know the pipeline is picking up for both M&A activity and, we're expecting to see more IPO activity in the second half of this year. Morgan Stanley was a beat as well. The mixed picture was over at Bank of America, and I'll dive into that to catch people up there. Morgan Stanley, $213 for the trailing quarter. Revenue, $16.79 billion. Net income rose 13% year over year. Bank of America is where you saw the mixed picture there, but you wouldn't call the consumer, in a difficult place. They mirrored some language that we heard, for instance, from Citigroup about the consumer. There was still resilience with the consumer. Bank of America did come in weaker than expected on revenue, and they came in weaker than expected on that key metric, net interest income. And if you look at its performance year to date, it reflects that. It has underperformed within the financials, guys.
Diane, I think we always hype up this time of the season. We're excited for earnings. We expect these banks that have their tentacles in all these different industries through loans and other reasons. They got this visibility, I guess is the way to say it. We expect them to set a tone, and then I feel like every quarter comes around and nothing really happens. Yeah, Wells Fargo disappointed a little bit and was down 5%. Yeah, Citigroup was a little bit better and they were up 3.5%. But the reality is these stocks only move like 1 or 2% around earnings every quarter on balance. And we had that, that KBW Bank Index up. It kind of reflects that. We're down like 1%. And given the run-up that we've seen, it doesn't seem like much.
Agreed. I think you couldn't have said it better. I think, though, what stands out to me is just the tone that comes across in these earnings calls. It reflects what we're hearing overall when we talk to different experts who look across macro about the consumer still holding up, and a lot of that is attributed to the job market. Seeing, as Brian Moynihan, the CEO of Bank of America, called out, just a surprisingly resilient consumer. Citigroup had the same kind of commentary. Their CFO calling the consumer remarkably resilient. Another thing that stood out to me on Bank of America's earnings call was the balance that you see across consumers. Their average balance that they are seeing across consumers for checking accounts was $9,200. Which I found fascinating because you think of, even the data points that you all probably are familiar with, where there is a certain pocket of America who can't afford, say, a $1,000 or even a $400 emergency expense. Obviously, when we look at average, that's averaging the, significantly heavier accounts versus those that are significantly lower. But that's something that I found very interesting in this earnings call.
Okay, I do as well. $9,200. Suddenly, I'm like thinking about my own bank account that is nowhere close to that, so I won't get into that. But I applaud those. I applaud those that are a bit more stable than myself. I mean, so when we look at then some of these smaller, maybe more regional focused banks, which are yet to report, I mean, I agree with you both, where it does feel like it's a lot about framing of these earnings calls. It's like how optimistic you really can be as a leader and a management of these companies seems to be what's working for like what trades higher. Like Citigroup has been a slight winner, yes, in the space, but then like JP Morgan, JP Diamond, with more pessimism than we saw shares slightly sell the session following. I mean, is that really just what it comes down to? How management can shape the narrative?
I mean, he's always pessimistic off the back of earnings calls. That's just kind of his typical nature. Someone pointed out to me that he seemed less, Caleb Silver of Investopedia, that he seemed less pessimistic this time around than usual, but that's kind of characteristic of how he delivers results. And, the point that Caleb made about that is that, one is typical of his patterns. Two, my takeaway from how he presents is, the upside will take care of itself. You obviously have to point out the risk because you have to account for the downside.
Yeah, no doubt. I mean, it does seem like every quarter JP Morgan comes out monster numbers, a little bit of cold water thrown on it from, let's just say, a prudent, risk-averse leadership team, knowing that they're taking plenty of risks. I mean, they have, tons of loan exposure. But it does seem like some of those regional banking scares got left back in 2023, and that is a good thing. Diane, we appreciate it as always. Diane King Hall with the update. Thus far, early in earnings season, so we really see things kick off in earnest beginning next week. Get Netflix tomorrow as well. Coming up next, though, under 30, Rigetti. We go back to quantum computing. This is all the way to the end of 2024. NVIDIA talks about it. These stocks make big moves. We'll see what the latest is with Rigetti right after this.
Rigetti. Sounds like spaghetti. "1846 is resistance. Can we break it? I don't know."
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning.
It's RGTI.
Content curated to fit your unique goals. You can spend
The
less
company
time
revealed an industry's largest multi-chip quantum computer.
Trade brilliantly with Schwab.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Welcome back. It's time for Under 30 as we go to the quantum space. Look at Rigetti making a massive move on the heels of a corporate news headline that's exciting investors. For more on the subject, we welcome in Schwab Network contributor Sam Vadas to the program here. Sam, this is a fun one. We talked about this a lot towards the end of last year when it made a huge run up. It retraced, but it's making another run at those highs. What's the story behind this move?
It sure is having its moment in the sunshine at the moment. Alex, up about 30% or so, about $16 and change right now, off the back of reporting a big breakthrough. So what it has now revealed is stronger performance in its latest system. And this is important, obviously, because it shows real progress. That is what the street is wanting to see when it comes to this more powerful computing, when it comes to the whole quantum computing space here. And so as far as the details are concerned, it successfully demonstrated the biggest multi-chip quantum computer so far, and also achieving a significant reduction in error rate. So fewer mistakes at a 99.5% accuracy rate. So that's a big improvement, because what is new to me is that quantum computers typically have a lot of errors. Now, this is a massive technical breakthrough, certainly for this company. This is to do with its 36 quantum bit system that is planned to launch on August the 15th. So it's on track also to release a 100 plus quantum bit system by the end of the year. The big question is whether we can continue to see this run when it comes to the stock off the back of those launches as well, because it's up over the year over 1,200%, which is quite remarkable. There's been a lot of interest, as you mentioned, with regards to the quantum computing space. Obviously, there's been a lot of attention on some of these companies because everybody wants to see more processing power than sort of the traditional computer systems. Obviously, they've seen some pretty high profile remarks coming from the likes of Jensen Huang, for instance, who at the start of the year sort of, I suppose, stopped the momentum in its tracks a bit, sort of suggesting that people who were into this were a little bit ahead of their time, but sort of changed his tune on that as well now. But over the last year, this has very much emerged as a very hot topic, and I think that very much speaks to what we've seen as far as the run-up in some of these companies. Rigetti has become a name very much associated with this trend. We are going to get some insights into some of the most closely watched companies in this space over the next few weeks or so as we start to get those earnings from the quantum computing space. Rigetti, I believe, is reporting early August. What the street Street wants to hear, obviously, is they want to get a bit of an update on the progress towards commercialization, because they do want to set apart the companies who are sort of heading in the direction of becoming more commercial, or who are sort of still stuck in the phases of working on some of their systems. Now, just as far as the water industry is concerned, I do believe there are estimates over at McKinsey & Co., for instance, of quantum computing to generate $1.3 trillion in economic value by the middle of the next decade. So no doubt these companies are well positioned for that.
SPX.
But as far as Rigetti is concerned, they're very research focused. There is a view that commercially they are lagging right now, but no doubt the breakthrough we've seen today is helping the stock along today, up 30%, as I mentioned this afternoon, guys.
Yeah, I mean, a phenomenal move to the upside. It feels like finally maybe the street is giving credit where credit is due, as this was what they thought was their biggest quantum breakthrough ever. So while we may be years away from some of the mass applications of quantum computing, I do think a really powerful chart that speaks to, I mean, the enthusiasm, especially today. So really great insight on that entire space. One we'll definitely get more clarity on, hopefully, when we get these companies reporting, as you said. Sam Vadas, contributor here for the network. That'll also do it for Alex and myself. For Next Gen Investing, for, of course, this Wednesday, we have the watch list coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage.
Okay. That RGTI sounds like a big deal. How you doing, Funk? You working? Oh gosh, there's the knife. Not that I wanted to see. Shit, not again. Well, I'll still hold it. We're at 63. We're in that slow period too, so I should kind of back off a little bit on my momentum. I'm gonna go get my tea. I'm down 300 on 6260s. Well, they dropped pretty big here. They shouldn't have dropped as much. I'll be back. Kitchen time. Miss Peppolini.
Have some gains today. What do you think?
Hello, Nicole. 2 hours left in the trading day. A little volatility late morning as President Trump dispelled some rumors about potentially firing Jerome Powell. But we got good economic data this morning. PPI came in much better than expected across the board, and a lot of similarities to some of the CPI data. So here's the numbers. The headline month over month, the headline core month over month, and the ex-food and energy trade services month over month all came in unchanged from last month. That's a big beat on expectations. Year over year numbers, headline.
Not my expectations.
Pretty big beat from 2.6% a month ago. Core, 2.6%, 0.4 lower than a month ago. Ex-food and energy trade services, 2.5%, 0.2 lower than a month ago. So solid numbers. And what it was, it broke down relatively similar to the CPI data. A lot of food was higher on the month, like beef was higher in the CPI report, but eggs, here's the number. Eggs down 21.8% on the month. So all the worries about eggs and egg prices continue to dissipate. Energy was higher across the board. Again, you can make that case like we did yesterday, that if you took these numbers mid-month, crude oil is basically 10% lower than it was when these numbers were measured. So there's, despite the lower numbers, there's even more good news coming from this PPI report. So real solid number. The market liked it. It rallied from down to up when these numbers came out, Nicole. So better than expected numbers from PPI.
And look, intraday, we saw the markets really being jostled and rallying back from down to up. I mean, we had the talk of President Trump. There were some headlines that he wanted to fire Jay Powell. Then it came out that it was highly unlikely that he would fire Jay Powell. And then the market sort of resumed. But if you looked at an intraday chart of the S&P, you'd see before the PPI, right? And then you would see the headlines about Powell. And now we're back. 62.51.
Yeah.
It's rigged.
Like a very calm market if you look at the numbers, but we've been all over the board today at one point, right? Those rumors came out on every news service about that basically Jerome Powell's firing was imminent, and then President Trump came out live from the Oval Office and said he's highly unlikely that Jerome Powell will be fired. So that just, big swing in stocks from the downside, down about 0.5%. and right back up to unchanged on the day. So yeah, really
Yeah, the intraday chart's a good one.
Whiplash.
Yeah, exactly. Like we're in the boxing ring. Let's talk about Johnson & Johnson. The quarterly numbers, the outlook are pretty good, huh?
Johnson & Johnson starting off earnings season for healthcare with a good solid beat. The stock up about 6%. Earnings per share, $2.77 a share versus $2.68 expectations. The revenue numbers, $23.7 billion versus $22.8 expected. They basically said, and it shows it in the chart of the stock.
We're 230.
They thought this was going to be a grinded out year, but their CFO came out and said this year's turning into much better than expected. And so they're upping some of their guidance.
245, baby.
Numbers. Now expects reported full year sales of between
Anybody in this trade with me?
3.2 and 93.6 billion, an increase of between 5.1 and 5.6%. So remember, that's healthcare, that's pharmaceutical, that's medical devices. If you look at the S&P 500 by sector, Lilly's higher. Johnson & Johnson, of course, is higher. Merck is slightly higher. Then United Healthcare is higher. A lot of the biotech stocks are higher. So this put a bid, just like Delta put a bid in the
what happened there?
This earnings by Johnson & Johnson has put some bids into some of the healthcare sector in the S&P 500. So a good, strong day there, Nicole.
All right. Big picture, we're doing all right here, I guess, holding on, not selling off terribly from record highs and sort of bopping around and waiting for more info. Okay, thank you. Kevin Inks, great to see you. Now let's take a look at the bigger picture. I have not seen Art Hogan in a long time. Really excited to chat with Chief Market Strategist, B. Riley Wealth Management, Art Hogan.
235.
Good to see you, Art Hogan. How are you? Good to see you, and you're still doing this. What do you think now as we're at records?
God, you make him sound like he's an old man. Nicole, did your nipples just get hard? I thought they did. 250. Nicole's nipples just got hard as a rock. Sorry about that, Angel. If anybody has any kids around, tell me and I'll make this PG. But when her nipples get hard, mine does too. She's good.
Policy that companies were really given a pass. So that's different this go around in the second quarter. But because there was no guidance given and there was so much uncertainty around trade policy and getting that big beautiful bill passed, that the estimates really were very achievable, right? We're coming in fact, said it had gone from something like 12% earnings growth on a year-over-year basis down to about 5%. And right now we're on a run rate to get closer to 10% earnings growth. So that's clearly going to be a significant upside, and I certainly think that's going to be seen positively. But to your point, it's how companies guide and how many companies have to talk about mitigating tariff risk and how they're planning forward. I think that's going to be more good news than bad news. And I certainly think that actually having guidance will give us a better read on both the next quarter and certainly the rest of this year. So I see earnings as a real positive here, and what otherwise could be a quagmire until August 1st when we figure out what the end game is in this trade war.
Yeah, I mean, we already heard from Indonesia, right? We're going to maybe get some more deals coming. How about the end of the year? Do you see more records? Do you see us above 6,300 and higher? Do you have year-end targets?
Yeah, my year-end target is 6,500. It's been there all year. doesn't feel as courageous now as it did, back in April and certainly at the beginning of the year. But I think if you use the same multiple that we've closed out on a trailing basis for the last 5 years to what we suspect we'll get for earnings, which is between 275 and 280 for the S&P 500 for this calendar year, we'll likely be able to see 6,500 as a base case. The upside. I think that's not going to happen in a straight line. There's a lot of things that are going to bump around. Certainly the month of August and the month of September are always tricky for us, but I think we end up washing out a lot of the noise around trade. We certainly get to know what the end result of the goods inflation will look like. And the Fed at that point in time will likely be able to cut rates maybe a couple of times, thinking September and December.
Yeah, understood. I like how you threw that in. It's not going to be in a straight line, like no way, right? With every headline that even today we saw the crazy move with whether or not Powell would be fired. It seemed like it was imminent, and then it was like highly unlikely that it's happening right now. When you think about how to make money, what do you tell investors? I mean, NVIDIA is a name that has been incredible, hit new highs again. Is that something that you recommend for the long term?
Yeah, the mega cap technology stocks have been on our barbell approach to looking at investing, and that's been true for the last 3 years. And what we mean by barbell is, on one side you've got this beta, right, mega cap technology, and then you offset that on the other side with things like industrials, financials, and healthcare. And what you have to do is you have to rebalance that every quarter. So what you're actually doing is you're selling some of your winners along the way, taking profits in some of these mega caps, so you keep that barbell balanced. And that actually, if you've followed that barbell approach over the course of the last 3 years, you've outperformed the S&P 500. It helps you ride this out and not get overexposed to the volatility around some of the big cap techs. But it also gets you involved in things that are actually catching up here. Industrial is one of the best performing sectors this year. It's a derivative play on artificial intelligence for sure, but it's also a play on the infrastructure build out that we're doing, rebuilding the energy grid and all types of things. And heaven forbid, if household formation starts picking up again and home building picks up, the industrials have a key play in there too. So I think keeping that approach, picking the right sectors that are catching up this year. Financials certainly a big beneficiary of deregulation. Industrials proving themselves out, and we certainly think that healthcare is going to be a great play. Johnson & Johnson is just the tip of the iceberg here, as some of these big large cap pharmas start to report, and M&A is actually allowed in this environment of deregulation.
Yeah, so deregulation, you like what's going on there. Healthcare, you said maybe something good with deregulation, more M&A activity you mentioned, and that's something that people are really hoping for when they try to invest in the financials. Do you think the
really
financials?
Yeah, you bring up such a great point. I mean, we have north of 4,500 financial institutions, banks, basically, and to run a bank when you're not at scale is very difficult with your compliance and legal costs on top of your technology spend. So it's not as though the money center banks like JP Morgan, Bank of America, Citibank are going to be acquiring anybody, but there's a lot of regionals that could consolidate and be run much more proficiently. So we're probably overbanked, but there just hasn't been an appetite for mergers and acquisitions for the last 5 or 6 years. I think that starts to pick up. We're already starting to see some of those things. And I think the financials certainly sit in the catbird seat for where that happens. They're also beneficiaries of things like less regulation. So if this SLR passes, more money to lend, more money to buy back shares, and more money to pay dividends.
Have you been a fan of those dividend aristocrats, like those oldies but goodies? Have you had names that have served you well over the decades that you're still in, Art?
Yeah, so taking a look at our it's so funny you should mention that. So taking a look at our dividend list, we have about 12 names on it. All of them are household names that you would recognize. AbbVie sits on there, Johnson & Johnson's on there, Bristol Myers on there, Pfizer is on there, and then we have 3 energy companies that sit on there as well. So to me, I think that's a very intuitive way to look at things, especially if we start to think that interest rates are going to normalize. We think the 10-year at the end of the year is 3 3/4 to 4 1/4 in that range by the fourth quarter. We'll probably be stuck in this 4 1/4, 4 1/2 range until we get to the other side of this quarter. So I think that as we look at that, it's going to just make those dividend aristocrats that much more attractive.
All right, Art Hogan, great to see you. And check him out on Twitter with his 2.
Nicole, don't be getting so excited. It's not good for business.
Rigetti Computing, and also he's found real trades he's going to share with us, options trades. We'll be right back.
AMD new high. AMD new high. Drink my jasmine tea. Drink my jasmine tea. Drink my jasmine tea. Now what's this 40 minus dollar? What's this? Withdraw and other
Whether you're an
debits.
experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
James, did you ever
Trading the trending names.
sing on Wall Street, swinging
Tom White, host of Fast Market.
Hollywood?
Ready for you? Ready to
No,
go?
I haven't done a musical yet. Yeah, I have. I did Godspell. And what else did I do? Did another musical. Godspell. What was it? I did Godspell and one other musical. Keep thinking it was a Charlie Brown, but I don't remember. I'm not doing too good on this trade. Should have sold it when it was up. La 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 la. We're back to the orb on SPX. So it has to hold here. I got 6 contracts. Yeah. A little tired. Kind of like this day to get over with.
Strike puts.
105.
Paid an average debit of only 87 cents on those, so it takes a break even when this trader starts to.
More important than the chairman of the federal. As president, there are a few decisions more important than nominating leaders of integrity and good judgment to hold trusted positions in public office. And few of those trusted positions are more important than the chairman of the Federal Reserve.
Whoa.
Accordingly, it is my pleasure and my honor to announce my nomination of Jerome Powell to be the next chairman of the Federal Reserve. Congratulations, Jim. As president, there are few decisions more important than nominating leaders of integrity and good judgment to hold trusted positions in public office. And few of those trusted positions are more important than the chairman of the Federal Reserve.
Ooh, low blow.
Accordingly, it is my pleasure and my honor to announce my nomination of Jerome Powell to be the next chairman of the Federal Reserve. Congratulations, Jim.
Dadgum, I didn't buy that dip. Too busy bashing Pow. CULLED. Is that a word? Fresh, cooled. If you cold. SPX are at 255 now. Yay! Woo! Martin Brax. Hello, Martin. Now it's time to just kind of kick back and relax and do my checkbook. But I still don't want to get out it. I might go. I had a friend of mine. Oh God, where did it get wet at? Shit. I hate it. After 20 years, my bank statement got wet with tea. And that kind of sucks. I hope I didn't get it on my taxes. Anybody want to pay my taxes? I need $4 grand. Okay, this is a refund. Let me see if I still have a receipt. Let me see, just how do I type this in? Let me look in my wallet. I doubt if I have it in there. I don't think I have it. Don't got it there. I'm surprised. I soaked my tea up in that thing. I wish I wouldn't have done that. So this is a return. Purchase. Supply. Return from a purchase. How long do you think it'll do me to go through my bank statement? 20 minutes? Half hour? Clock starts now, and it is at 1:41, so I should have this done by power hour or sooner. Starting now. We'll turn on the TV even. I'll get distracted.
Groups are saying, look, we'll pay you these higher multiples, but we want to see how it plays out, and we want to make sure that things get retained and that we see the growth that we expect to see here over 3 to 5 years.
Right. When you talked about AI, cybersecurity, you had in that group, and then energy and medical. Those areas should do well as well because you'll see some activity there. Is there growth there?
Absolutely. Absolutely. Energy, as Ivan was talking about, I mean, we have a huge increase in our energy demands, and there's really no good single way to achieve that in the short term. This is a long-term play. This is something that's going to take years to develop. Nuclear is going to be part of that. But alternatives are going to be part of that, and so is coal and oil and gas. It's kind of an all of the above. But those are infrastructure plays that take years to come online, and with the rapid increase in demand, there's a lot of money that is yet to be made and potential in those industries. Medical is just again demographically, we've got more people consuming more and more. We've got R&D, the new research that's coming out that is providing even more products to the marketplace for the aging population. So yeah, there's a lot of money to be made there, but those would be the reason why those are still hot.
Yeah, and with you said biotech, consumables, services, these are sort of tariff insulated industrials. That was the last but not least. Quick thought there?
Yeah, so I mean, to the extent that you have, and this is why I say it's a little uneven or lumpy within even every industry. I don't want to overstate that any particular industry is flat or down, because you can have an electronics manufacturer that sources from primarily U.S. Goods. So they're using U.S. steel, or they're using U.S. rubber, U.S. Supply chain. They're not going to have the same impact, obviously, as those that are getting that from China or India or Canada for steel. All of those places. That's where you're seeing the major impact and why it's uneven even within an industry.
All right, Brian Megan, partner at Kupfer PLLC. Thank you so much for being with us. Thanks. Still ahead, our panel is ready to talk about some of the action from Taiwan Semi. The earnings are due. We get to cover some of the banks and more. We'll be right back. This is the watch list. The Dow's up 168 and the S&P's at 62.59. We'll be right back.
What's this here for?
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah,
Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning.
All with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com.
Always clean, Miss Jim.
And start learning today.
Hello? You know how annoying this is? Your mother ought to be ashamed of you. I've got 12 more minutes. Oh, I got less than that. I gotta hurry up. We got a business supply.
All things tech. Jay Woods, Chief Global Strategist, Freedom Capital Markets, is with me. Olivier Blanchard, Research Director at the Futurum Group, is with me. Let's start off with Taiwan Semi. Olivier, some of your thoughts on Taiwan Semi.
You know, I expect another super strong quarter. We're looking at probably 38% year-over-year growth, about like 15% quarter-over-quarter growth. The nets are super solid. I think everything is basically just the continuation of what we've already seen with TSMC being a leader in the space. A lot of demand from AI. Big clients are doing really well, primarily NVIDIA, also some pull from Apple and some other big names. So essentially everything is good in terms of the technology, the demand drivers for all of TSMC's products.
So today it's at a new high, 238. Do you think it still has room to move to the upside, Olivier, quickly?
Oh, that's rent.
I think so. Yeah. I think we're still good. The two downsides of this. One is still the uncertainty about the tariffs. So we don't know exactly what the impact will be, and I have some ideas if we want to circle back on that in a minute. And the other one is just how strong Taiwanese dollar is compared to the U.S. dollar. So we might see just a little bit of pressure on the margins there, as much as 3 percentage points on the margins, just because of the higher value of the Taiwan dollar. So that has nothing to do with demand, has nothing to do with the outlook, but it is a factor.
All right, looking at Taiwan Semi, which really has an incredible bounce back. I mean, it's up 50% or more off the lows.
76%.
I'll say 3 months it says 52%, but off those lows it's had an incredible run. New highs at 238. Where do you think this could be headed? What will be the catalyst to drive it higher?
Well, I think Olivia nailed what the catalyst would be, but then let's look at it from a trading perspective. I just went back and looked. How's it reacted after earnings? 10 of the last 11 quarters, the stock has been crushing it. We know that. it's traded lower. It's been the least volatile stock in a very volatile sector after earnings. In fact, the biggest move of those 10 down moves was 4.25%. The average move is down 1.4%. The one time it was up less than 0.5%. So we think that the price already is into it, and we've seen that in a lot of stocks. And when we transition to financials, I'll stress that fact. The price action may be in it, so this has to be a blowout quarter, blowout guide for this to really trade higher. So what I look at is an opportunity on a pullback. Where would I want to buy the stock? And this stock broke out to all-time highs ahead of tomorrow's numbers. Right. So I would look at the 220 to 225 level. If it pulls back,
you could buy
to buy this stock, because the long-term story has not changed. And yes, there are concerns. Let's see what the guide is. The CapEx spending continues to be, but for all intents and purposes, they hit on all cylinders. There are concerns, obviously, with the tariffs, with the dollar, but you know, as far as what people are spending and how they're using them, I think this is a stock over the long term you want to be in. But earnings, not going to really make noise based on what we've seen in the past.
So it could provide an opportunity. You could trade on earnings and actually buy it on a dip, because you said it often dips on the earnings. Let's get to the financials. I mean, what stood out to you, Jay, on the financials thus far? We've already had at least 6 names report.
Financials crushing it. JP Morgan crushing it on all metrics. Their investment banking, they were expecting a 14% decrease in earnings. They got a 7% gain. They announced a buyback. So this is after the stress test, and now they increased the dividend as well. So I think it's smooth sailing for the banks, but like Taiwan Semi, these banks have gone on a tremendous run going into earnings. For them to go much higher, Citi, the one exception, although it pulled back today, it was going to take a ridiculous beat and guide. Goldman, best quarter of trading in their history. That's a long history. To me, everything is pointing to nice trajectory up, but the stocks are a little tired. So what we do is we look for opportunities to pull back. Goldman,
stocks are a little tired, he says.
Will it exhaust or will it hold? I think it will hold and give investors an opportunity to buy the stock. But we've had a tremendous run. What we do is digest gains. The news
done
up the run, and now we see
beat it by 7 minutes.
Will be, and I think that will be M&A activity. I think that will be IPO activity. So the investment banking side should ramp up. So to me, great results. You know, the one exception, Wells Fargo, Bank of America, but overall, I think the largest 3 banks, the Morgans, the Goldman, the JP Morgans, are set to do great things going into the end of the year.
Olivier, I don't know if you had any thoughts on the banks, but I also wanted to ask you about Qualcomm. That was a name that we've talked about so many times. You thought AI and Qualcomm had great sort of linear path.
What did I do? Turn away?
Any thoughts on the financials, and then tell me about your thoughts on Qualcomm.
Yeah, still good. I mean, the main thing that we need to focus on is how Qualcomm's diversification strategy is sort of like super well timed. So they got into automotive a few years ago, and people were a little bit skeptical about it, and they've really scaled that super well. They're doing that with IoT. I think that there's going to be a huge push in the industrial IoT or the commercial IoT with AI on the edge for smart cameras, drones, robotics, all sorts of things that are really important to sort of like industry 3.0 in the age of AI. And so one of the things that I'm looking at very carefully with Qualcomm is they're essentially slowly losing Apple's business, right? They're no longer going to be their primary provider of modems for the iPhones, for instance, as Apple creates their own. And so you're seeing these sort of gains in one area with sort of like shrinking in other areas. So Qualcomm overall is still super well poised with really good AI chips, really good AI IP at extremely low power, which is really good for edge applications. So anything that's phones, PCs, all of the AI at the edge, that's Qualcomm's play. But at the same time, we are going to see some segments of Qualcomm's traditional business sort of fade away in the next few years. So it's a little bit of a give and take, but it's still on the upside.
Yeah, I mean, as far as the fundamentals and the story, there are drivers to help Qualcomm to continue to go higher. Losing some Apple businesses, you said, because they're going to be making some of their own, not necessarily particularly great. But this stock, which there were a lot of high hopes for this stock, you know what? It's the pits. I mean, really, I'll just say 1 year down 25%. And people are really on board with this name. Do you buy it now?
Yeah, I think Qualcomm has always underperformed with investors, and it's always been a little bit puzzling. It's a little bit like when AMD, one of their other competitors in certain areas, reports really good earnings. They have really good performance. We're starting to see the parity happen between training and inference, which is really a big play between NVIDIA and AMD. We're seeing some of the same things with Qualcomm. They report really good earnings. They have really good performance. The on-ramps for new categories of IP growth are there, but the investors don't necessarily buy it. And it might be a measure of how Qualcomm's business is a little bit too complicated, and they're not necessarily always super good at articulating the full picture of what they're doing and how that translates into revenue. Yeah.
I disagree with you, you idiot.
Great to see you both, Olivier. I thank you for being with us. And
Well,
Jay, since
I was thinking of the
still
wrong
have
one.
Another quick second. A final quick thought on all the stocks you're following, particularly tech. People love tech.
Yeah, they do.
What are some of your favorite names these days?
Favorite names? Well, a lot of them have gone on tremendous runs, but I still like the software stocks. I still like cyber stocks.
QCOM's not the one I was thinking of.
Taking a bit of a break.
I was thinking of AVGO.
Is going to be the theme down here. We saw it intraday today when the president came out and said he was going to replace Jerome Powell. That got a lot of people on edge. He's looking for that loophole. Didn't happen. People need to remember that it's a 12-member panel that votes on Fed rate cuts or Fed rate hikes for that matter. So even if he was able to get rid of Powell and replace him, the independence is the most important thing. So that was what caught our eyes here and ears here. But I still love the big names, the Broadcoms, the NVIDIAs in tech. Oracle, oh my God, these things have had major moves, but to me, they look fantastic. So I look for that, and I'm hoping that we see some IPO activity pick up in the next quarter. I'm hearing good things.
Jay Woods, Olivier Blanchard, thank you both for being with us. Good to see you, friends. I'm Nicole Petalides, live at the New York Stock Exchange every single day, 9 a.m. and 2 p.m. here on Schwab Network. You can get the app in the Apple App Store. That's free. Keep it right here. Market on Close is next.
Headline: TSMC earnings are coming. AI chips should drive growth despite tariff fears. I don't have no fear on tariffs. I had fear when we had 40% inflation, you ding-bongs. When we had inflation. You didn't have no fear back then. I mean, this is the weirdest times right now. When I first started trading, if the market had like 40% inflation at the time, it would probably tank. It is now power hour, so give it a little bit more time. God, look at that. Jesus. $5.60. $5.60. Do you know how much money I left on the table? $6.50. Oh my. What's 400 times 6? Times 6 is $2,400. I left $2,400 on the table. 670, 690. Just keep going. Fuck it. 750. I sold these at 255 because I wanted to get this done. So that's 500 times 6. That's $3,000. I'd have had a $10,000 day today. Rob, did you see that? Because I wanted to do my checkbook. And I didn't want to be distracted. Ugh. Okay. Richard. Randy. Oh well. 3 black whores. Where'd everybody go? We only got 6 in here. You keep having problem with sound? Hello? Does everybody else hear me okay? Well, your internet, yeah. Okay, well, does it have 13 RITM? I was looking at that yesterday. I was quite impressed. If we break 1202, we got 1220 on the yearly, so it has to break a double top. I'm going to say it has to break 1202. Choose. Well, they got a new bill out, fentanyl bill. I hope they put some kind of rehab. What is this? Oh, is this for the crypto thing?
As we saw CPI, come out yesterday, we saw the prices of appliances, furniture.
And good reporter, and you've done a fantastic job. So now you'll be able to put all that experience to work. No more criticizing or anything else. You got to do it yourself, and you're going to do a great job. As reporters do on occasion. Thank you very much. Thanks, sir. Good luck. Governors Glenn Youngkin, Jeff Landry, and Kelly Armstrong, where are you? Stand up. Great. Hi, fellas. Hi. How are you? And great friends of ours, Senators Chuck Grassley. Chuck, fantastic. You look fantastic. Looks like he's 44 years old. You look great, Chuck. We're proud of you. Jim Banks. Jim. Thank you, Jim. Good job. Good job. Ron Johnson. Ron, good. We've got that bill passed, Ron. We got it passed. Thank you for all your help, too. Ashley Moody. Ashley, thank you very much. Jim Risch. Thank you, Jim. And you're doing a great job with the committees, and you're getting them through, the people that we need, right? I appreciate it, Jim, very much. I urge him, Jim, you got to get going. No, Jim's been fantastic. Bill Cassidy. Thank you, Bill, very much. Thank you very much. And Roger Marshall. Roger, thank you. And by the way, I have to say, John Thune called. He said, can you get my senators back? We're taking a vote, so we're going to go as quickly as you can. And if you feel like the urge, just get out. And we got to get all these bills signed, a lot of them related to what we're doing. So don't have the urge to stay. I won't be insulted if you walk out. But he just called. He said, could you get him back as soon as possible? Representatives Morgan Griffin, Brett Guthrie, Andy Biggs, Andy Barr, Buddy Carter, Addison McDowell, Troy Balderson. Hi, Troy. Randy Feenstra. Thank you, Randy. Scott Franklin, Tony Gonzalez, John Joyce, Dan Muser, Mike Carey, Scott Fitzgerald, Diana Harshbarger, Bob Latta. That's a good group of people. Hal Rogers, Mike Rowley, and Nick Langworthy. Thank you. We've got a lot of great people. That's a lot of political talent we have. A lot of political talent. Thank you very much. Thanks as well to State Attorneys General Brenna Bird. Thank you, Brenna, wherever you may be, because Brenna, she was the first one in that state to endorse Trump. Thank you very much. I don't forget those things, even though this is non-political today, okay? Alan Wilson, Chris Carr, and Marty Jackley. Thank you all very much. Thank you. So 6 months ago, we came into office and inherited the worst drug crisis in American history by far. They did nothing. For 4 long years, Joe Biden surrendered our borders to the most evil and vicious traffickers, networks, and everything else on the planet Earth, allowing foreign drug cartels to carve out a massive footprint on American soil. We were doing nothing. This open borders nightmare flooded our country with fentanyl and with people that shouldn't be here, some of the worst people on earth. And illicit drugs decimated American communities and left us with the largest law enforcement challenge in our country's history, and hopefully will always be the largest. I can't imagine anything being worse. They allowed millions and millions of criminals into our country, 11,888 murderers, 50% of whom murdered more than one person. On day one of the Trump administration, we declared an all-out war on the dealers, smugglers, traffickers, and cartels. Within moments of taking office, I deployed the U.S. military to our border and unleashed the patriots of ICE and Border Patrol to defend our country from an invasion. This was an invasion. This wasn't people coming in. This was an invasion of our country, allowed to happen by people either that didn't care or were just stupid people. Stupid people. I also designated the Mexican drug cartels as foreign terrorist organizations. And within a few short weeks, believe it or not, if you remember, now we've even surpassed that, but we achieved the most secure border in U.S. history. And last month, we had the lowest number of illegal border crossings ever recorded. We had in June, the number was actually 0. Now, even I don't believe that, but we're going to take it. How can you go from hundreds of thousands to 0? But that's what they say. And these are very liberal people that do the recording, so I think we're going to have to take it. But the number was 0 in June. Can't get much better than that, right? On day one, I signed executive orders to create new Homeland Security task forces, marshaling the full power of federal law enforcement to eradicate transnational criminal networks and traffickers from our soil. We wanted them out. 2 weeks ago, we secured the resources necessary to achieve that mission when I signed the One Big Beautiful Bill into law. And I want to thank you all. I want to thank you. I want to thank you all. You did a great job. And you could go point after point how good it is. You know, they have just a hit against that. It's one of the biggest tax cuts in history. Really the biggest everything in history. We have things in terms of security, in terms of securing our country, taking care of our police officers, law enforcement, our ICE and Border Patrol, patriots. I call them patriots because that's what they are. These are strong people, tough people that love our country. If they weren't tough, they wouldn't survive. But we do more for the country in that bill, I think, than just about any bill that's been passed. And we're going to have to start speaking about it because the Democrats use it. They say it represents death. How effective is that, right? That's pretty good. It represents that. That's all they have. They only have lies. It's the only thing they have. They don't have policy. They can't get people elected. They don't have good candidates. They don't have anything, but they do have two things. They stick together. They stick together like glue. And they always come up with a good little tagline. This tagline is death. And the death is them. We're the ones that are giving life. We're giving life with that bill. And there's so many good things, whether it's no tax on tips. Think of that. No tax on Social Security. No tax on overtime. If you buy a car, you want to buy a car, you get a deduction of interest on your mortgage. And think of that. Things that were never even a possibility. And then so much else in terms of health, in terms of providing care. It's really just a fantastic bill. And it's about time that we're going to start, and we'll start talking about it. But once we do, I think we're going to have the greatest midterm that you've ever seen, because this thing really is
not until you
amazing.
get the list out, you dog.
In particular for
I want the list out.
for getting it done. It also makes the largest investment in the U.S. Coast Guard since World War II, ensuring that we have assets and all of the assets needed to vanquish the cartels from the waterways of North America. We're building a lot of Coast Guard ships that go very speedily along the water, and they're very lethal. They're very powerful, and that's what we need, because a lot of it comes in as we block up the border. They start using the water. That's a good run. I could use that. They block up the border. We start using the water. And that's what happens. They start using the water. Who would think? They even actually developed small submarines. You saw that, right? Small submarines to get the drugs in. And it's incredible. But we've stopped them. I've also directed the Department of Justice to seek maximum sentences for fentanyl traffickers. We're going to absolutely do the maximum. Since my inauguration, the DOJ has seized over 4,500 pounds of fentanyl, which is a record, including with the enormous Sinaloa cartel bust in May, one of the toughest cartels out there, the largest fentanyl bust ever in United States history. And now with the signing of the HALT Fentanyl Act, in just a few moments, we are delivering another defeat for the savage drug smugglers and criminals and the cartels who have a tremendous amount to say about Mexico. If you want to be nice about it, I'm trying to be nice about it. They have very strong controls over Mexico. We have to do something about that. Can't let that happen. The Mexican authorities are petrified. They're petrified to show up at their office. They're petrified to go to work because the cartels have a tremendous grip on Mexico and the politicians and the people that get elected. For years, the monsters who manufacture illicit fentanyl have sought to skirt legal restrictions by making minor variations of the chemical compound, and in the process, they've developed even more toxic versions of the drug. One common variant known as carfentanil it's becoming more and more common. It's 100 times more potent than the original version of fentanyl. Can you imagine? Look at what you have to suffer with the original. I mean, this is 100 times more potent, and it's happening stronger, more and more dangerous. And as you know, and I have a very good relationship with President Xi of China, but I imposed a 20% tariff on China because of the fentanyl, and I call it a penalty. It's a penalty because China delivers much of the fentanyl. Some people would say all of it. They deliver it into Mexico and even into our own country. We have a 20%, so they pay billions of dollars in damages for what they've done. And I think we're going to work it out so that China is going to end up going from that to giving the death penalty to the people that create this fentanyl and send it into our country, whether it's through other countries or directly. I believe that we would have had that deal a long time ago. I shook hands with them, and then we had a rigged election, and we had somebody else come in, and they didn't know anything about a deal for the death penalty. The death penalty is going to be imposed on people from China that make fentanyl and send it into our country. I believe that's going to happen soon. But as of today, all fentanyl-related substances will be banned forever, and those who traffic in these deadly poisons will be put behind bars for a very long period of time. We're joined today by just a few of the millions of families ravaged by this scourge, including Greg Swan from Michigan, who carries with him the heartbreaking loss of his beautiful son, Drew. Drew became addicted to opioids after being prescribed painkillers following a sports injury. Got injured, and this is happening so much. Got injured in sports and ends up, you leave the hospital a week later and you're addicted. But he fought through it and got himself clean. Then one day, Drew took a pill laced with fentanyl. He took it just casually. He thought it would be okay. Took a chance and he thought it'd be okay, and it didn't work out. And he tragically lost his life. And Greg, I'd like you to come forward, and if you could just say a few words about your wonderful, wonderful son, please.
Honor of my life.
Thank you very much.
Thank you. Thank you so much, Mr. President. I will be brief. It's the honor of my life to be here, and Drew was the happiest day of my life was when he was born, and he always called me his hero to the day he died. And his passing ruined, I thought, my life, and every parent back here that I meet and in the audience, some of my friends, their life is gutted when they lose a kid. There's despair and there's hopelessness. But we've been able to find some repose in going out and advocating, and we want to hit every school in America. There's 26,727 of them. We want to go into every one. The kids are silent when they hear we lost somebody to this, and we tell our story, and they leave unequivocally ready to run away from fentanyl. I would just like to say thank you, Mr. President, for stopping the border crossings. Full stop, mic drop. I'll step back but it was amazing what you did. We were being gaslit, and you came and lit a fire to that story, and we're a lot safer for it. Thank you so much. Thank you. Yeah, thank you so much. Thank you.
That's tough stuff. We're also grateful to be joined by California native Ann Fundner, who lost her beautiful eldest son, Weston, to fentanyl when he was just 15 years old, exactly 1 year ago today. Ann delivered a moving tribute to Weston at the Republican National Convention. People that saw it have not forgotten it. And Ann, I'd like you to please come up and say a few words about your wonderful boy. Thank you.
Good afternoon, Mr. President and distinguished guests. My name is Ann Fundner. Thank you. And I'm an angel parent. 1 year ago today, on July 16th, I stood in front of America and told the story of my son Weston at the RNC. And about how he was a beautiful, loving, had a wonderful life. We did everything right. But one pill, one mistake, given by a friend under peer pressure, took his life. In the last 4 years, fentanyl became the #1 killer of Americans ages 15 to 48. And children under 14 are the fastest growing demographic. President Trump, for 4 years, we felt ignored. But you've changed that, and we appreciate that so much. You've closed the borders, sanctioned cartels, imposed tariffs, closed shipping loopholes. Most people don't know about that. That was a big one. Dealt with countries where it's coming from. You mobilized Treasury, Justice Department, Homeland Security, lawmakers, legislators, and today the signing of the Halt Fentanyl Act, bipartisan and overwhelmingly supported by everybody, making fentanyl a Schedule I drug to strengthen the criminalization and prosecution of people who peddle this. It is a lifeline for families across America and keeping our families safe. And that's all you always want, to keep America safe. And thank you so much. Thank you for keeping America safe and for our children. And this is what we voted for. Mr. President, God bless you. God bless our angel families who are all here with us today, and all of you sitting up here with us. And God bless America. Thank you so much. You can have that. Would you like that? I would love to give that to you.
Thank you very much. It's just crazy that we have to be doing this. It's so sad. It should be so unnecessary that we stand here for years and years doing the same thing over and over. It's terrible. A friend of mine, a longtime friend of mine, is Jackie Siegel, and her beautiful children, her husband David just passed away. David Siegel was a great developer, great developer, great guy, a friend of mine. But her children, Jordan, Jacqueline, and Drew, from Florida, Jackie lost her beautiful daughter Victoria to drugs when Victoria was just 18 years old, a beautiful person. And this April, Jackie lost her sister Jessica to fentanyl. In her daughter's honor, Jackie founded Victoria's Voice. And I'd like to ask Jackie to come up and say a few words about her daughter, her husband, her family. She's comes from a great family, and they've been fighting this scourge for a long time. Thank you very much, Jackie.
Mr. President, it's an honor to be here today on behalf of our family, my late husband, and all of the other affected families for this important signing on this bipartisan issue. 10 years ago, when our daughter, 18 years old, passed Victoria. She was 18. She passed away of a drug overdose. We formed the Victoria's Voice Foundation, and the Trump administration was very helpful in passing the CARA Act, which saved many lives back then, bringing out the Narcan. And we're so honored. Well, actually, after when my husband passed away, thank you for the phone call and your love and support. Our family loves you, Mr. President. That day, when my sister found out of my husband's passing, she did a line of cocaine that she thought was cocaine, and it was fentanyl. So I lost both of them in the same day, and it's been a very rough time. But it's turned me into more of a fighter to carry on my husband's legacy and the other families' legacies of saving lives. And so I'm turning my pain into passion. And also, on top of this, with the signing of this important the act that you're doing, we are joining, Victoria's Voice is joining with Founding Fathers, and we're going to start the Angel Army, so we're even growing even more under this Trump administration. We're going to spend the rest of our lives doing this. Thank you, Mr. President. Thank you.
That army will be very effective, knowing Jackie. So thank you very much, Jackie. Everyone knows someone touched by the incredible crisis that we've all been watching all over the world. They're watching, and other countries have the problem. But I don't think there are too many that have it more seriously than us. They rip us so badly, the cartels and all of the others, because we're sort of a rich country, and that's where the money is. So it happens. People say, why is it so much? Because we have money, we're richer than other countries, so they come here more. They take the money like taking candy from a baby. So today, on behalf of all Americans who have lost a loved one to opioids, we renew our vow to liberate America from this horrible plague, and I hope you're going to do a fantastic job. You have no idea how important you are. You're like maybe the most important job just about in government. There's nothing more important than what you do, so I wish you a lot of luck, and we'll be there to help you all the way along, okay? Once again, I want to thank Congress for passing this important bill and for all the work you've done over the last 2 weeks, all of you. What a job you've all done. It was the congressmen and women, and the Senate has been unbelievable. And I'd like to ask, if you want, stand right up here while I sign the bill, and then we're going to get you right back so you can keep passing other bills and make America great again, right? Okay, thank you very much. It's great to have you.
Amen to that. That's been one of my biggest pet peeves in the past 4 years, is them open borders like that. I mean, they could have had open borders, but they should have vented them people. You know, they didn't vent one. Come one, come all. But, you know, I remember when was it? Crack started coming in, changing from cocaine. And that was bad. That era. And I got a nephew that messed his life up because of it. But so we're thinking about you people that have suffered a lost one from fentanyl.
coming in below expectations. So we're seeing the short end of the curve rally today more significantly in the back end of the curve, moving that 2-year yield down about 7 or 8 basis points. So the 30-year still holding up though, still holding above 5%. So really didn't have too much of an impact there. That perception is that that's going to have an impact on mortgages, and so keeping a very close eye on that 5% yield in the 30. But the short end of the curve reacting as you would expect based on the inflation data this morning.
And Dan, we had a guest on the show earlier who said that he felt that the firing of Jerome Powell would actually be received positively by the markets. Do you see a way in which that would happen?
Yes.
I'm at this point, I think we're all a little bit, shell-shocked by some of the reaction the market's having to some of these things. Now, even particularly this morning, the fact that it discounted that potential so quickly is...
That was... I totally agree 100%. If the fat cats like this Powell guy, I don't. I think he's been behind the curve. He held interest rates too low for a long period of time. And now they're too high for a long period of time. The shock and awe didn't work. The market doesn't care, but it's the people on the street that want to buy a new house, that want to that have credit card debt, that are getting slaughtered right now. That's all. I care about the poor and the middle class. I don't care about the 1%.
Outlook from China, but I think we've been holding in this very tight range. Is that range bound tightness because we're waiting for that potential announcement with Russia and what that might look like?
I think so, and I also think it's just the balancing of supply and demand, from a global perspective, but also not that, but also here in the U.S. I mean, I don't know. There's been hints of the refilling of the SVR, but that hasn't necessarily been concrete. We are seeing production coming offline. The Baker Hughes rig count continues to move lower, so there is concerns that demand is not going to keep up with the supply that's in the system right now. I think that's counterbalancing some of these moves based on some of the geopolitical tensions. But that's something to keep an eye on. We are seeing production continue to get reined in here in the U.S., and so I think we did see a larger than expected draw this cycle, this week, and keep an eye on that Baker Hughes rig count on Friday. We continue to see that trending lower. I believe it's been down 11 weeks in a row, so something to keep an eye on.
And if that trend does continue, where do you see prices going for oil?
Well, if you see significant supply disruption somewhere else in the world, then higher. Now, if we see China come back online, if we see some economic activity and some of the concerns about shipping come out of the market a little bit or counterbalance, that would potentially lift the price of crude as well. But right now, based on some of the projections and the fact that we are holding this range, even though we're seeing production and supply, at least in the
get ready.
Offline, I think is an is that the
what time is it?
Well balanced.
Well, Dan, we appreciate it. Thanks for being with us.
I'm going to wait. I want to swing this, but I'm going to wait.
Financial. And coming up, we'll close out our market session, get the big picture from our team at Charles Schwab. Stay with us.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
We just triggered my alert. I'm kind of want to trade this, but I'm going to wait until tomorrow.
Headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, morning movers only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Market on Close. We have just a few minutes left in the trading day, so that means it's time for the big picture. We'll welcome in our team from Charles Schwab. Joining us today, Nathan Peterson, the Director of Derivatives Analysis at the Schwab Center for Financial Research. You know, Nate, I'd love to just start with your thoughts on the choppy session that we had today.
Love it.
Yeah.
Loved it.
Certainly had some intraday volatility with the scare around Powell. You know, Marley, this is such a resilient market. There's such a bid underneath this market. And, you know, if you look at the fundamental backdrop, you know, so far so good. You know, we've got 37 out of the 500 S&P companies that have reported. The beat rate is, you know, 86% on the EPS side, 64% on the revenue side. I know it's early, but the growth rate, 4% on revenue, 9% on EPS. You know, so far so good. The financials are a nice economic barometer. Everything looked good from those reports, and we did get a little bit of sell on the news, but nothing dramatic. And, you know, Marley, I guess what's surprising to me is that, you know, the market really it's like it does not want to bite on any of these tariffs until it actually shows up in the hard data. And I just think there's the potential for a difference from, you know, going from 10% to 20 to 40%, excuse me, in addition to 50% on copper. If all that stays in place, you know, I would think that is going to be impacting somebody's pocketbook somewhere.
SPX.
10% might be manageable, and maybe that cost gets spread out and it doesn't get translated into inflation. But maybe if you get up to the 20 to 40%, then it does so. So what's the risk to the market? Because we've got this, you know, investment binge that's going on in this technological revolution that's going on right now. We've got, you know, just a number of growth drivers that the market is really honed in on and is really excited about, and understandably so. But the two things, I guess, that I would watch out for is that, you know, let's see where tariffs land after we get past August 1st. Maybe we get another delay. But it feels to me like President Trump is able to kind of float out some of these rates and kind of see, well, let's see what happens with inflation. Let's see if the market reacts. And the market isn't reacting as it did back in April. When it did react violently like it did, we got basically the Trump put came into place and said, okay, 90-day pause. Sorry about that. This time, though, it just seems like he's a little emboldened, and I think he's looking for that line, it almost feels like, in terms of how much tariff revenue can I bring in, and what will the economic impact be? We'll see what's going to happen there. And then the other thing, of course, would be long-term yields. We are above that 5% level, just barely, 5.01% on the 30-year. Cycle high is 5.18%. If we make a new cycle high, I think that also would be, at least enough of a reason to get some kind of like a 3 to 5% correction.
It's certainly a compelling argument that you just made there, Nate. We are sort of demonstrating the reaction, right? We've seen the Liberation Day sell-off. We've seen the sort of desensitized reactions we've been seeing in more recent weeks. And I think because it's just, we don't have any certainty, so it's just everything just keeps getting pushed down the road and everyone's waiting for that hard data, but we don't know when that's coming. We did get some hard data this week with CPI and PPI. CPI did indicate some inflationary measures, but not necessarily passed down to the consumer. But PPI was, flat, no change from May. What are your takeaways from the inflation data as it came in today, and also as it pertains to the Fed moving forward for the rest of the year?
Relatively, sticky in the sense of being above the Fed's target. I mean, it remains there. So, the Fed is looking for, progress down, trend towards its target. The Fed is concerned about the potential impact from tariffs. And then, with the news out today that, Trump, he said he's not going to fire Powell, but just that threat, likely makes it, even tougher for Chairman Powell to consider cutting rates. And, my question that I think about is, well, does that matter to the economy? It's going to matter if economic growth begins to, decelerate. I think right now we've got, 2.6% on the Atlanta Fed GDP nowcast. Earnings growth is, looking, it's come down some, but so far we're tracking pretty well. And the forecast is for double-digit earning growth next year. And I think, Marley, it's all going to come down to whether these higher tariff rates actually translate to the bottom line. And if so, the market is not priced for that right now. So on the inflation front, on the Fed front, I think we penciled in basically 1.8, 25 basis point cuts. But we're just going to have to still be in this patient Fed mode. I feel like I don't think anybody's expecting anything from the Fed later this month.
Yeah, I think that's pretty much been priced out at this point. The percentage so low, next month now looking like September, now looking like a coin flip. As far as the technicals and technical trends that you're watching, what's the overall sentiment? What are you seeing?
Sure. So, over the past week or so, we've gotten these signals that basically momentum is waning a bit, which is to guess, okay, we're probably
no, it's not
some consolidation. We need to digest some of these gains. So we did get up to a 75, 76 RSI on the S&P.
We're just at a real high level. You could say that. You could say overbought. You can bite your tongue. At least you're not CNBC.
September, towards the end of July here, it's not great seasonality for the market. So we
AMD just keeps going.
Situation where we get some kind of a I don't want to call it a correction, which would be a textbook 10%, but maybe somewhere in a 2 to 6% range. That wouldn't be unusual. Stocks go up and down, so I think we want to keep that in mind. There's nothing alarming on the technicals. We're still in this uptrend. I guess if you're bullish, you'd rather consolidate sideways than down. That kind of speaks to the underlying strength. And we didn't really, although the rally was really impressive in the S&P 500, it's not like we went hyperbolic and did some kind of exhaustion move where we had some big reversal in the market. We've just been grinding higher. So that kind of price action is characteristic of a bull market, and climbing the wall of worry is also another characteristic of a bull market. So the technicals are bullish, but let's respect seasonality, and let's also respect how far we've come, understanding that we could get a 2 to 5% type of correction over a week or two. And that would just be mean reversion, par for the course. It doesn't even have to be catalyst driven.
Great insight. We really appreciate it. Thank you for being with us this afternoon. That's Nathan Peterson from the Schwab Center for Financial Research. And coming up, the bells are about to ring to close out today's session. We'll bring in our closers panel to break down the action. We'll also take a look at United Airlines earnings, which are due to come out just after the bell. Market on close. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights. I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me. And my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college education. The two grandchildren planning for their college educations. Someday it'll be their turn.
Welcome back. The closing bells just rung. You heard them there. We finished the day in the green. S&P closing at 62.63.64. That's up 0.3%. The Nasdaq up 0.1% at 22,907.97. The Dow up 0.5% on the day, closing at 44,254.78. And the Russell up 1% on the day. That's our winner for the day at 2,227.05. Now I want to bring in our closers panel. Lots to get to today. That wild day, and you.
All righty. Well, I scalped circle there for a couple of times at the end of the day. It came back and hit my support level right here, 230.96, 231. And I scalped it twice. So, not a real bad day. I mean, I left $3,000 on the table on one trade, and I left $600 on another one. So AMD is really on fire. They're really. I liked AMD back then when they kept pulling it back. I was wondering, why are they pulling this back so much? It don't make sense. Look at that sell-off we had on AMD. It hit all the way up here to 170, 180. And then it pulled back to 76 cents. And I'm going, what the heck? I mean, that didn't make any sense at all to me. Tariffs, tariffs, tariffs. Well, I'm going to get out of here. Hope we all had a good day today. Got stuck in one trade today. Oh, yesterday's loss was 7K. God damn. Earnings beat, revenue miss. That means it'll pull back. This I'm shocked. So I guess that's good. I'm going to get on out of here. Hope everybody had a good day. And we'll catch you tomorrow.